right, good morning everyone. Welcome to another Trader Summit. We are very excited today. We have a great lineup of speakers for you today that we'll go over in just a moment. But let me introduce myself. My name is Kelly Clement. I will be your YouTube host today, so I'll be back here answering all the YouTube questions, passing them on to the presenters, and making sure that everything is hopefully running smoothly all day long. So we're looking good so far. We're here in beautiful Salt Lake City, where we've just turned very cold for the first time today. So let us know as you come in the room who you are, where you're coming in from. And as you do that, I'm just going to go check everything, make sure everything's running okay, and I'll be right back with you.
Good morning, Jeff.
Good morning, Steve. How are you?
Good. Good.
Okay, well, everything is looking good on my side so far. It looks like everything's just about ready to get started here in about 5 minutes. Now, if you are new to the Trader Summit and you're not quite sure what they are, one of the great things you can do here is go to metastock.com. That's www.metastock.com. You can click on the homepage banner. Actually, let me bring it up for you here. So if we go to metastock.com, you'll see right on that homepage banner there that you have the option to click on Monday, October 24th, register now for this free mega event. If you just click on that banner right there, what it'll do is it'll take you to the Trader Summit page where it'll show you an overview of all the speakers that are speaking today. And you'll also be able to register for all the free items that are being given by the presenters. There we go. Sorry, it took a second to load there. And you can see here first we have Steve Bigalow as our first presenter of the day. Steve is always great, always very entertaining, and gives a lot of great information on the market and what's going on. So we're excited to have him start. Then we go to Jeff Tompkins, over to Serge, Berger, Silas Peters, Peter Dalal, Jeff Gibby. Oh, skipped a little bit ahead there. Todd Horwitz, and I missed a few there in the middle. Silas Peters, Peter Dalal, Jeff Gibby, John Seville, and Todd Horwitz. So great lineup of speakers today. And then down here at the bottom, you can see our presenters are giving away all these free, awesome bonus items. If you go to that page at metastock.com and click on that banner, it will then take you to this page where you can register for the event and select all these free, awesome gifts that you would like to receive, and you can get a copy of them from the presenters. So you can keep watching here on YouTube, but I recommend go get registered for all these free items so you can take advantage of those as well. Okay, so we're about 2.5 minutes out. Let me go to the presenters, make sure everything's ready on the GoToWebinar side. Again, say hello, make sure to like and subscribe while you're here, and I'll be right back with you. Just checked in with the presenters. Everything looks good over on the GoToWebinar side, which means we are ready to start here in about 45 seconds. So again, everybody, thanks for coming. Glad to have you here today. Make sure to go to metastock.com, click on that homepage banner, register for the event today to make sure you get to take advantage of all the free items that are being given away by all the presenters. So www.metastock.com. Again, say hello. Be sure to be involved today. Ask questions. That's why you're here. You're here to learn. So ask questions during the presentations. The presenters love it. So I'm going to go ahead and get the ball rolling. Have a great day of learning, everybody.
Hey, everybody. My name is Jeff Gibby. I'm going to be kicking this off. Thanks for coming to the Online Trader Summit. You'll see that Steve Bigalow is coming online. If you're watching us on YouTube, this is very important. It helps a great deal, and we do appreciate it. Make sure to hit that like, subscribe to the channel. We're going to have a full day of market experts today that are talking about the markets and giving great ideas. And if you want to see good content like that in the future, subscribe to our channel. We're always doing videos like this. So. In any case, let me go ahead and read our legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and Metastock should have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So do want to say do a quick thank you to our sponsors, CMT and Stocks and Commodities Magazine, for sponsoring today's event. Both of those organizations are great. We're going to be talking a bit more about them as we go today, but we do really appreciate all of the sponsorship. And of course, we're Metastock. We're going to be talking a lot about the Metastock software, how it can help you with scanning and finding the right opportunities in the markets and all that kind of stuff. So in any case, but I want to get straight to the good stuff. Steve Bigalow is a good friend of mine. Good morning, Steve.
Good morning, Jeff. Good morning, everybody.
I can hear you. I'm going to do an introduction for you, if you don't mind.
Go right ahead.
All right,
hope it's real flowery.
Ooh, I brought in just the flower today. So Steve's a good friend of mine. I absolutely, we've been working with Steve for more than a decade. He's developed one of our most popular, actually we helped him develop one of our most popular add-ons, something that's been reviewed really well in Stocks and Commodities Magazine twice. With Steve, I've had the pleasure and the opportunity to travel with him in the before times when people traveled. And I've learned a lot from him. He's a great technician. I love his patterns. I love the work that we've done together. So there you go, Steve. Was that flowery enough?
That was great.
Keep going. All right, let me turn over the presentation to you. Let's get you going. Let's see, make presenter.
Show my screen and show screens. Whoops. Click here. Click screen. Whoop. Hopefully it's this one.
We'll see. I'll let you know. Yep, that's the one.
Okay, great.
Perfect. I'm going to get out of your way. It's all yours right now.
All right. Good morning, everybody. My name's Steve Bigalow. I started using candlestick analysis by accident, a little over 30 years ago. And so they usually like to have me on first because there's one basic element of candlesticks that kind of improves everybody else's trading strategies, is that it's showing you exactly what's going on in investor sentiment right at that time. So no matter what trading style or whoever's trading platform you're using or trading strategy, if you throw candlesticks on your chart, you'll get that much more of an enhanced visual of what's actually going on. Now, I've got my question box up, so if you've got questions as we go along, feel free to ask. But one of the basic factors that I discovered when I first started looking at candlestick signals was that it is just pure common sense put into a graphic depiction. So there's about 50 or 60 signals in the candlestick universe. However, through the years, we've narrowed them down to what we call the 12 major signals. The reason we call them the 12 major signals is when I would go back and kind of analyze charts, I would look for what was happening at the valleys and what was happening at the peaks. And I would see what type of formations or what signals were occurring at those levels, and discovered that the 12 that we have listed here were the ones that occurred 99.9% of the time. So I tell people, all you have to really do is learn the 12 major signals, and you're going to have your full scale analysis of what's going on in investor sentiment. Or another way to put it is tell people don't waste their time trying to learn the other 50 or 60 signals, because they don't occur often enough to use up your mental time and energy trying to learn them. So the visuals of candlesticks are very simple. The doji is one of the most popular reversal signals, and it's basically showing you where the trading has opened and closed right at the same level during the day, or whatever time frame. And that's another aspect of candlestick analysis. The definition of a candlestick signal is that it is the accumulative knowledge of everybody buying and selling during a specific time frame. So they work just as effectively on a 1-minute chart, a 5-minute chart, a 10-minute chart as they do on a daily, weekly, or monthly chart, all depending on what your trading time frame is. And the doji has what we call a very simple doji rule, which makes for extremely powerful trade entry strategies. And that doji rule is the price or the trend will usually move in the direction of how they open after a doji. So it's very simple logic that the Japanese race traders have provided for us, that if we see a doji in the overbought condition, and I use stochastics of 12.33, that the Japanese race traders have a very simple philosophy. If you see a reversal signal in an overbought area, more than likely, you're going to see a reversal. And the doji rule says it's going to move in the direction of how they open after a doji, which means that's time to take profits. And do you reverse that trade? Well, that's where we use the T line. The T line is the 8 exponential moving average. You'll see the charts are very simple, that we use the 50-day moving average. We also use the 200-day moving average, which is the red line, which we'll find on another chart. But the T line has a very strong implication. The T line is the 8 exponential moving average, and it has Fibonacci characteristics, which means if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. Now, this is the most powerful statement of candlestick analysis, which basically says the candlestick signals are the graphic depiction of what's occurring in investor sentiment. And if the T line acts like a natural support and resistance level of human nature, you combine the two and you've got an extremely powerful trend indicator. Now, that trend indicator not only tells you what the trend is, but if you are like me, One time I was the worst investor in the world. I was even a stockbroker for 8 years. But what is the normal reaction of most investors? And I say most investors because that's basically what I would do, is if I had a profit in a trade, my biggest fear was, boy, if I let that profit turn into a loss, I sure would look stupid. I better take profits just because I have profits. Well, the T-line keeps you from doing that. The T-line basically keeps your emotions out of your trading and allows you to see what's actually happening in investor sentiment. So not only does it work on a bullish manner, it works on the bearish manner. Well, should have done this first. If you see a candlestick buy signal close above the T-line, this is a very strong probability. You've got an extremely high probability an uptrend is being confirmed. Conversely, if you see a candlestick sell signal, like a morning star signal, or I'm sorry, an evening star signal, and a close below the T-line, you can stay short until you see a candlestick buy signal and a close above the T-line. As you can see, there are numerous times where you see candlestick buy signals, but they don't close above the T-line. The reason I'm pointing this out is this combination. When I first started learning candlesticks, well, way back in the early 90s, they turned me around. They kept me from being the worst investor in the world to where I was starting to make money. But when I started adding the T-line, not only was I making money, but I was starting to make big, high probability trade setups, making good money. So the same truism is, if you see a candlestick sell signal and a close below the T-line, you've got an extremely high probability that a downtrend is in progress, which makes something like this very easy to identify. That if we see a reversal signal and a close below the T-line, no matter what we think should be happening in that stock, the graphics of candlesticks tell you what's actually happening. You close out the trade because the probabilities are extremely strong. You're now heading in the downward direction. So what we're looking for is those high probability trade setups. So the doji sandwich is one of them. A doji sandwich is nothing more than identifying a bullish candle followed by a doji. Oh, so if that is true, Kraft Heinz on Thursday did a bearish engulfing signal right smack dab at the 50-day moving average. Why is that relevant? Because everybody in the world is watching to see what prices do at major moving averages. The graphics of candlesticks tell you exactly what they're doing. And then on Friday, it did a doji, which makes this a very simple trade. If they open this lower, that's a high probability they're going to trade it lower, and usually with the same magnitude as the candle prior to that doji. Thus, the doji sandwiched in between. And we're looking at the same thing on amps. Now, because I had to do these over the weekend, amps right now is trading lower. Even though the market is trading positive, the candlestick signals are showing you what the strength is of any specific trading entity. So again, you've got the probabilities that if the market is heading up, that your bullish trades are going to work. But even with the bearish trade setups, the signals and patterns are going to give you a lot more indication of what the force is in that specific trading entity. Whoops, blank right there. So knowing what the signals are telling us, like a bullish engulfing signal, right smack dab on a 200-day moving average, a bullish harami gap up through the 50 and through this level, gives us a strong indication that this downtrending wedge type formation is now being broken. That gives you a high probability that a breakout is now going into wave 3. So you consider wave 1, wave 2, now very strong buy signals going into wave 3. Whoops. Is there any questions coming in, Jeff? Maybe I put up the wrong. I've got my questions box up. Is that the right one? Oh, okay. I'll anticipate that it is.
Steve, did you have a question?
No, I have my question box up, but I was making sure I have the right one up, so everybody can ask questions as we go along. I just didn't see
Yes, I don't see any questions in there yet. So
okay.
if you guys hear us, say hello.
All right.
And if you have questions, make sure to ask them. I'll look on YouTube to see if I have any questions too and break in a bit later.
Okay. So what we have available, because the Japanese rice traders have, over the last 400 years, have been able to identify what happens in human nature, or basically investor sentiment. And the reason there are signals and patterns that are recognizable is because human nature works the same way time after time. So we can see when there's high probability pattern expectations ready to break out. So one pattern is the fry pan bottom, because it looks like a fry pan bottom. And you couldn't trade this if you wanted to, because it's just so junky. And this is what we're looking for coming out of that buildup of investor sentiment. So a fry pan bottom is very visually recognizable. You can see it looks like a big fry pan bottom. And then at about where the pattern begins, that's where your breakout occurs. And this is where we're looking to buy. Now, very simple analysis. The Japanese rice traders say you're looking for buy signals when your stochastics are in the oversold area. Your pattern breakouts are usually going to occur when your stochastics are already up in the overbought area. So the simple logic is, if you see a candlestick buy signal in the overbought area, doesn't mean anything. If you see a candlestick sell signal in the oversold area, it doesn't mean anything. We're looking for candlestick buy signals here, but we're looking at pattern breakouts when you're already up in the overbought condition. So this is what we expect. When you see this buildup of investor sentiment and it starts going through the beginning of the pattern, and in this case breaking out through the 50, once again a level that everybody is always watching, this is the expectation. This is where that buildup of investor sentiment now blasts everything to the upside. Now, does this occur like this every time? Absolutely not. But the probabilities of being in a situation like this, or in a price move like this, are tremendously improved when you're coming out of a pattern. How do you create the T line? It's the 8 exponential moving average. You put it on your chart just like you would a 50-day simple moving average. And what time frame you're sharing land? These are all daily charts. However, this could be a 10-minute chart or a 5-minute chart. Candlestick signals work and patterns work on all time frames. So the opposite of the fry pan bottom is what we call the dumpling top. It's a slow rounding top, and what do we expect coming out of the other side? When they start showing a lot of selling pressure, like a gap down, that's where your big price moves occur. So again, I tell people constantly, this is not rocket science. This is just identifying what human nature does. And they've been identified for us by the Japanese rice traders over hundreds of years of analysis. Not only analysis, but the Japanese rice traders that developed the signals and patterns did not become wealthy. They became legendarily wealthy in Japan. They were the financial powerhouse, and they were trading the most basic, boringest commodity in the world, rice. But as long as they could identify what was happening in human nature, their probabilities of being in the right trades at the right time were extremely positive. Another pattern is what we call the J-hook pattern. The prerequisite is that you've got a strong price move. Then it pulls back very indecisively and does a hook. And now we have a simple analysis that if we see this setting up, we could expect wave 3 to be the same magnitude as wave 1. This becomes very effective, especially if you're an options trader or a stock trader, that if we can see this little pullback, and we know this is wave 2, that when it breaks out to the upside, we know that wave 3 is going to be the same magnitude as wave 1, which means a very safe option trade is maybe a spread where you're buying the whatever here and selling these here, just dramatically improving your probabilities of greatly improving your profits in a trade. So where's your entry strategies? Well, you could either start buying like right here. Look what your there's your little doji sandwich. Now I should have expounded on the doji sandwich a little bit better. That the doji sandwich usually shows or implies, not implies, but creates the setup that the probabilities are very strong. There's going to be further follow through. So you could be buying here, identifying a J-hook pattern setting up, or you could be buying right here, confirming that this wave is now breaking out. Wave 1, wave 3 going to be the same. So with the candlestick signals, here's that doji followed by a gap up. That's called your best friend. Now we not only have the 12 major signals that are extremely effective, and the reason I narrow them down to the 12 major signals is usually when I'm doing training sessions to people that are just learning candlesticks, they often ask, well, which ones are the most powerful or the strongest of the candlestick signals? We've already cultivated that for people. You don't have to learn all 50 or 60. And then there's about 8 patterns. The fry pan bottom being one, the J-hook pattern being another. But these are all patterns that consistently produce expected results. And then we go into one more step. We call these the top ranked signals and patterns. And that's a combination of the patterns or signals. So for example, a doji in the oversold condition followed by a gap up is called your best friend. The reason we've named it your best friend is it's got 3 strong elements to it. 1, the direction is going to be extremely calculable. It's going to be an uptrend. 2, the magnitude of that move is going to be extremely strong. And 3, it's even if the market turns against you while this trade is going on, the strength of this move usually will continue to move in that direction, even though the market's going in the opposite direction. So you can see where the J-hook pattern occurred. This is a kicker signal, one of the 12 major signals. Opens here, closes here, a little dark candle. The next day, they gap it up above the previous day's open and take it positive. That told you that the investor sentiment has been kicked in the opposite direction. So this is actually one of your is your strongest individual candlestick reversal signal. So if you've got that strong reversal signal, and notice where it was occurring, right here on the T line, but that is already giving you the indication that if this is more upside after a kicker signal, now you've got wave 1, wave 2, wave 3. And if wave 3 is usually the same magnitude as wave 1, where do you think the next likely target you want to be watching? Right up here at the 200-day moving average. If you see a left-right combo, there's another element of the doji. If you see a doji in a combination signal, like a doji followed by a bullish engulfing signal, We call that your left-right combo. Whoops, I didn't go far enough on the top-ranked signals and patterns. There's about 18 of them.
If you
Now,
see a
that doesn't
left-right
mean
combo,
that when we kind of quantify them, number one being the best friend signal, right behind it is the left-right combo. That doesn't mean those are good and number 18 is bad. It just means those are the best, and number 18 is still a very good reversal signal. But there's a assumption of a left-right combo. It's so strong that you don't have to wait for confirmation the next day. It will usually, with an extremely high degree of probability, move in the opposite direction. Another aspect of candlesticks is if you see a reversal signal telling you there's a change of investor sentiment and they gap it up the next day, that tells you not only did they change investor sentiment, but they want to get back into that trade with great enthusiasm. And that's exactly where you want to be buying, is on a reversal where they're trying to get back in with great enthusiasm with the expectation of the next trend continuing higher. And once again, notice, even if you see some selling, what is the parameter of staying in this trade? They can never close us below the T line. Whoops, and I guess I better add another little caveat to this. You can stay long, and with the caveat that the further away you move from the T line, the higher the probability it's going to come back and test it. So once things get so enthusiastic, and this is also part of the Japanese rice traders' analysis of human nature. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. And I know that for a fact because that's what I used to do before candlesticks came along. Now I can graphically analyze where the panic selling is occurring, the exuberant buying is occurring, with elements like the T line saying if they're trading way up here above the T line, you want to be ready to take profits on the first signs of a sell signal. So with that, again, a very strong reversal signal, gap up. What can we start analyzing? That a J-hook pattern is in progress. The best friend signal, again, whether it's bullish or bearish, this is what we call 2+2 analysis. There was our big sell signal. The bigger the signal, the more compelling there's been a change of investor sentiment. And where do you think everybody is watching to see what it's going to do on this little bounce? They're going to see whether they can get back up through the 50. We can see that there was indecisiveness because of the doji. And what's our doji rule? The price is going to move in the direction of how they open after a doji. If we were long and didn't close here, we definitely closed here because we knew it was going to move in a bearish direction after how they opened after the doji. And the fact that they closed back below the T line uses that simple rule that if you see a candlestick sell signal and a close below the T line, you're now in a downtrend. This is the type of trades we want to get stuck in. There's your best friend signal, doji followed by a gap up, right here at the 200-day moving average, and a close above the T line. What's our trading strategy at that point? Well, we don't want to see it open down here. That would tell us the bulls aren't there. If it opens positive, we know we could be buying because that's confirming our reversal signal. And then how long do we stay? Until you see a close back below the T line. This is what puts you in good, strong trades and keeps you from letting your emotions say, oh man, I've got good profits. Maybe I should take profits just because I have a profit. There's the old saying, or not the old saying, the old sage advice that you'll hear every money manager guru tell you, cut your losses short and let your profits run. I've heard that for 45 years now since I've been investing, but they never tell you how to cut your losses short and let your profits run. Candlestick analysis makes it very simple. And it's not based upon formulas. There's people out there say, well, if you've got a trade on and it pulls back 3%, 5%, 7%, take your profits. The market doesn't care where you bought. All it wants to show you is whether they're still in an uptrend or a downtrend. What is the difference between EMA and EMA, exponential moving average, Wesley, is a function of the simple moving average is using the moving or the trades on a try to say this that you're using the trades from all like 50 days to get that moving average. Whereas exponential is you're putting more weight on the current trades or the trades that have happened most recently. So now, a lot of people ask, well, why don't you use the exponential 50-day moving average and the exponential 200-day moving average if that's showing you what's going on right now? And the answer to that is we're not making our decisions based upon what is happening at the moving averages. We're looking to see what everybody else's decisions are that are using those moving averages. So everybody in the world, every major money manager in the world uses the 50 and the 200, simple moving average. All we're doing is analyzing what their decisions are at those levels. So there's very simple logic to candlestick analysis. Again, where do most people sell? They panic sell at the bottom. What do we look for when things are oversold and everybody's panic selling? We're looking for the buy signal, that best friend signal. The best friend signal and a close above the T line, we can start buying here because it's broken this downtrend. What can we anticipate? We're in an uptrend until we see a sell signal. So what we're looking for is these high probability trade setup confirmations. And one of the confirmations is what we call sector confirmation. This is called a bullish flutter kicker signal. Again, one of the very strong reversal signals. Remember when we described a kicker signal, it's a dark candle, opens here, closes below where it opened. Then the next day they gap it up and go the opposite direction. However, a bullish flutter kicker signal is a good alert where they've gapped it up, but they've done a doji. Not real enthusiastic. However, the alert was they gapped it up. And in this case, look where they gapped it up off of, the 200-day moving average, a level everybody else is watching. Now, what do we know about the doji rule? The price is going to usually move in the direction of how they open after a doji. If this opens positive the next day, we can be buying immediately because we expect a bullish candle. And if that's a bullish candle, that is a bullish flutter kicker. And why do we call it a flutter kicker? Because if you took out this little flutter, you basically have a kicker signal, which is your strongest reversal signal. So we put this into the category of sector confirmation because if ExxonMobil is doing a strong reversal off the 200 in an uptrend, or right now it's doing a J-hook pattern, and look how the J-hook pattern was confirming. On Friday, it did a bullish doji sandwich, and what do we know about the doji sandwich? We can expect more upside, which means we're probably in a J-hook pattern to the upside. So is that good confirmation on its own? Yes. But if you can look at other stocks in the sector, at the same time, WTI doing a morning star signal, right smack dab off the 200-day moving average. And on Friday, it was setting up for a J-hook pattern. Occidental, right here at the same level it bottomed out before, doing kind of a morning star signal. Also currently in a J-hook pattern with a doji sandwich at the breakout level. The implication is wave 3 is about ready to start. So not only do you have the reversal signals or uptrending positions in other stocks in that sector. Basically, that just tells you the big money is buying that sector across the board. We recommended this one again because look at this little signal. There's your bullish flutter kicker signal. There's your doji sandwich at the breakout. There's your confirmation that you're probably in wave 3 to the upside. So every time you look at a candlestick chart, the recommendation we did last week on Nove, there's your doji sandwich right at a level that everybody could see was a breakout level. And again, right down here, you had candlestick reversal signals all at the same time that other stocks in that sector were being bought. That's just a good assumption that they're buying that whole sector across the board. So Fro is in the shipping sector, but you can see there's your Morningstar signal, there's your bullish engulfing, there's your close above the T line. And then where would you take profits if you were buying here? Look how they gapped it up in the overbought condition and did a doji. Again, where do most people buy? They buy enthusiastically at the top. What's the doji rule? If it opened lower the next day, you took profits. But now you can see what's happening, especially right here at the moving averages, the T line and the 50. It's setting up for a J-hook pattern. So we know exactly what to be doing today if it opens positive. We can start buying with a high degree of probability that wave 3 is about ready to start. And what's the prerequisite for a J-hook pattern? A very strong price move. So what's the analysis of human nature? Strong price move, some profit taking, and we have the benefit of seeing whether that profit taking is merely profit taking by the fact that if they can't even close it back below the T line and we start seeing buying, that tells us wave 3 is about ready to start. Cost is another energy stock. Again, there was the reversal, and look what happened. I think we recommended, no, I didn't. We should have recommended this one today because look where your doji sandwich occurred, right here at the breakout level of the 50 and the pattern. And you could also put this in the category of what we call a trend kicker signal, where you're already in a trend. It opens here, closes here. The next day they gap it up and take it the opposite direction. That trend kicker signal is a strong implication. There's a lot of strength, more upside. So all these, let's put it this way. You don't have to be a sophisticated technical analyst. All you have to do is recognize the signals and patterns that the Japanese rice traders have provided for us for hundreds of years as being high probability trade setups. We also understand, using candlestick signals, what should happen after a strong gap up. We're looking for that 45 degree. When we know this is an extremely high probability expectation of how do your best friend gap up breakout, now we can figure out what's the best strategy here. Maybe not buying calls, but maybe buying a call spread. But we can take advantage of not only knowing which direction a price is about to move, but we can also identify what strategy would be the best way to take profits in that move. Oh, so here is a very clear illustration of why the signals are relevant. Look at this move right here in the Dow a few weeks ago. It's in the oversold area and it has a strong bullish trade. However, this is not a signal. Now, why is that relevant, even though it's a strong bullish trade? Because the Japanese rice traders have had 400 years of analyzing what what signals showed there was a change of investor sentiment. And if this had been a relevant signal, they would have told us what it was. And another major benefit of candlestick signals is that the Japanese race traders not only illustrate the signal graphically, but they tell us what the nature or what the investor sentiment was doing that created that signal. So even though you've had a strong reversal, it's not a reversal signal. So what should you assume from that? That you might have a bounce, but you're not going to have as strong a reversal as if you saw what happened since then. There's your bullish left-right combo. So this is not a signal. So the expectation is you better hold off until you see what they're going to do with it. This is a signal. And then as you can see, what has happened ever since that time frame is not only haven't they been able to close below the T line, but they've been using the T line as support. And so today, what were we supposed to be doing? Watching to see whether they could get through the 50 or not, which they have early in the day. I don't know what has happened since then. But so that becomes another indication. If the buyers are still there at a level that everybody's watching that could possibly be a resistance level, now what do we want to watch? We want to make sure they stay above the 50 today to tell us the uptrend remains in progress. Whoops, okay. So this also, knowing what the trend is likely to do, gives you option strategies. I'm pointing this out because we've got an option trading room on our website, candlestickforum.com, that we might have a different option strategy right here than we would right here. Right here, if we can see the sell signals, and notice there's your bearish Harami doji right at the 200-day moving average in the overbought condition. What's the bearish Harami tell us? The buying has stopped. Well, it hasn't confirmed yet. Next day was a doji. It could either be ready to head back up, or what did it tell us? When they opened lower, what's the doji rule? They were going to trade lower, but they're still above the T line. So what's our trading strategy right here? Well, if we were long, we'd probably start taking some profits. When they gap it down through the T line and start trading lower, now what's that telling us? That now we're probably in a downtrend, so we might be buying puts at this level, and we're still in a downtrend here. We might not be buying puts on specific stocks, but we might be doing put spreads. Right here, we might be taking profits, but notice again what happened right smack dab at the 50. And when I say right at the 50, everybody and their brother is watching to see what's happening at this level. Notice what our signal is. There's your bearish kicker signal. What'd that tell us? They weren't going in this direction. They were still going in this direction with great enthusiasm. So again, I always reiterate, this is not rocket science. This is just very simple analysis. What is investor sentiment doing at levels that everybody is watching? Now we've got a double bottom down here. Right here, we may have been covering short positions, but we might not be going long just yet until we get confirmation that they're definitely heading in this direction, which obviously they didn't. But what did this left-right combo tell us? Right smack dab at the same level it bottomed out before. Now we've got a strong bullish signal, double bottom. Now we just start going long until we see it's time to take profits. So essentially, what candlestick analysis does for you is, as I was mentioning at the beginning, if you've got a trading strategy that works, and you're going to see some very good traders today with good strategies, that if the worst case scenario is, not the worst case, best case scenario is that if you like their strategy and you apply candlestick charts to what their recommendations are, you just get that much additional confirmation that their strategy is working or not working. So what it boils down to is we have different option strategies right here as we would right here. And I'm mentioning this because we're doing a full day training next Saturday it's supposed to go from 10 to 2, but it will probably go from 10 to 4. But we analyze what are the simple option strategies to apply at the best times. We might be buying calls right in this area. Right now, we might be doing call spreads. So it allows the candlestick investor to make the right trading strategy at the right positions of stock price moves and where the market is at the time. So essentially what we're looking for is where are all the indicators telling us that the probabilities are greatly in our favor. A morning star signal after a doji bouncing off the 200-day moving average. If it trades positive, we know what our first target is. At least probably coming back up to the T line. Notice how far away you are from the T line when it bounces. That makes that the first target. What are we looking for at that level? Well, if they start selling it off, closing back below the T line, that told us the T line was acting as resistance. If it starts trading up, we know we can start being much more aggressive because we've had a reversal signal, close above the T line. That tells us the probabilities are pretty strong that we're heading in the right direction. And you've also got the visuals of what signals occur at levels that everybody else might be watching. If you drew a resistance level right across here, and then it did a bearish harami right at a level that everybody could see was a resistance level, what was that telling you? This was probably the appropriate time to start taking profits. And then notice where it pulled back to, the T line. Now I point out the T line because the relevancy of the T line is when it pulls right back to a T line or can't get up above the T line or uses the T line as support, it's not like everybody in the world is saying, oops, it's pulled back to the T line, because nobody has the T line on their charts. So when it's pulling back to a level that nobody else is watching, and we can see that the 8 exponential moving average acts like that natural support and resistance level, we have a huge advantage of being able to identify what's actually going on in human nature. And that's the whole basis of candlestick analysis. When you're analyzing candlestick charts, they indicate what investor sentiment is actually doing. The signals are based upon actual buy and sell decisions, not assuming or projecting what might happen. The signals are telling you what's exactly going on right at that time, which is your strongest indicator in the world because it works most consistently, because these signals and patterns are the results of 400 years of analysis of human nature. So I'll let Jeff, Jeff, are you going to mention more that we've got all these patterns and signals already built into the candlestick charts of Metastock. So even if you're not familiar with the signals and patterns, if you analyze a chart, it will show you what I'll probably go into your session, Jeff.
Okay, so, yeah, I'm ready. I can do it.
All right, so any final questions before? Oh, was there anything on YouTube?
No, other than we had a question that I was able to answer. It was, what is the T line?
Oh, okay.
And I was like, well, let me just type that from memory. So the T line again for everybody is the 8 exponential moving average. So,
yeah, and I often get asked by people will say, why don't you use the 9 EMA or the 10 simple? The answer is the 8 exponential moving average works so well. And that's another nice thing about candlestick charts is, as you can see, there wasn't that many indicators, the moving averages, the T-line, because the strongest element of a candlestick chart is the signal itself. Everything else merely acts as a confirming indicator. Okay, right. I guess that's about all I got, Jeff.
Thank you, Steve. I appreciate it. I'm going to go ahead and do this. Thank you for coming. Again, it's really appreciated. And let me go ahead and make me the presenter. I'm going to show all this really cool work we've done and the kind of the stuff that we're working on for very shortly now.
Okay.
Thank you, Steve. As always, pleasure having you.
Thanks, everybody.
All right. Cool. Let me go ahead and do this. I'm going to go ahead and show my screen as well. Should be able to see that. And coming right up is a picture of Steve Bigalow. But I want to talk a little bit. I kind of talked a little bit about this earlier and about the Candle Profit Systems 2.0. And I want to kind of start with that because it's an add-on that's been rated so highly by Stocks and Commodities magazine. It's one of our most popular add-ons. And it does a really good job of identifying the core patterns that Steve looks for on a chart. So right here is a list of the patterns. You've got your fry pan, your bullish belt hold, your doji at the top, your doji best friend. All these patterns are going to kind of be identified for you on the charts, and you can scan for them. In addition to that, we're going to have these single bar signals as well. So you've got doji, bullish engulfing, bearish engulfing. All of these are available also. And what that means is, like, I'm going to go ahead and I've got my Metastock open. I haven't opened up any charts this morning. So I'm going to go ahead and start with the DIA. Let's see what the market looks like. And we've been, and what I'm going to do is I'm going to open that up with the CPS system. So it's called CPS. That means Candle Profit Systems. I'm going to go ahead and open up the chart here and just show you what it looks like with that. And what you're going to notice as soon as the data comes in is, and I'm going to zoom into this a little bit because it'll make it a little bit easier to read. But what you're going to notice is it's going to identify all those patterns that were on that grid for you. So right here, you've got the T-line crunch. You've got a bearish engulfing. Here you had a left-right bullish combo. This was one of the biggest left-right bullish combos I've seen in a long time. Here you had a bullish engulfing, and you can just kind of see all of these are identified and put on the chart for you. It's really, really cool. In addition to that, over here in the commentary window, I can actually kind of open this up, and if I want to see like what this huge left-right bullish combo was, I can actually click on that bar. That's actually going to give me a pretty easy to read, easy to understand definition of what that is. So it's going to talk to me about it. It's going to give me the enhancements. This was also a bullish belt hold. I remember when this happened, I was talking to Kelly, actually. He's running the studio. You might have, if you're watching on YouTube, you would have seen the intro there. I'm like, that's the biggest bullish belt hold I've ever seen. So it'll give you a definition of it. It'll tell you what it means. And I can also scan for it. And I'm going to show you how to do that real quick because we do have a few minutes. What I'm going to do is I'm going to go ahead and open up the Metastock Power Console. I can go ahead and click on the scan right here. And what I'm going to do is I'm going to go ahead and just do CPS. And these are the different things that I can scan for. So there are different categories. This one, if I run this scan, you'll see it's doing the doji at the top, the doji best friend, the doji left-right bullish combo, the left-right bearish combo, and you can read the rest of them. All of these different patterns are going to be stuff that I can actually scan for. And what I'm going to do, just for the purposes of kind of just showing this, I'm going to scan for one of my favorite patterns. That's the doji best friend, which is part of this doji dynamite. Okay, and what I'm going to do, just to kind of keep things easy, I can, with Metastock, it doesn't matter where you are in the world. I can scan North America, I can scan Asia, I can scan futures. In total, the amount of instruments listed in Metastock right now is 321,000. So if there's a market that's not in the US, we get a lot of traders from that like to trade the National Stock Exchange of India, for example, or the Australian stock markets or the London stock markets. And it really doesn't matter. If it's available, it's going to be something that you can do most of the time. I mean, there's over 300 exchanges that are in here. They include futures, they include currencies, they include ETFs, they include optionable stocks, they include Canadian stocks, South American stocks. there's going to be stuff that you can get in there. So just to keep things real quick, I'm going to go ahead and scan the index constituents. What I've got here is, let's see, I've got the S&P. Let's change that to the S&P 500. And we'll also, we'll just leave it at the S&P 500 for now. You can select multiple if you want to, but right now we're kind of on a time crunch. We have another really good speaker coming right up. So go ahead and click the scan, and it's going to go through those 500 instruments, and it's going to eliminate all the ones that don't have one of those patterns, which I don't think it's eliminating anything because the filter is not selected. But that's okay. It'll actually, usually it'll eliminate about 95% of the patterns. But if I just want to find the stocks that have a doji best friend, it's super, super easy. So we'll just go ahead and let it complete. I'll show you kind of what the report looks like and how to read it. But in that amount of time, it actually was able to go through 500 records, 503, and actually give us, okay, these ones have a doji best friend. And let's see if we do have any doji best friends here. So we do, and this isn't a recommendation to buy, of course, but right now we've got Becton Dixon that's given us a doji best friend. A doji best friend, if you don't remember, or is a doji, an indecisive bar followed by a gap up. Right here, if we open this up, we have two of those, Becton Dixon and CME Group, and so if you kind of go in and look at that. For me, I've been trading for a really long time. The ability for me to go in on a daily basis right before the market closes and just run a market scan to see what's actually hitting saves me so much time. And it allows me to skip all of the stuff that doesn't have an opportunity and focus on just the stuff that does have an opportunity. So there you go. I just love scanning in Metastock. So with the add-on, I know we're going a little bit quick here, you're going to get the Expert Advisor. You're going to get the scanning, you're going to get this English definition, and of course it's going to be set up in such a way that Steve likes to have his charts. It has his T-line on here, his 3 EMA, and all that stuff is all very, very well put together. So this, again, has been one of our most popular add-ons, and Steve has always been one of our most prolific experts. We love working with Steve. We appreciate all the work he's done with us. Again, here's a list of all those patterns that are in there. And then in the single day patterns, the ones that he calls the 12 power signals, I believe, right here, they're listed out for you. And I'm pointing to my screen like you can see where I'm pointing, but I'm sure you can see that right there as well. So as part of it, you're going to get those 6 explorations, the Expert Advisor, 3 layouts, and 36 different patterns. So, and that normally, this add-on is normally $4.99. Here at the seminar today, at the summit today, it's going to be $3.99. And we're going to offer it with a 30-day money-back guarantee. So you can try it out. If it's something that you like, you'll find out really quickly why it's been rated the best software, and it's why it was one of our most popular add-ons. And Metastock itself, I'll talk a little bit more about that, is actually a software that's been rated #1 in its price category, 30 years straight. So the other thing I wanted to talk about today with Steve is what we're actually going to do is we're going to do a boot camp with him. We're going to do a training session. This is going to be a live in-person event. We're going to do it the first Saturday of December. So it's a little bit out. In this boot camp, what he's going to talk about is market trend analysis, identifying robust candlestick trade setups, trade entries, when to trade, when to close a trade, how to stop out of a trade, and confirming indicators. So with markets being kind of like as volatile as they are, that trend analysis is going to be really, really important. So as part of it, he's going to talk about the 12 major signals. He's going to look at high profit moves and the simple logic of where to put your stop losses and what indicators you should be using to help confirm the probabilities of trend reversal. We've done trading classes with Steve before, and this is going to be a 6-hour session. I need to update the date. I just noticed it's actually December 3rd, 10 a.m. Eastern. We're also going to give you unlimited access to the recorded sessions. And so let's kind of go in here. I actually did have these slides put together right here. So since the December 3rd date is a little bit in the future, what we're actually also going to do is about 2020, we sit down and we recorded with Steve some training that we did. And it was really, really good. Very, very extensive training. And what we're going to do is you can sign up for this live training and immediately you're going to get access to the recorded training. So, and we're going to do that at no additional cost for you. And we're also going to discount the price of the training Normally it's $8.99 for that 6-hour session. We're going to do it $500 today for the summit and instant access to the recorded sessions from 2020. So you can do that. If you also need to get the add-on, we're going to do both of them for $698. So as part of that $698 bundle, you're going to get Candle Profit Systems 2.0. You'll get that training bootcamp that I sat down and recorded that just shows you how to run all the scans, the explorations, helps you get started, gives you a running start with Metastock. You're going to get the training course I just talked about, the recorded one. You're going to get the live bootcamp. And in addition to that, if you don't have Metastock, we'll give you a free month of our award-winning Metastock platform as part of it. So, and of course, some training to help you get started with our program. If you're not familiar with Metastock, Metastock has been rated the #1 software program, and it's only been rated the #1 software program for 29 years straight. So there's a reason it's been so highly rated. This is a great package for you to get started with one of our most popular add-ons that's been rated so highly in stocks and commodities, as well as some great training, and it's all $698. So I'd recommend you do it. You can do that by giving us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. And you can get that package. We are also running a Summit Traders Action Pack today, which is going to include a lot of stuff from all of the speakers today, including Steve Bigalow, his Candle Profit Systems 2.0, his training that I just talked about, the additional bonus recorded training that's available to you instantly, the Jeff Tompkins, and we'll talk a little bit more about Jeff Tompkins in just a second. He's the next speaker, but he's got an annual package as well that's going to be included with this offer. Silas Peters' 3S code, 3 months of the Magic Trader software, 2 years of Stocks and Commodities magazines. All of that would normally be about $5,289. Here at the event today, we're going to actually really reduce that price by more than half. It's $21.93. So you're going to get all kinds of really good training, our software to kind of help you get with our top award-winning software that's been rated so highly, and you for just $21.93, you'll get a year access of the trade trend stuff. Metastock.com/summit deal. Give us a call at 800-882-3040, or visit us online at metastock.com/saleschat. And there you go. All right, I'm going to go ahead and get this on so that I can talk to Jeff in a second. Let me go ahead and do this too, though. I do want to say thank you to Stocks and Commodities magazine for sponsoring today's event. They've done a really good job of helping us get the word out for our event. They've got 17,000 different articles that they've put together, 1.2 million subscribers. They've been making it since 1982, but I appreciate the sponsorship. They always have been really good in helping us with the sponsorship and getting people to these events. And if you just go to, I know we have a lot of people on YouTube today. If you go to metastock.com/tradersummit and fill out our registration form, not only can you get a free month of Stocks and Commodities, you can also sign up for a lot of free offers from the different presenters today. So go to metastock.com/tradersummit. You can do that all day long today. There's a lot of really cool bonuses up there and free items, and make sure you do it. So I know we have a lot of people on YouTube today. And if you are on YouTube, do me a favor. I'd appreciate this. Hit like, hit subscribe, and you'll be able to be notified every time we have a great event like this. So with all these great speakers. So do that. Jeff Tompkins is another person that we've been working with for a number of years. He runs a hedge fund now. He started with, oh shoot, am I going to draw a blank? He started, I can't remember the name of the website, but he's gonna remember it. But he has a bunch of students that he taught people how to trade with on a website. Oh my gosh, I'm drawing a total blank. Jeff I love though, because he's he's got a great name, #1, but he also is very easy to understand. He's very thorough in terms of what he talks about, and I think he does a great job. He also manages a hedge fund now, so it's good to have him on here. How are you doing, Jeff?
I am well. How are you?
I'm doing good. Thank you. Let me go ahead and throw this over to you.
All right.
Make presenter. What was the name of that website?
Udemy.com.
I almost had it. Yeah, okay, cool. I can see your slides.
Perfect.
I'm gonna get out of the way. Your turn.
All right. Well, welcome everybody. Let me actually do a little configuring here, so not blocking the screen. All right. Well, once again, welcome everyone. Thanks for the nice intro, Jeff. Definitely love that name. No bias there, right? All right. Well, today we're going to be talking about price action pivots. So we're going to be looking at some kind of a unique way to gauge and forecast future trends in markets. Completely fractal in nature, can be applied to any asset class, any time frame. So I think you guys are really going to love it. And by the end of the session, you'll discover how this particular set of price action pivots can accurately spot turning points in the markets. And it can be used to forecast market trends actually before they occur. So many of the tools and indicators and things we use have lagging components that by the time we identify a setup or a trend, much of that has already taken place, and we often end up jumping in too late. So we're going to be looking at a way to forecast these ahead of time, and then we're going to throw in a really cool indicator tool as well that is designed just for that purpose, is to give us up to 3 candles of advanced warning of a forecasted trend. So whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. So before we get started, I'll read a quick disclaimer. We all know trading securities and options involves risk. We won't really be talking a whole lot about options today, but the price action pivot setup, as well as our indicators, do work very well with option trading strategies. I'm an options trader myself and use a lot of these technical analysis tools to make options trading decisions. So if you guys do trade options, of course, you need to have a broker to trade them, and you must receive a copy of Characteristics and Risks of Standardized Options. You do need to meet suitability requirements. And we're going to be going over some hypothetical as well as real money results in our presentation today. And just know that any results that we do cover don't necessarily indicate future performance, even though, again, they may be based on actual trades or hypothetical results. And due to the time-critical nature of trading, brokerage fees, and the activity of other subscribers, we don't guarantee that any subscriber will mirror performance. The performance numbers that we do show are based on signals or trades that users can enter based on our trade signals or setups. So give you a little bit of background on myself before we get into all the fun stuff on our session today. If you haven't attended any of my past educational events, again, my name is Jeff Tompkins. I have 23 years of experience trading the stock, options, and futures markets. I received professional training at the trade desk at Morgan Stanley as an intern way back in the day, and am the founder and chief investment strategist of Altos Trading. We currently have over 60,000 members in over 100 countries across the globe. And as Jeff mentioned, I'm also a hedge fund manager, so I manage capital for my clients at Altos Capital. And a lot of the strategies, methodologies, and indicators that I share on my educational events are ones that I actually deploy in my hedge fund. So it's a unique opportunity to kind of get an inside look at some of the strategies that are used within hedge funds. And I'm also the manager of some of the top performing options and equity alert services, and the creator of the Trade Trend software, which we'll talk to you guys a little bit about today. All right, so let's get into price action pivots and how to forecast trend direction. All right, and this is really the definitive guide to identifying trend reversals as they're happening or before the trend actually occurs. So what do we need to know, right? When we're making a trading decision, most often it's going to involve some sort of directional analysis, right? So we want to know, is the market forecasted to go up? Is it forecasted to go down? Maybe it's not forecasted to do much of anything, and it's going to trade in a sideways channel. But ultimately, whatever strategy we incorporate around that analysis, we need to know when to buy, when to sell, and when to stay out of the market. And that last one's probably one of the more important ones. And that's why we all trade, right? We trade to give ourselves an edge and be involved with the market when it makes sense, when it's appropriate, and be out of the market when it's not. Otherwise, we just become buy and hold investors. And then we're at the whim of the market. And if it wants to go down, then we go down with it, right? So that's where trading can have an advantage and an edge, is if we know when to stay out of the market. And the price action pivots actually help us do that. And I'll demonstrate why that is. So what you'll discover on our session today is how and why periodicity highs and lows provide crucial trend and reversal forecasts. What I mean by that is and the question will probably come up is, what time frame does this work best in? What time frame should I use? What time frame do you use? It's actually irrelevant. This setup doesn't necessarily work better on any one time frame. It works equally well on all time frames and can be used on all time frames. So we'll look at different time frames on our session today, but whether you're using it on a daily chart or a 5-minute chart, whatever the periodicity is, it doesn't matter. We're looking for specific price action that can forecast trend direction. So we want to identify when markets are likely to reverse trend, right? Trends are always reversing. So you get an uptrend and then a downtrend, maybe then a sideways channel, followed by a resumption of an uptrend. That's how markets work, right? And once you realize that and know how to spot these, it can really turn your trading around. We'll look at how to identify key supply and demand points. So is there buyers coming into the market? Are there buyers that are going to drive price up, in which case we forecast an uptrend? Or maybe there's the buying's drying up and reversing into excess supply, right? And so we have sellers coming to the market, and we forecast a downtrend or a move down in the market. That's how we're going to use it and what we're going to look at. And then I'll show you how to accurately set entry, stop loss, and take profit levels using this methodology. So as it relates to price action pivots, let's talk a little bit about why they occur and what they involve. So as market trends prepare to reverse course, shifts in supply and demand within candlesticks give us clues to future directional movement, right? So markets are a constant, back and forth between buyers and sellers, and that's what drives price. So how do we spot that? Well, we're going to use a 5 candlestick pattern, and I put minimum in there because there's a potential for it to occur over more than 5 candlesticks, and I'll explain why that is. And we're going to use this to identify when these trend changes are likely to occur. And once that pattern is completed, once it's set in stone, it's can't change, we'll have a blueprint for forecasting directional trend with a very high degree of accuracy. All right, so the nice thing about price action pivots is they only require basic candlestick or OHLC, which is open, high, low, close charts. So if you ever see just the kind of the basic vertical bars with a little line on either side of the bar for the open and the close, that's your OHLC chart. But you can use any chart style that you prefer. What we're going to be doing is we're going to track changes in candlestick highs, this is for short setups, and candlestick lows for long setups over 5 candlestick periods. Again, put the minimum in there because there's a scenario where we may ignore a candle or a candlestick, and I'll explain why. And what these can do is they can help us predict market shifts, they can help us forecast trend direction, and it can be applied on any retail trading or charting platform. And we're going to be using it on the Metastock platform today, and then combining it with the trade trend indicator to give it even more accuracy in forecasting trend direction. It's really amazing when you combine the two. And you'll see that the accuracy is quite astounding. Markets actually have to form these price action pivots in order to make directional moves. It's an inevitability within price action and how trends develop and reverse. All right, so again, I mentioned you can apply this to any time frame. You can use it with any asset class, equities, ETFs, futures, Forex, and it's a very versatile, equally effective tool and system across all asset classes and time frames. All right, so we're going to get over to the charts and look at how to identify a price action pivot, what the rules are, where to place our entries, our stops, our take profits, and then we're going to apply our proprietary indicator to the setup and look at the power behind the combination of price action pivots and the trade trend algorithm. So let me get over to our Metastock platform. Hopefully you guys can see the charts here okay. If not, please let me know in the chat or the Q&A. And we're going to start out by looking at a simple daily chart, and then we'll go to some intraday timeframes of the S&P 500 Spider ETF, the SPY. One of the most heavily traded ETFs out there, probably the most heavily traded ETF. And we've just got a basic candlestick chart, nothing else on the chart, no indicators, just keeping it clean. And we've got white candles for for a bullish candle, right? If the close is higher than the open, and we've got a black candle for a bearish candle if the close is lower than the open. All right, so very basic. Right now, we're not going to worry about whether the candle is black or white, or maybe you use green or red. The color, the open relative to the close, not important right now. Okay, we're not going to focus on that. We're merely going to focus on highs and lows. Okay, and let me get a drawing tool out here so we can take a look at this. Actually, let's zoom in a little bit here, make it easier to see. Okay, so let's start out. There's two types of price action pivots. There's bullish price action pivots, in which case we forecast a directional move to the upside, and there's bearish price action pivots, in which case we forecast a directional move to the downside. So let's just start out with a bullish price action pivot. Okay. So again, we're looking at a daily chart of the SPY. And just to keep it simple, if and again, this can be used intraday, and we'll demo that as well on some intraday chart timeframes. But let's just say the end of the market close every day, we're tracking trend, right? And we want to know where's the most likely trend direction. When should I not be in the market? When should I be sitting on the sidelines? Well, to determine that, we're simply going to track a low in the case of a market move down. So, and we're going to look at this little time frame back from like earlier to mid-July. Okay. And if the market's moving down and making new lows, we're simply going to track the low each day after the market close. So that's all we're doing. We're just tracking the lows. So I've marked those for you on the chart here. Now, at this point in time, we know that the SPY is moving down, right? Now, do we want to? We're in a downtrend here. Do we want to jump in and short the SPY? Do we want to set up a bearish strategy with options or something that's going to take advantage of a down move in the SPY? Well, it might seem like the case at the time, like it might be a good idea, right? But no, we're not. We don't want to jump in a trend after it's already been established. We want to find the trend reversal for the price action pivot. So the SPY is moving down. We're tracking the new lows, and what we're looking for is for something to change, right? So previously, we're making a series of new lower lows, indicating that we're in a downtrend. But something changes on this day, right? What changed? Well, we're no longer making new lows. We've now made a higher low. Okay. So this is what catches our attention. This is where we want to start paying attention for a potential trend change, right? But it's not the completion of the price action pivot setup yet. We want to wait for one more candle to see if that remains true. Are we going to make another higher low from where things change, which is back on this candle right here? And in fact, on the next day, we did put in a new higher low. It was actually on a bearish candle, but remember, we don't want to pay attention to whether the candle is bearish or bullish, whether it's white or black or green or red. It doesn't matter. We're just purely tracking where the markets are putting in lows, right? So once we get, and I'm gonna mark these for you because I mentioned that it's a 5 candlestick pattern setup. So what we want to see is 2 candlesticks, and this is for a bullish price action pivot, 2 candlesticks to the left of the candle that had the lowest low with a higher low. Okay, and as we're mapping this out, as the market puts in new lows, we're purely keeping track of the low, right? And this becomes our potential pivot. And I say potential because we don't know if it's going to be a pivot. If the S&P kept moving down and putting new lows, this no longer has the potential to be our pivot candle. This is where it changed. or we put in a higher low, right? And so now this has the potential to be our pivot candle, but we need one more higher low from the low that was put in mid-July. And there it was on, so this is our potential pivot. This is candle number 4. And there it was on candle number 5. So we've got 2 candles to the left of our pivot candle with higher lows than the low on the pivot candle. We've got 2 candles to the right of the pivot candle with higher lows. And this now is our confirmed pivot candle. So it was a potential pivot. We were just waiting for that 5th candle to put in a higher low. And we've now got a confirmed pivot candle. Okay. Let me erase these. It's getting a little messy. So let's just know that we've got our candle 1, candle 2, our pivot candle, which is pivot candle is going to be candle 3. Then we got candle 4 and candle 5. And we've got a bullish price action pivot. So our next step, now that we've identified the setup, is to, for a bullish price action pivot, identify the highest high within the 5 candlesticks. So it wasn't candle 1 where we had a high down here, right? It wasn't 2 or the pivot or candle 4. It was in fact candle 5. That might not always be the case, but in this setup, it was candle number 5. So how do we use that information? What do we do with it? What we're looking for is for the market to move up outside of that high. So we would look to enter long and forecast an uptrend. So we were, shifting from what was previously a downtrend, and we're looking for the market to move up, and we can place a stop entry or a buy stop just above the high of the highest high within the 5 candle bullish price action pivot setup. All right, so that would kind of be right about where I drew this line here. This would be our entry. And in this case, we get the follow through and the SPY takes off into a very strong uptrend. Okay, we actually got another one right here. So sometimes you'll see price action pivots within the trend, multiple price action pivots after we identify the first one. And that's a good sign. That means that the trend likely has more room to run. Now you'll notice that I didn't, and this is where I said a minimum of 5 candles, I didn't mark this candle. Why is that? So we ignore inside candles. If the high and the low of the candle resides within the high and the low of the previous candle, then we simply ignore it and we don't count it as the candle. So this would be candle 1, candle 2, our pivot candle, candle 4, candle 5, and the high of the pattern is on candle number 5. So we enter on a move up through that high. All right. So let's go back to this one. Okay, so we've got our initial bullish price action pivot. We've got our 5 candles. And we've got an entry. Now this probably faked a lot of people out, right? We're kind of in a range here, right? Up, down, up, down, up. And we get on candle number 5, we get a big bearish candle. And it's right off of this resistance level, right? Which is where we're going to put our entry. So this is where it fakes people out. It looks like the SPY is going to rotate lower again. And then it breaks through. And that actually occurred because of this bullish price action pivot. Now, because none of us have a crystal ball, we don't know how far this move is going to run. We just know that the odds are in our favor for a uptrend to ensue. So what we're looking for is, and this is where placing our stop loss and our take profit level comes in. We're looking for a particular point move based on this setup. So typically, we'll start with a stop loss, right? We want to know, define our risk, where are we going to put our stop, and then from that information, we decide where we're going to place our take profit. And because this setup has a statistical edge and generally far more than 50% of the time correctly identifies the forecasted trend, we only need to use a 1-to-1 risk reward and stop to take profit ratio, right? So that's going to be important information here in a second. So how do we determine that? Well, where are we going to place our stop loss? So we have a few options, and there's other tools that can be incorporated in this, and we're going to look again at trade trend and how that can also be used. But we want to use at the bare minimum the lows of candle 4 or 5 to give us more room for a move to occur. The maximum stop loss we would use is below the low of the pivot candle for a bullish price action pivot. For a bearish, and we'll look at one here in a second, there was a nice one at the top of this trend before it reversed, we would place it above the high of the pivot point. So for bullish, we place it below the low. So if we were to do that, we'd have from our entry, which was right about here, and for the sake of time, I'm not going to calculate exact point moves, but that would be roughly our entry to our stop loss level, right? So we'd want to determine for whatever asset we're trading, how many points are between our entry price and our stop loss. And since we're going to use a 1-to-1 risk reward, we want to add that number of points then, once we've placed our stop loss order with our broker, to the entry for our take profit. So we want to use equidistant or equal number of points between our entry and our stop loss as our entry to our take profit. And once we come up and hit that take profit, which would have been just roughly, I'm obviously not calculating this exactly, but roughly right around there. So we hop out and we had a nice accurate forecasted move to the upside and hit the take profit level, right? And again, we got a few of those within that uptrend, a few bullish price action pivots. And then we get a bearish price action pivot. So again, if I'm doing this off a daily chart, I'm purely just tracking the highs at the end of the close every day. What am I noticing? Well, if I had taken a trade off these bullish price action pivots, I know that the SPY is in an uptrend. So I'm just merely mapping the new highs. But then something different happens here, right? So let's see, this was on August 17th, right? So prior to August 17th, we're just making new daily highs. But then August 17th is the day that everything changed. That's what I like to call the candle number 4, is the day everything changed, right? So we no longer made a new high. We now made a lower high. So that's where I start paying attention, all right? And then I start numbering my candles. So this is my potential pivot. It's not my confirmed pivot yet because we still need to make another lower high. But it's my potential pivot, which makes this my candle number 1, this my candle number 2, with 2 highs that are lower than the pivot high. And then here's another case example of what I mentioned with the inside candle. The following day, we have an inside candle, which indicates indecision and often precedes a big directional move. So that's kind of cool. You know, I'm good, but I'm not going to count it. So we're going to ignore this because the high and the low resides within the high and the low of the previous candle, right? So then we wait another day. All right, there it is. It's confirmed. We have a lower high than the pivot candle, and that becomes our candle number 5. This was candle number 4 here. Okay, so this took place over 6 days. We ignored the inside candle, and we have a bearish price action pivot. So next, I want to look at the lowest low within, because now we're looking at a bearish price action pivot within the 5 candle pattern. And that's going to be actually on candle number 1 in this case, right? Oops, sorry, I didn't draw that very straight. Right? So what we want to do is place our sell stop entry below the low of candle number 5. Sorry, not drawing real straight lines here, but it's actually going to be right about, so we gapped lower on the following day, right, and then came back up. So if we're using a sell stop limit, this would have given us an opportunity to enter, and we would have had to wait a few days. But as long as we don't get a confirmed bullish price action pivot, this setup remains valid. We almost started to get one here, except where what would have been candle 5 for the bullish price action pivot rotated lower and took out the low of what would be the pivot candle, right, or the potential pivot. So this potential pivot for a bullish setup was negated. So the initial bearish price action pivot setup remains in effect. This is what I mean by keeping you out of the market when there's not a valid setup, or we're waiting for a previous bearish or bullish price action pivot setup to play out. And it helps us from getting faked out as well. This happens to a lot of us, right? We get, we have this really strong uptrend, and we're thinking at this point in time right here, we're just getting a bit of a pullback, and then the uptrend's going to go. This fakes out so many people. See, we get the retracement, then we get a couple nice bullish up days. Okay, you know, the uptrend's going to resume. We're going to go back up, and then you see major sell-off. Okay, so the price action pivot system would have kept us from getting tricked here on what may look like a retracement and a continuation of a bullish uptrend, and it allowed us to accurately forecast the actual downtrend that ensued. Okay, so again, candle 1, candle 2, pivot candle, candle 4, ignore the inside candle, candle 5, find the lowest low in the pattern, which is right here on candle number 1, place our sell stop below the low. We don't want to take a big gap, directional gap, so which happened on the next day, and that occurs from time to time if you're trading equities or ETFs that close at the end of the market period and reopen the next morning. Not so much of an issue if you're trading 24-hour markets like futures or Forex. So watch out for the gaps and just be patient. Often when that gap occurs, the market will come back up into your entry level and then resume the directional move. All right, so our stop loss would have been above the high of the pivot candle. All right, so we've got nice little distance to work for. We actually probably would have taken a profit on this in only a day or two. Came down and hit what would be our take profit level. Okay, we got a nice little bullish price action pivot set up here, which we also could have taken for probably about a 1-to-1, although we did get a gap there, so maybe not able to take advantage of that. I have to map out the thing. But then we get another bearish, right? So we're just merely looking at the direction of the current direction of the market and mapping highs and lows. So if the market's moving up, we're mapping highs. If it's moving down, we're mapping lows. And if it's moving down, we're looking for a bullish price action pivot with a forecasted direction to the upside. If it's moving up, we're looking for a bearish price action pivot with a forecasted move to the downside. So we got candle 1, candle 2, pivot candle, candle 4, candle 5. Lowest low within the 5 candle pattern is on candle number 5. So we're looking for an entry below that low to the downside. Very next day, we rotate lower, move into the entry price right around this level. We place our stop loss above the high of the pivot candle, and we're looking for a 1-to-1 move to the downside. Beautiful. So you can see these are all over the place, right? They're on every chart, every time frame. So let's quickly look at an intraday time frame. Let me clear these out. And let's go over to something different, so we're not getting bored looking at the SPY here. let's look at, let's do Tesla. Let me take trade trend off, and then we're gonna throw trade trend back on here in a second. So let's go over to a 5-minute chart. I'll make it a candlestick again. Again, you can use the OHLC chart, whatever suits your eye, but we'll keep it on candlesticks for now. Because remember, we just need the high and low. We're not worried about the open relative to the close, or the close relative to the open, I should say. Okay, so we actually just had a bullish price action pivot set up today on Tesla on the 5-minute chart. Let's just go ahead and take a look at that one because it's just recently happened. And it's already, looks like it's already hit its profit target level, right? So we're merely mapping lows. This is actually an interesting one. Let's look and see what the lows, because it looks like our pivot candle lows might be very close together. So the low at 10:25 a.m. was 198.58 and 198.59. All right, so this candle was actually our pivot point low. If they happen to be equal, it's rare, but it can happen. We just combine the two candles and use the low of both candles. Okay, so again, so obviously Tesla gapped down big this morning at the open, right? It's making new lows. So what are we doing? We're merely mapping the lows. Looks like something was about to change here. Remember I said this will help keep you out of sideways chop, sideways price action, non-directional movement. We had a potential bullish pivot, right? Actually, we didn't, because this was, this would have been the actual pivot. So we had one earlier in the open, right? So this was a potential pivot, became a confirmed pivot after 4 and 5. But if we take the highest high, which is candle number 1, our entry to the upside would be here. Well, we didn't get the fall through. We continued to make new lows. So no harm, no foul. We're not in a trade, right? It kept us out. Perfect. It's what we want. We want to stay out of the market when it doesn't make sense to be in the market. All right, so since there's no follow through, then we're just, and we get a continued move down, we're just tracking the lows, right? Because we're moving down. All right, so this is the candle where everything changed, this bullish candle. Why? Because the high, even though it was just barely higher, or sorry, the low was just barely higher than the previous candle. So this becomes our potential pivot. And this is the candle where everything changed, right? So we want to just confirm. We're going to actually ignore this one. It's an inside candle. The candle number 1 and candle number 2 have higher lows than our potential pivot. We've now put in a new higher low, candle number 4, and we get a confirmed bullish price action pivot, candle number 5. And this now becomes our confirmed pivot candle. Now we're looking for, actually this one hasn't completed. I didn't look closely enough at it. Now we're looking for the highest high within the pattern. That's on candle number 1. Right? So I'm just looking to see, we haven't had any more bullish price action pivots occur yet. So this is the entry, right? This is a pretty wide stop. I may want to use the low of candle number 5 to tighten up my stop, but we'll just stick with the low of the pivot candle and we'll place a stop just slightly below that. And you can see we broke through, hit the entry, came back down, retested. It looks like we're kind of trying to rotate higher off that. And so we're forecasting a move up, unless we get an opposing signal. So let's take a look. Did one come in? Well, we were making new highs. And we actually got a bearish price action pivot, right? It's not a good one, and I'll explain why. So here's candle 1, here's candle 2, here's our pivot. This is the candle where everything changed. Candle 5. What's the lowest low? Because this is a bearish price action pivot in the 5 candle pattern. It's way down here. So if this becomes a triggered bearish price action pivot, Tesla's going to have to sell off down below the low of candle number 1. Okay, if it does, that would be a confirmed short entry with a forecasted rotation lower. But we're far from hitting that pivot. And one little trick to throw in here is I don't like these lopsided price action pivots. If you get one side that has a low for a bearish price action pivot that's way lower than the other 4 candles, I don't like to trade these. Or conversely, with a bullish price action pivot, if you get a high that's way out of whack with the other 4 candles, then I tend to like to ignore those. So for the time being, the bullish price action pivot is still in effect. And it looks like we're getting that rotation higher as we speak on Tesla, right off of that forecasted move to the upside. So that's an example of intraday, and you can see these all over the place. And a good exercise as you're learning the strategy and spotting the setup is you find these all over as the markets move and make new trends. It's going to be hard to find a triggered entry in sideways choppy price action. So there might be a bullish or a bearish price action pivot within this, but no triggers. So this is how it keeps us out of the market when there's not a strong directional move. If the market's just moving sideways, we're not going to come up and trade above the 5 candle high or below the 5 candle low for a bearish price action pivot. We're just going to stay out, and we just keep mapping as the market moves and gives us new highs and lows. So that's the setup, and there's a way to make it even more powerful, believe it or not. It's a great standalone. Again, you don't need any indicators or anything else to clutter up your chart. But I never trade this alone by itself. And the reason being is when I combine it with other tools, I found it to be even more accurate. And I'll go over to my slides here real quick. One of those tools is the trade trend indicator. So we developed this in partnership with Metastock for the Metastock platform. And it's a momentum algorithm that works fantastically well with the price action pivot system that I just demonstrated for you. And what it does is it gives us accurate buy and sell signals up to 3 candles in advance of an anticipated trend using a momentum algorithm. So it's using different rules. It doesn't use rules from the price action pivot, and that's why I combine the two. We don't want to combine 2 like indicators or systems, right? We want to find confluence between different metrics that give us a more accurate forecasted trend direction. So we want to combine momentum-based studies with price action studies, for instance. And that's why the trade trend indicator is such a powerful addition to the price action pivots strategy. And it also includes trailing stops. So if you don't want to use the take profit system that I demonstrated for you with the price action pivots, and you want to let these run further, because a lot of these trends do run a lot further, it comes with the trailing stop algorithm as well. And so it's going to help us predict short-term and long-term trends with really nice accuracy, especially when we combine it with the price action pivot setup. And we can use this as well, just like with the price action pivots, with any asset class, right? Stocks, futures, Forex. We can use it on any time frame. We can use it to help supercharge our option strategies. A lot of the option strategies I trade are directional strategies. So I need to be really accurate with my timing. You know, if I'm setting up a vertical bull debit spread, right? I need to know pretty accurately when I anticipate the market to rotate from a downtrend to an uptrend. If I get in too late, I've missed a lot of the directional move and I don't make money on my options trade. So using this with options has been a big success for me. The indicator does not repaint. What that means is once you see a confirmed signal on the chart, it's there for good. It cannot go back and change after the fact. It has built-in protection to avoid whipsawing, especially when you use it with the price action pivot system I've taught you on our session. It helps you capture a majority of the trend before it reverses on you. It's designed to limit losses and let profit run with the entry algorithm and the trailing stops. It can be used with any other indicator system, and that's why we're combining it with the price action pivot system to really supercharge it and give it more accuracy and ideally better profitability, right? That's our goal. Okay, so let's add trade trend to our chart. I'm just going to go back over to the daily chart. Close that out. Let's see, let's just go back. Let's go over to the QQQ. All right, so now we're looking at the Qs. Let's see, let's actually take the Bollinger Bands off of here. Okay, so now we've got trade trend added onto the chart. And what I'll just give you a brief rundown of how it works. I mentioned that so we're looking at a daily chart now on the NASDAQ 100 ETF, the Qs. So I mentioned that it gives you up to 3 candles of advanced warning of an anticipated move, right? So it does that with either a red or a green diamond. So I'm very zoomed out of the chart now so you can kind of see all the signals, right? So if we get a red diamond, the algorithm is anticipating a down move. Now, in order for that to be a confirmed down move, just like with the price action pivot system, we need to see follow through below the low of a candle for a red diamond. So we're anticipating a downtrend. We need to see follow through to the entry price, and that's going to be below the low of the candle. That's why you see a red arrow 2 candles later, because we got the follow through on the move down, the anticipated move down on that signal. Here's one where there was a potential anticipated move down, but no follow through. So we get the red diamond. Our entry to the short side would be below the low of this candle, but didn't occur, right? So we kept moving up. No big deal. Kept us out of a potential fake out to the downside. So that's another beautiful thing where it works to keep us out of the market. Remember at the start of our session, I mentioned with trading, being out of the market is probably the most important variable, more so than being in the market, right? That's the edge we're looking for in our trading, is being in the market when it makes sense and being out when it doesn't make sense. So trade trend can also help us do that. So you'll see some diamonds that don't have, there was another one that don't have confirmed entries because we didn't rotate into the entry level price. But here was a bullish signal that did follow through, right? And interestingly, this one was right at a bullish price action pivot. Same thing with this sell. If you look, and so what we're looking for really with, when we combine trade trend with price action pivots, is we're looking for the signal to coincide with the price action pivot and for it to occur right around or within that 5 candle pattern I've taught you guys. So let's just zoom in here real quick. So we can see this a little bit better, because on this recent sell, it was a very nice one. And why would we want to maybe take this sell signal up here at the top of this rotation? Well, we have our, and why would I ignore this bullish signal? Well, the trend's already been in place for a long time, right? I don't want to take a bullish signal at the top of a trend potentially. So I'm just looking for that price action pivot, right? And interestingly, this one occurred on the candle, the trigger on the same candle that we would have started to look to get in off the trade trend signal. So there was candle 1, candle 2, our pivot candle, candle 4. We're actually ignoring the next one because it was an inside candle, candle 5, right? And trade trend gave us the potential sell signal a little bit before the price action pivot signal, right? So it told us on candle number 4 that the algorithm's anticipating a move down. But again, the algorithm doesn't know what price action pivots are. It's not incorporated into it. It's a different methodology, but great when you combine them, because now I know that Trade Trends predicted it on candle 4. I know that I've got a confirmed bearish price action pivot set up by candle number 5, which happens to be our trigger candle for Trade Trend. So Trade Trend would have got us in this a little bit earlier, but if we wait for the confirmed price action pivot entry, then we're really off to the races, right? We know we've got 2 confirmed signals, one momentum based, one price action based, and we have this beautiful move down, right? So during this down move, we can use our basic 1-to-1, which we would have easily hit, right? Risk reward. But the other cool thing Trade Trend does is it gives us trailing stop levels. So you can actually go into your expert commentary, right? And you can click on the day that this warning signal came in. That was on the August 17th. And at that point, it just was telling us Trade Trend projects a move down in the asset, in the Qs, right? Off the daily chart. All right. So it doesn't tell us to short the Qs at this point. It doesn't tell us to take a bearish strategy and get into the Qs. It's just telling us that it's projecting a move down. We actually need to trade down into the suggested entry price, was at the time 326.27, right? So again, that's down below the low of the pending sell candle. And then of course we get that move a couple days later. We have this beautiful bearish price action pivot. So you'll see as I fast forward through each day, once the triggered entry occurred, you can see that the commentary is telling us there's an existing short position open, and it's actually giving us a trailing stop after each candle. We're looking at a daily chart again, so it's going to tell us at the end of every day where our trailing stop should be, and it can actually keep us in this move until it reverses on us. So you'll see that it kept moving the trailing stop down as the market moved in our favor. And then on the 25th, we got a reversal, and the trailing short stop gets breached, and we're taken out with a nice move about over the course of a week, right? So you get all that in the trailing, or in the commentary as well. You get the trailing stop as well as the entry price. So it tells you if there's a signal, what the entry price should be. Like if we go back to this buy signal on June 23rd, it tells us the criteria for a buy setup's occurred, and if we were to take a trade off this signal, we want to place our buy stop limit order. It even gives you the type of order to use at 285.80 or 81 if we round up. So it's giving us our future anticipated entry price and the directional move. So very powerful tool to use with the price action pivots. So that's a trade trend indicator with the price action pivot strategy. It's a real powerhouse combination. It works very well. They work very well together, and they can be used on any asset, any time frame, and it's available on the Metastock platform. So I'm going to talk to you a little bit about how to get Trade Trend on the Metastock platform so you guys can start using it with the price action pivot setup I taught you on our session today. Before I do that, I'm doing something I don't normally do. And it's not to brag, but I believe in backing up what I teach on my sessions with real money results. I could go pull, great hypothetical results all day long for you guys off the charts with the price action pivot strategy and with the trade trend indicator. But did I actually trade those? No, I'm just pulling them off the chart and showing you. So I believe in backing up what I teach. And today it was the price action pivots and the trade trend indicator with real money results. So I want to share where I've used these tools in the real live markets with real money. And I also don't like to cherry pick the best market, right? So I could go back sometime in the last 10 years when the market's in this really nice uptrend and show you where I made a bunch of money, right? Well, that wouldn't be fair because those are, relatively easy market conditions. So what I did is I picked a terrible market condition back early 2020. We all know what happened there, right? The market crashed in 2 weeks due to the COVID pandemic, lost over 30% of its value on the S&Ps, and just, again, a matter of a couple of weeks. So I picked February and March of 2020, pulled my statement, and using the trade trend indicator, was able to short the futures markets as they were selling off, and made over $13,000 that month. And I was trading relatively small sizes. You can look at my contract sizes, 1, 2, 3, 4 contracts on most of my trades. So relatively small, not a lot of positions. And then in March, right, the market rebounds. So I'm spotting the bullish price action pivot. When I spotted that in March, I get ready for the trade trend buy signal off the daily chart, and I jump into the long side. So I'm just using exactly what I showed you, right? So at the end of March, I got in a little bit bigger because the market had already sold off so much, and I got a very strong bullish price action pivot with a strong trade trend buy signal. So I upped my number of positions and booked over $27,000 in real money profits at the end of March. So horrible market condition, right? Terrible situation. Trillions of dollars were lost in that sell-off in the U.S. equities markets, right? But over the course of those 2 months, I booked over $40,000 in profits using what I taught you. So backing it up with real money results, and that's the reason I show that. So I want you guys to have access. I taught you one of my strategies, go-to strategies, bread and butter strategies that I use, the price action pivots. And I want you guys to have access to trade trend to use along with it, because when you combine the two, you get that confluence and extra confirmation of the directional movement, and they're really great tools to use in combination. And that's exactly what I did in the TD Ameritrade real money account results that I just showed you for my personal trading. So Jeff has also put together a really nice package with other indicators, so you can get trade trend through that package, and I'm sure he'll talk to you about that a little bit again here in a second. You can also get access to our package. So it kind of depends whether you want to purchase through us or through Metastock. Either one's fine. And you still get everything that I'm going to show you. So you get the entire year of the trade trend signals on the Metastock platform, which is a $1,499 retail value. You also get live trade sessions. So I spent about an hour with you guys today demonstrating one of my strategies. We have many, many more fantastic strategies that we do on live sessions every Tuesday night at 7 p.m. Eastern. So you're going to get those as well. Normally that retails for $550, but you'll get to attend if you become a Trade Trend member. And I'm hosting those every Tuesday night. So I provide coaching to you guys on the session, how to use the trade trend indicator, how to incorporate it with other strategies. We looked at one of those today with the price action pivots. We have many more. We get into options-based strategies, all kinds of really fun stuff on those live sessions. And I'm there to coach you on those sessions. You can interact with me, and I'm there to help you guys out. Normally, my personal coaching retails for $1,997. You also get access to our exclusive invitation-only Facebook group. We have over 800 members who trade different strategies that we teach, as well as use the trade trend indicator. And you get access to that, which is normally a $199 access fee. You get our professional trading series online course. So again, I've taught you one of our strategies. We have dozens more across different markets, Forex, futures, options. And you can find that in our professional trading series. You can watch it at your leisure. It's over 10 hours of content and retails for $900. And ultimately, if you want to continue on with us, continue with our training and discover more of our strategies and indicators, you can do that for any market in any time frame. And then I'm going to throw in two bonuses to the package as well. So if you guys join, whether it's through us, and I'll give you the link here momentarily, or through the Metastock package, you're going to get my top 2 weekly trade trend picks. So every week on Monday night, I scan through all of the trade trend signals that came in that night, and I look for the very best ones, and I send those out. And I also send those out with an options play as well. So that's an extra bonus. That normally retails, those trade alerts retail for $997 for the year, but we're going to give you a year of those as well in the package as an extra bonus, so no extra fee there. And then we're also throwing in bonus number 2, which is a great money management ebook that teaches different strategies to mitigate risk and even eliminate risk within trades as you're taking these signals from the price action pivot setups or the trade trend indicator, and that retails for $97. So we're throwing that in as a bonus number 2 to the package. So overall, the retail value on the package, if you went and bought all of these from us individually, is over $5,000. Please don't go buy these from us individually. I don't want you to pay over, well, love for you to pay over $5,000 to be honest, but please don't do that. We've taken 80% off, so you get everything in the package for just $997 for the year. So really fantastic deal. Again, 80% discount off the retail pricing. And to take advantage of that, you simply go to altostrading.com/metastock. You can become one of the 25 limited seats that we have available today. We do limit it for the reason being that we provide white glove treatment for setup, and so does Metastock, to get you guys up and running. So that takes time and effort and things on our part. As much as we'd like to take unlimited members, we do need to limit it so that we can give you guys good customer service. Once the 25 seats are filled, we do close the offer down. You can still buy these things from us off of our website at the retail price, but if you want the 80% off discount, you'll need to get one of the 25 seats today. So there's the link. And I just only have about a minute left. I guess I timed that pretty well. So I'll pass it back over to Jeff and let Jeff close it out. Or if there are any questions that have come through, please feel free to relay those on to me. Thanks again, by the way.
Oh, thank you, Jeff. Good to appreciate it. We don't have a lot of questions coming in. It's been a bit of a quiet audience today, but Darren said, are you taking a 1-to-1 risk-reward ratio? What is the win-loss of this setup? So if you can speak to that, I know it's not very much time, but
yeah. So 1-to-1 risk-reward. If you're using that, that's often a common question that comes in, like, what's your win percentage? What's your win? That's anyone that tries to tell you that, it wouldn't be fair, right? Because I don't know what time frame you're trading. I don't know what asset you're trading. I don't know if it's hypothetical trading, which has inherent limitations, or if it's real money trading. So there's no way I could obviously accurately tell you that. And if I spit out a number, it wouldn't be fair. I can tell you personally, with my real money trading, and the timeframes and assets that I use this on, I find it to be accurate about 75 to 80% of the time for a 1-to-1 risk reward.
Cool. And I'm putting that link in the chat. I'm sure the operations is going to put it in the YouTube chat. Thank you again, Jeff. I really appreciate it. It's good to have you on. Thank you for spending an hour with us today.
Thanks for having me as always. It's always a pleasure, and wish you guys a great rest of the day. And I've got a lot of good sessions that come up, I'm sure. So yeah, if you guys want to take advantage, there's the link for you. And Jeff also put that in the chat. And if you prefer to sign up through Metastock, you can do that as well. So thanks again, everybody. It was great to be here. Thanks for your attention, and I hope you got a lot out of the session. And thanks again to Metastock and Jeff Gibby, our good friends over there. And we'll see you soon.
Thank you, Jeff. Appreciate it. Okay, and as he said, I'm going to definitely, let me go ahead and make me the presenter here. And you can definitely also take advantage of that here at Metastock. So the trade trend's been a very, very popular add-on since we brought it on. It does have the real-time signals, the detailed commentary breakdowns, full market scanning for setups, system testing, a user's manual, a getting started guide, and it's a full-blown add-on to Metastock. But what I really like is everything that you get as part of this package. You get the 12 months of the trade trend package. You get the live trading sessions, the personal coaching, the invitation-only Facebook group from somebody who's literally a hedge fund manager. So this is all going to be included as part of this package today. You can get that either through the link here, altostrading.com/Metastock, or you can also, we can set it up for you here at the Metastock side. You can give us a call at 800-882-3040. You can visit us online at metastock.com/saleschat. And everything that was on that screen, that 12 months of signals, the live trading sessions, the personal coaching, all of this is actually part of the Trader Summit Action Package. Maybe we should come up with a better name for that. But as part of that, you're going to get the Steve Bigalow CPS 2.0. You're going to get the training that we're going to do on December 3rd. You're going to get instant access to that recorded training I talked a little bit about earlier. You're going to get that annual package from Jeff Tompkins, which includes all of that stuff that was on that page. You're going to get Silas Peters' 3S code, 3 months of Magic Trader, 2 years of Stocks and Commodities. Thank you for Stocks and Commodities for including that for it. And we'll also give you Unleash the Power of Metastock as part of that, workbooks and videos. The total price on that is normally $5,289. Here today at the summit, $2,193. So you can go to metastock.com/summit deal. You can call 800-882-3040 or visit us online for metastock.com/sales chat for any of the offers. So thank you again, Jeff. This is such a great package. Like a lot of people are kind of struggling right now, and it's really, really good to kind of focus on like what the basics are, market direction, work with people who are doing well. And as Jeff just demonstrated, he's very, very capable hedge fund manager. So 2,193, metastock.com/summitdale. You get an annual package, annual access to him, his training, his recommendations, et cetera, et cetera, et cetera. You get all of Steve Bigelow's training that we've done with him, as well as the upcoming class. You get his very, very popular add-on. And then the rest of the speakers that are going to talk today. So 800-882-3040, metastock.com/sales chat, or metastock.com/summitdeal. So there you go. I do want to say very quickly, thank you to Stocks and Commodities for being part of these. I hope you enjoy these events as much as we do. I hope you're learning something. Stocks and Commodities has sponsored the event since we started it. And we've been doing this for like 10 years now. If you're watching us on YouTube, I know we have a lot of people on YouTube today, and you haven't registered, go to metastock.com/tradersummit. Fill out the registration form and you can get a free issue of Stocks and Commodities, as well as a ton of other bonuses. So let's go ahead and have you do that. I might as well. It's a free magazine for at least a month. And of course, if you spend at least $300 today, you're going to get 2 years. So you don't have to buy that full package, but you can. It's a good package. So anyway, our next presenter today is Serge Berger. Serge is really, you're going to love what Serge has to say. I was just pulling up, we were just looking at a couple of charts earlier, and he's got some really, really good ideas and some really, really good setups. He's come and he's spoken with us at the Trader Summits, I think like 4 or 5 times now. He always does a fantastic job, and we always love to have him. So Serge, I can see you. How you doing?
Jeffrey, how you doing?
I'm doing well, thank you. Let me go
Can
ahead
you
and
hear me okay?
Yep, perfecly. Like you
Amazing.
sound like an angel.
I sound like an angel.
Yes.
I was just I was just talking for 2.5 days straight at another presentation I had to do, and I hope I can make it through this.
Oh. Well, you said you don't sound like you don't sound like your horse or anything. You sound great.
Good.
I stand by all previous angel comments.
Perfect. Well, I'm on the road again here today, as you can see. So what I'm going to do, if it's okay, I'm actually going to turn the camera off so it doesn't distract people, but so people know I am here, right? This is nothing to hide.
Can you hold up a newspaper from today? No, I'm just kidding.
No, but I'm sure my phone, which has today's date.
Yeah, no, it's totally fine. It's good to see you. I'll get out of the way. It's all you.
Awesome. Thank you, Jeffrey. I appreciate it. So I'm going to turn the camera off again. It's really just so I don't distract myself. Just 1 second. Let me do that here. I think I did it right. There you go. Perfect. And I'll get the questions box up. I think I should be able to do that here. All right. Perfect. And you guys can hear me okay? Yeah. And I think Jeff is going to be monitoring questions on the other outlet there as well. So we should be good. All right, perfect. Well, again, thank you all for joining us here. It's on a Monday. Markets are getting a little bit of bid, and we had a lot of news this week. Earnings. We got economic data. A lot of stuff. But what I'd like to show you is something a strategy that I've been using now for 16 years. Is something I started at the JP Morgan. And when I was an investment banker there, and I'll show you guys what it is, how it works, and really why it works, and why I think this market, more than anything ever before, is perfectly right for this. And it's income. How many people in here are looking for more of an income from your portfolio? That's something you guys are interested in? Right. So if you're looking for a yield, income is actually not even the legally correct term, but like a yield from your portfolio. Like if that's something that you like, I think you're really going to like this. So let me show you what that looks like. Now, just quickly, Jeff was kind enough to give me a quick intro. And again, as I said, this is something that I started working on with my managing directors at JP Morgan originally, and then as I moved on to the portfolio manager side, we started tweaking with it and started moving it into equities and ETFs and currency markets and even crypto, and it's just been a lot of fun and very nicely profitable. So we'll show you guys what this looks like. So at the end of the day, if we look at the S&P 500 right now, or at least when I took this chart like a couple months ago or something, I guess one of the questions we have to ask ourselves is the S&P going to continue to rally over the next 5 to 10 years at the same clip that it has for the past 5 to 10 years? And while there's really no right or wrong answer, because obviously we don't have a crystal ball, or at least I don't, I will at least put some perspective around this. So if you look at the S&P 500 for the past 10 to 15 years, has returned about 10, 12 years, excuse me, has returned about 15% per year, which is way above average. So usually when you come out of a period when you've had such significant historical outperformance on an index, it does mean revert. And so we think we've entered a very different environment that's full of opportunity, but also an environment where returns have been brought forward. So just buying an S&P 500 or buying your average stock, or really doing many directional strategies, is going to be much more challenging for the next 5 to 10 years. And maybe some of you folks in here are working part-time or full-time. Maybe some of you are retired or soon to be retired or thinking about retirement, right? And that's when it's important to start considering strategies that can give you some sort of a yield in your portfolio. Again, I'm going to call it an income, that's for the lack of a better term. So this brings us to a piece of research by Morgan Stanley, and I just want to point this out. And the only thing that you have to look at on this screen is that 2.4. If you can look at that 2.4, what you'll find is this is what Morgan Stanley's forecast is of what they expect the S&P 500 to return on average per year for the next 10 years. So that's a 2.4%. If you think about that, the S&P having returned 15% over the past 10 to 15 years, that is much less. And I guess one of the questions everyone should probably ask themselves is this something you can live with? Can you live with a return of just 2.4% per year? And I think this is just crucial to respect, and something. And again, it's an honest question. Does that work for you? We all know we have a lot of inflation out there, right? We all know that. There's nothing new. We all know that GDP is going to normalize, so the economy is going to slow. It is slowing notably. And it's also factual that if the S&P 500 has a forward PE of about, I think we had it about in the mid to low 20s in December of last year, we tend to see very low single-digit returns for the S&P over the next decade. And that's really just another way of showing you or telling you what that Morgan Stanley research was all about. So in short, I and our research team at the Study Trader, but also at Blue Marlin Advisors, which is our investment advisory firm, we expect a lot more volatility and choppiness going forward. And it really just all translates into lower stock market returns. So buying your favorite tech stock, buying the S&P, buying the NASDAQ is extremely unlikely to give us the same returns over the next 5 to 10 years as we've had over the past 10 years. And so we have a couple of dice here. We have 2 dice, actually. One is black and one is red. And if we look at these 2 dice, the story is as follows. The black dice, the red dice. The red dice is a very normal dice. It gives you normal odds of making money. The black dice is a very special one. It gives you odds of about 75% of making money. Which dice would you guys take? Who would take the red dice and who would take the black dice? Right? Pretty clear everyone probably wants to take the black dice. What if I told you that the red dice, which has about a 20% chance of making money on any given trade, also has a 20% chance of when the trade hits, it's a really big profit, right? Okay, so you have a 20% chance only of making money, but the trades that hit have a really big or have a above average gain. What if I told you that the black dice, which is kind of magical, it's got a 75% chance of making money, period, right? Which dice would you prefer now? And for a lot of people, the answer still is the black dice. Why? Because you want certainty. A lot of people are very happy with a 75% chance of making money, period, and prefer that over a 20% chance of a big payoff, because you want certainty. You want an income. Again, particularly if you're looking for another source of income. Maybe you're working part-time, full-time, especially if you're going into retirement or thinking about retirement, right? That's an important discussion to have. And this gets me to the next point. How many people in here are trading and investing to make money? If you're in this business to actually make money, if you're trading and investing to make money, type in A into the chat box. Yeah, so that probably should be most of you. What about entertainment? How many people are in it just purely for entertainment? Purely for entertainment. Like, you don't care whether you make money or not. It's just entertainment to you. Type in B. Okay. Now, I'm going to give you some statistics. Historically speaking, most people are in the business, they think, of making money, period, not for entertainment. Yet, many people treat this business as if they were using dice, the red dice. Remember, the red dice has a 20% chance of making money, but when the wins are quite big. So if you're in the business of making money, and that's all you want to do, just money, you want to make money as frequently as possible, monthly, quarterly, whatever the goal is, reasonably, one would use the black dice, which has a 75% chance of making money, right? Not home runs, but you have a 75% chance of making money. You want certainty. Most people treat trading with the red dice, which is also why they don't make money. I think a simple yet crucial adjustment should be considered currently in this market as we have it right now. Let me walk you through it. If we look at the S&P 500 and we break it down into its monthly distributions, meaning its monthly returns, you look at the chart on the right here, you can see that it's kind of uneven. You have some good months, you have some bad months, and you have anything in between. So for those of you that are looking for a steadier stream of positive return, a yield, a dividend, whatever you want to call it, an income from the market, it's really difficult to make money with most strategies because most strategies actually track that random distribution of the S&P 500. And by the way, Jeff typed in A in terms of what he's in this game for, which is perfect. Good answer, Jeffrey. So that's not a really good situation. If you are using a strategy that is basically just tracking the random distributions of the S&P 500, then it is very difficult, dare I say impossible, to reach that steadier stream of positive returns. Again, whether that is a monthly positive return or quarterly, again, whatever you're in the game with. And so basically, optically kind of looks like this for most people. So most traders and investors at home that are proactive will have a profit and loss curve that looks like this mountain range, where they make some money, so they climb up that hill and make money, and then they give it all up again after, a few trades. So they do really well for like a whole bunch of trades, 5, 6, 7, 8, 9 trades, positions, and then boom, after a couple losing positions, they're right back from square one. And they do this over and over again. And that's frustrating. And I'm sure some of you can probably relate. It's frustrating because, well, number one, obviously you're not making money. But number two, you're putting in a lot of effort for nothing. And so in turn, what this leads to is these sort of stagnating or losing accounts. And then we lose confidence in ourselves and in our strategy. And before we know it, we're essentially gambling. So we don't want to do that. So what I'm going to show you guys here is, again, with what I started working on and developing while I was at JP Morgan, is a process that, yes, it's low stress, and yes, it's got high probability. Everyone could try to say that. But most importantly about this strategy is that it's extremely repeatable, and we're going to use the Metastock platform also to actually show you how we find those trades. You guys can use that tool as well for that. So let's have a look at this together. At the very core of this strategy really lies the sort of phenomena, if you will, of a steep slope that goes vertical. Let me stop scrolling here for a minute. But when you have a steep slope that goes vertical, basically what happens is you have an extreme greed situation take place, or extreme fear, and it looks like this. So you have a steep chart that goes vertical, so it goes from this to this, and at some point that asset could be a stock, could be an ETF, could be a currency futures contract, what crypto for all I care. It gets so overbought that it's going to stall for a period of time. And that's where our opportunity set comes in. Okay, you can see that here in the opposite direction as well. You can see a steep drop followed by a vertical collapse, and at some point it gets so oversold that it just simply can't continue going lower at that rate, right? And so this leads us to a strategy that needs a little bit of clarification, because lots of people are being taught to generate income from their portfolio, particularly with options that, in my view, is an extremely risky way of doing it. So when we talk about options statistics, lots of people will tell you that the odds are strongly in favor of people who sell options. And while that's technically true, unless it's done right, it's actually just simply not true. And it's very dangerous to believe this. So what they will tell you is that up to, could be less, but up to 75% of options that are held to expiration would expire worthless. And so in turn, what then is being said that, if you are just buying a call or a put option and you hold it through expiration, you thus only have a 25% chance of making money. So very simply, by their logic, if you sell an option, you could have up to a 75% chance of making money. And again, while technically on paper there's some truth to that, the problem is that in reality, this is simply not something that can be done because of what happens between the time you put the trade on and expiration. So some people are being taught to use weekly options, very short-dated options to do this. And I can tell this to you empirically. One of my previous jobs as well was as a hedge fund analyst. And I can tell you that hedge funds who sell short-dated options premium blow up. Not right away. It can take a number of years. But between 80 and 90% of those funds do blow up. And we don't want that. We don't want anyone to blow up their retirement. No one can afford that. We don't want anyone to blow up their income or whatever assets they have. So that's a silly thing to do. So again, what we're going to do together here is we're going to look for these steep slopes that I showed you before. And those steep slopes then lead to these vertical moves. And they give us the sign of exhaustion. We then want to make sure we use very liquid options, and we're going to do something very specific. And even if you've done something like this before, you think, I can almost guarantee you have not, because we do this in a very specific way that I've actually never seen anyone really do this way, which is probably also why it works so well. And that's point number 4. We're going to be selling far out of the money call or put spreads using options that are expiring 2 or more months out. Again, stay tuned. The details are important, very important. And then we rinse and repeat this on a monthly basis to really try to generate that income or that positive return or that yield from our from our portfolio. Again, we're looking for these steep slopes that have gone vertical, like this particular stock or ETF or whatever it is. It goes vertical, it goes steep, and then vertical, and it just simply can't continue higher for a while. It stalls. That's all we're looking for. Ultimately, it does go down, but again, more importantly is that it stalls. Here too, you can see a steep move. I think this is actually Netflix. Steep move, vertical move, and then it stalls. Right? So this is the kind of thing we're looking for. So again, when a steep move leads to a vertical move, usually the price will tend to stall, whether that's to the upside or the downside, the initial move. So what we're going to do together right now is we are going to look at Meta, which is of course Facebook, the Meta platforms. And what I'd like to do is I'd like to show you a historical example here first. And the historical example is going to allow us to put a little bit of perspective around this, because you can see when this stock had a steep move, every time it had the vertical rally, essentially what ended up happening is that vertical rally ended up in essentially the stock being exhausted. I think everyone can see that, right? Can you guys see how that happened? Yeah. So the stock gets exhausted, and then it simply stops going higher. And that's really all we're looking for. We're not asking for the stock to drop like crazy. It's simply an exhaustion pattern that we're looking for. And when that stock gets as exhausted as it does, it will tend to stall. So instead of trying to make a very directional bet, if you will, all we're really doing is we are going to make a bet that the stock isn't going to go in a certain direction, which gives us the probability of making money in various different directions. Okay, are you guys following me so far? Right. So this is really, really important to understand. We're looking to have a very high probability of making money, period. Right. We're not looking to hit a home run, because we're trying to generate something that's a bit steadier in terms of the returns that it gives us. So what I'm going to do is I'm going to go over to the next chart here, where I will be able to show you this in a little bit more clearly. It's the same chart actually, it's just here I drew a couple more annotations on it. And so what I'm doing here is I'm showing you where Meta once again got to the upper end of that range. And again, this is a historical example. We're going to go into the current market here shortly on the Meta stock platform. And what you'll see is the stock got extremely overbought. Now, when the stock gets extremely overbought at that point, again, from a steep rally, you get the vertical move, then you get to a point where you ask yourself, could I maybe take some profits when you get up here? And of course, if one owned the stock, we could certainly take some profits. I think everyone would agree that's not an unreasonable thing to do. But if we wanted to be a little bit more, I'm going to say, a little bit more aggressive, trying not to use those kind of words, but you know what I mean, then maybe we could even short the stock, or we could buy a put. I'm sure there's a lot of people here that use options. So we could buy a put. The only trouble with that is if we buy a put at this point, or we short the stock, unless it goes down, we cannot make money. In other words, if the stock goes sideways, we can't make money. And if it goes higher, of course, we also can't make money if we buy a put. So the stock literally does have to go down for us to make money. And that's a bit of an issue, because the stock at any given point can do one of three things. It can go down, it can go sideways, or it could go higher. You guys following this so far? So if I'm in the business of trying to make money on a more consistent basis, I want an income, again, I'm retired, I need to have a part-time job, full-time, whatever it is, whatever reason you want some sort of a yield or a positive return on a more consistent basis with a very high probability, then making the bet that the stock is going in a specific direction, and by the way, if you make that bet, not only does it have to go in that direction, it has to go there basically now, and it has to go there in by a lot. It has to move a lot. But what if I take the other view on that and say, listen, I don't really care whether the stock goes down in this case. I'm okay if it goes down. That's fine. I'll make money. I'm okay if it goes sideways. I just don't think it's going to go up here. As long as it stays below there, I have a really high chance of making money. And what if I could tell you we could construct this trade in an extremely risk-averse way? So specifically in this example, what we did, we sold a call option at the 125 level. Okay, that's here. And we bought another call at the 130 level. And we received $100 per contract deposit in our broker account. So when we do these trades, we actually receive money up front. We don't pay money up front. And you can see in this specific example, the stock, it actually did go lower. And I will show you examples in a minute where that didn't happen. We made just as much money. But in this example, the stock did go lower. And that spread was reduced to 24 cents or basically $24, which essentially just means that I now pocketed a profit of the difference between the money we received when we opened the trade and what it cost us to close the trade. That's 76 cents in options parlay, which basically means $76 per contract or $760 if this would have been done with 10 options contracts. You guys following me so far? So again, for those of you folks that are in this business to actually turn a profit, that's all you want to do is make money. And those people, the same people that chose dice A before, which gives you a really high probability of turning a profit. Doesn't this make rational sense to do, right? Yet so few people do this, and the reason people don't do it is because number one, it's not being taught. And when it's being taught in exactly the wrong way. So I'm going to show you guys what we're doing. Okay. So this is a good example. Now, two important things here that make this work so well for us. And one thing is that we don't use short-dated options. Short-dated options for someone who wants to generate a yield, a positive return on a consistent basis, making money, period, in the market is not your friend. We use options that expire much further out in time, 55 to 80, 90 days. That's number one. But we also don't hold those options, those trades for more than 2 weeks on average. Okay? So we're using options expiring way out in time, but we also don't use short dated. We don't hold those trades for very long, is what I'm trying to say. All right? That combination is what makes this work. That's why over the years, we've had an 80, 85% hit rate and an annualized return on these portfolios of about 30 to 35%, right? If you're in the business of making money, doesn't that sound attractive? Okay, yet most people will opt with that dice that only gives them a 25% chance of hitting some sort of a home run. I'm not saying there's no room for that in a portfolio, but if you are in the business of making money, maybe that shouldn't be the main strategy. You guys following so far? Right? So let's look at a couple other examples. And Tesla, it's the same idea, right? What we do here is we had a situation where the stock dropped very sharply, and then it collapsed, and we were able to sell a put way below the market, way below. So much so that the stock really didn't have to go anywhere, and we were able to make $2,250 up front and keep $1,882. I'll show you guys in the next example here. I'll show you this on this example quickly so you can see this. So basically here, and this was the S&P 500, the SPY in March 2020, and we were able to just simply make the bet that the stock isn't going to go much lower. So in other words, the S&P had dropped 30% in 3 weeks, and we didn't buy it. We just said that we don't think it's going to drop more than another 20% over the next 2 weeks, on top of the 30% that just fell in 3 weeks, right? And so we were able to just use an option in March, a June option in March, that paid us $105 or $1,050 with 10 options contracts. And on March 24th, just 8 days later, we were able to buy that trade back or close it for an 11.4% profit. But the S&P didn't go anywhere. It literally just went sideways. So how cool would it be to be able to make money if the market doesn't go anywhere, if it goes in your direction, and even if it goes against you to a degree, you can make money. But again, the important thing here is that you structure it right. It's also important that we understand how to actually find these trades. And that's where the algorithm comes into place, where that I developed when I was working, when I was an investment banker at JP Morgan. So I look for these kind of credit spreads opportunities. Really, that's the first thing I do every week, every day, every month. I look for that because I do want some sort of an income layer in my portfolio. On top of that, of course, one can still do other things that have more of a 25% chance of making money, right? That red dice we talked about. I'm not saying we can't do that, but if that's our main thing, then we literally have a 25% chance of making money, which is neither good for the soul nor for the portfolio for most of the time. And I'm sure a lot of you folks can probably relate to that right now. So let's look at Meta stock. And I'm going to show you guys a bunch of examples here. We're going to look at some more recent examples in just a minute. But can you guys see that green arrow down there? Right? This is when our algorithm, the one that I started developing when I was at JP Morgan, and I'm going to quickly tell you the story. So when I was at JP Morgan, as I was an investment banker in the fixed income world, one of the things that we were trying to find out is what constitutes extreme near term, so a few days to a few weeks, what constitutes extreme near term overbought and oversold conditions in something called a credit default swap. If you don't know what that is, don't worry about it. It's basically bond insurance. Okay. And we were found that very consistently a specific parameter worked for that very well. And I ended up finding out that that works equally as well, if not better, quite frankly, for stocks, ETFs, and other asset classes. So when you look at this arrow here, this is where that algorithm that I developed, or we developed at the time together at JP, told us that it's extremely unlikely that this stock is going to continue to go lower at that rate for the next 1 to 2 weeks. And of course, you can see in this case, United Airlines bounced very sharply from like, what, $32 back up to like 45. That's a giant move. So what we would do is we would use this strategy and well below the market here, sell a put option and then buy a put option against that, which means I would make money whether the stock went higher, as it did, whether it went sideways, or even if it went against us to the downside, right? Doesn't that give us a higher probability of chance of making money? And the reason why this is a very conservative strategy is because we are using options that are expiring way out on time, and we only hold the trades for 2 weeks. And oh, by the way, we never hold any trades through earnings or any other major known events. Okay, so this has really been thought through, and trust me, we would not do something like this if it wasn't extremely thought through and extremely well proven for now. I think I've done it for 15 years. Look at this stock. This one gave us an extreme oversold signal right there at the June market lows or the summer lows. And look at what the stock then did. It stopped going lower. In fact, it moved from like 88 up to 94. So we would sell a put option way below the market, buy one a little bit below it for protection. So we never do any naked options. That would not be, purposeful for this. And we keep that trade on for 1 to 2 weeks and generate that income, keep that credit that we received, and move on with a very nice profit. Or in this example, CMS Energy. Look at the stock. It told us oversold. What happened over the next 1 to 2 weeks? The stock stopped going lower. It went from 62 to 66. I think it ultimately went to like 72. And all we would do is sell a put way below the market, buy a put against it a little bit lower, and move on with the profits. GameStop. I know everyone knows GameStop, right? That was a fun one last year. You can see the stock got extremely overbought. This was in March of this year. Can you guys see that red arrow? And the stock then dropped from 180 down to 80. It literally fell by $100. So how nice would it be to know that this smart algorithm told us the stock is extremely and this, guys, we're not talking about a little bit overbought. We're talking about like disgustingly overbought, if that's an appropriate thing to say, or like very oversold if it was oversold, like not a little, but a lot. Okay, and so he would sell a call way above the market, buy a protective call against it, keep the credit, keep it on 1 or 2 weeks, and move on. Here's Walmart. Check this one out. Way oversold, right? What happened to the stock? Did it stop going lower? Yeah. In fact, it rallied about 10, 8%, something like that. Right? Same deal. This is gold, the GLD. Look at that. Look at that overbought signal. You know? And I'll show you a few more here. Actually, let me quickly bring this over. So here's this is Dollar Tree. We just got a signal here a few weeks ago. Let me bring this over so you guys can see all this. Check out Dollar Tree, DLTR. Look at the oversold signal we got in August, a month and a half ago, something like that. And look at the one previous in May. What happened to the stock? Did it stop going lower for the next 1 to 2 weeks? Yeah. In fact, it bounced like crazy there, and here it rallied nicely. So all we do is sell a put below the market, buy one below it, against it, take in the credit, keep it on 1 to 2 weeks, and move on. Show you a few more here, if you guys would like. Got another one here. This is Veru, V-E-R-U. Check this out. This got an overbought signal, extreme overbought. And what happened to the stock? Dropped like a rock. Dropped from 22 down to 12, $10 off the stock. All we do is sell a call above the market, buy one against it for protection, keep it on 1 to 2 weeks, and move on. Who likes the idea of having a really high chance of making money, period? Forget the home run strategies. Listen, everyone can talk about, I can talk to you about home run strategies. It doesn't serve the purpose of many people, though. It may serve a purpose in a little part of someone's portfolio, but really, is that all you want to do is just throw darts at the board, throw Hail Marys in the fourth quarter, you know, with 4 and 50? Probably not. And this is particularly true in the current market environment. And I'm sure a lot of you guys are probably agreeing right now or kind of nodding to yourself. Here's Walmart. Again, this is the May one I showed you before, but I also want to show you this one here. This was Trade Desk, I think it was Trade Desk. I don't know. Just type it into Metastock. I'm sure you can find it. Trade Desk. Overbought, TRD maybe. Overbought. See the arrows and what happened to the stock? Plummeted from 75 to 45. But again, it doesn't have to do that. That's not even the point. The point is that it'll stall for a while, and that's where we make our money. We sell the call way above the market, buy a protective call against it. We keep it on for 1 or 2 weeks and move on. And this, by the way, works intraday as well. If anyone's a day trader, you can use this algorithm intraday as well. I don't do credit spreads intraday, but I did want to show you or mention it to you that this works very well intraday as well. So just keep that in mind next time you are opening this up. And if you're a day trader, again, this can be used intraday as well. So let me just show you. Let me show you a couple here. Just one more time. Let me go back to this one here. So this is Veru. Just it's optically very clear what happened. Let's go to Dollar Tree, just because I think that was the first one we looked at. So here's Dollar Tree, right? So this one, look at this, the signals we got on this one. Extremely oversold in May, and the stock rallied sharply. But again, it doesn't have to rally. That's the point. All the algorithms is telling us is that extremely overbought. It's almost impossible, and I say almost, for the stock to continue to go lower at that rate, right? Same thing here in August. It told us that. So instead of buying the stock, and that's not the point, we don't buy the stock. We sell a put way below the market using an option that expires 55 to 90 days out. And that's important, right? That elongated option, those long-dated spreads. Then we keep the trade on for 1 or 2 weeks and move on. We never want to hold a short-dated option, and we don't want to hold this stuff through earnings, right? So this is really, really important, this understanding of the risk management of this kind of a trade. So again, I ask you, are you in the business of making money? Are you trading and investing because you want to make money? Or are you in this business largely for entertainment and you just want to throw some Hail Marys, right? And again, empirically, I can tell you that most people are in this business to make money. They truly actually want to make money. Yet, they don't treat it that way. They use that red dice, the one with 25% chance of making money, whereas the 75% chance one that has the really high chance of making money, period, is really the one that probably most people realistically would use if they weren't being constantly lured that shiny object that they're ultimately chasing. And so I think, as I've seen here, this is a process that really works. We use this strategy also at Blue Marlin Advisors. So this is actually being traded and invested in with our clients. Blue Marlin is an RIA, an investment advisory firm. And so I'll introduce you to what's called the options income secrets, because that's why, again, a lot of you here are here for that today. You're here because you want a steadier stream of positive returns, and you'd like to know how you could possibly do that. So the options income secrets package is here exactly for that. And everything that is needed to use this strategy to make it work is included. You're going to get that steadier options income strategy that I've been showing you here today. That's what this is all about. That has been producing very steady positive returns for us over and over again. And I'm going to give you that low stress, high probability, I'm going to call it cash flow or income strategy, for the lack of a better term. The benefit is that it starts giving us steadier and more regular positive returns, again, a yield, an income, a positive return. And it means that we don't have to second guess our trades. It knows that every month we have a very reliable strategy to really put the odds in our favor, and ultimately dollars in our account. Now, with the course videos that are included here, you're going to learn exactly how we use these options, how the strategy works. The indicator that's included, which you've seen, is going to help you and allow you to find these trades every single week. So you can do this over and over again. And you know, trading is all about having a process. I really, it's hard to overemphasize that. So when you follow a cheat sheet that's here exactly for that, isn't that helpful? But of course, as I said before, I want to give you an edge in the market as well, which is why I'm going to give you the indicator and access on Metastock, on the scanner as well to this. So this is not only about education. I want everyone to have an edge in the market, like many pros do. There's a reason why winning traders win when they do, and it's not only based on knowledge. Now, you might be asking yourself, Serge, how do I scan for this thing? Well, I'm going to show you guys this on Metastock in a minute. It's super simple. You can install it in a bunch of different platforms as well, but we're here to talk about Metastock, of course, right? So you can either install it on different platforms, or again, obviously you can switch it on a Metastock. Now, let's talk about it in Metastock. I've shown you all the charts in Metastock. That's important, right? You saw the beautiful red arrows. As soon as those arrows stop printing, so on that day, for example, there's no longer an arrow, that's when the trade becomes valid. Scanning it is a breeze. You literally just open up the scanning tool on Metastock. You load the vertical X Pro indicator once you have access to it, and it's going to spit out these trades, tell you which stocks are overbought, ripe for the bear call spread that we talked about, and which stocks are oversold, ripe for that bullish put spread that we talked about before. Very simple, very straightforward, and all on Metastock. Now, again, you can install it on other platforms as well, just so you know. But of course, here we're talking about Metastock. So, what makes the Vertical X Pro indicator so great in my mind is that it gives you access, has given us access to the highest probability options credit spread, income, yield setups that exist. Now, again, this indicator can also be used for day trading just as well. I do it every day. But the income part that I'm here to talk about here today, that steadier, high probability chance of making money, we have had a success rate of about 80%. So roughly 80% of trades we do make money. The trades that go against us lose very little on average, right? These are average numbers. And that's because we don't hold anything through earnings. We use options expiring way out in time, holding it only 1 to 2 weeks. That whole every little detail here is important. And it's also very important to know when to do the strategy. And that's why we created the Vertical X Pro, again, on Metastock and some other platforms you can use it. So I'm going to give you access to this indicator, to this platform, that you have a foundation that whether you're new to trading, some of you might be new, or whether you've been doing this for a while now, and whether you're retired or soon to be retired, maybe you're just 30, 40, 50 years old, and you just want to trade, right? It doesn't matter what your situation is. You have access to the strategy, to the indicator in this tool, so that we can rely on this month over month, quarter over quarter, to really give us a really high probability of making money, period. Again, this is not about hitting home runs. This is about making money, period. And if you are in the business of making money, if that is why you're in this business, that really should be the number one objective. So when we talk about the Options Income Secrets package, everything that we use to make this work is included here for you as well. And you can see what some of the people are saying. Dave, for example, he wrote to us, he said, if you follow the rules that Serge lays out, you can really make a good, steady income. It says that right there. He wrote to us the other day. Timothy wrote to us, great indicator, great strategy. It's my bread and butter strategy. And that's really what it is. It's bread and butter. So we talked about who this is not for, right? If you're in the business for entertainment and you don't care whether you make money or not, this is probably not something you care for. But if you are actually in trading and investing to make money, which I think most of you probably are, then that black dice is much more important, right? So if you break down everything that's included here, here's what it looks like. There's a trading course, a course about this strategy and this indicator that's included here. That's $199 on its own. The twice monthly, and I'll talk about those more in a minute, twice monthly member webinars are $497. We give you a trade alert in every single one of those on our own. And of course, that's in addition of you actually using the indicator yourself. We have an 80% hit rate of profitable trades in there alone. You get access to the Vertical X Pro indicator, right? Which again, it's available in a bunch of platforms, including obviously Metastock. We have an Iron Condors Made Simple bonus video in there as well. So the total package value here for the first 50 people is $2,693, but we're going to knock 90% off. So that means for you folks here today on Metastock's Summit, you only pay $297. And that's not a subscription fee. That you never have to pay that again. You're a lifetime member for $297. You own the indicator. You have access to our twice monthly live member webinars, where not only do we teach you exactly how to use it and make it work, we also give you a trade every single time. That's $297. That's it. You'll never pay that again. You're a lifetime member in this awesome community, by the way, that uses this indicator. I mean, we have, I don't want to quote exactly, but we probably have about 6,000 to 7,000 members that are actively using this, at least, maybe more. And they're just loving it in these webinars. They come back every month, twice. They want a new trade. They give us new ways of doing it, how they're using it in all sorts of awesome ways. It's such a pleasure. So it's www.thesteadytrader.com/meta, and Jeffrey's already typed that in, so thank you for that. You can also use PayPal, by the way, when you go there. So you can use your credit card or PayPal. If you prefer to call someone, if you have more questions, anything like that, you can call Jason at 401-203-7389. You can also purchase it with him, by the way. You can call Jason at 401-203-7389, or again, you go to thesteadytrader.com/meta. And thank you, Jeffrey, also for typing that into the chat box. Really appreciate that. So we do these member webinars every month, twice. And so when you get to the members area, this is what it looks like, by the way. So you can just click on this button here, so you install it. We have a team that can help you install this, or actually there's nothing to install, actually. It's super simple. On Metastock, it's just activating it basically, but it's all there. In fact, Jeffrey made a lovely video. Also, all the member webinars are recorded. So if you ever miss any of these member webinars, we just did one on October 19th. We're doing the next one, I think, next week. They're all there. So what happens in these member webinars, we walk through every single thing about how to use this correctly and teach it to you every single month, twice. But we also give you a trade in great detail every single month, twice in these members. So if all you want to, if you don't even want to use the indicator, which I would certainly not advise, but I'm just saying, if all you want is a couple of trades and have access to the indicator on Meta, Stock, and other platforms, that works too. But I would certainly say use it. It's October 27th, 11 a.m. Eastern, 8 a.m. Pacific is when the next member webinar is. So again, you can go to thesteadytrader.com/meta. You can also call Jason. Again, the number is in the chat box that Jeffrey was kind enough to put it in there. A couple of points here that I want to just bring out before we wrap up, because I want to give Jeffrey enough time to wrap it up here at the top of the hour. Again, number one, this is limited to the first 50 people, and the price actually does stop there. So at $297, it's only available for you guys right now at Metastock. That price will go up. In fact, the order form actually stops. It's a 90% discount right now. The value is $2,693. So if you can see the value of not only doing this strategy, but using an indicator that finds us extremities of overbought and oversold ratings, where the probability is extremely high of making money, period, right? Which is what we're all in this business for. I would highly encourage you to consider this. thesteadytrader.com/meta. Again, if you have other questions, call Jason. That's what he's there for. He's happy to talk to you, answer more questions. Phone number is 401-203-7389. Does this work on stocks? Yes. Does it work on ETFs? Absolutely. I use it on ETFs every month. Does it work on currencies? Yes. Does it work on futures? I use it on futures probably every day. So yes, this works on all different asset classes. Again, if you want to use this for income, i.e. using credit spreads, that's one thing. But some of you may say, hey, I like to live a little bit further on the edge. Then yeah, if you want to day trade using the indicator, that can be done too. It works intraday. I use it on 5-minute charts. But folks, if you're joining right now, make sure you join us in actually it's this week, isn't it? This is this week, October 27th, I believe. Yeah, it is. It's actually Thursday at 11 a.m. 8 a.m. Eastern, 8 a.m. Pacific, and join us there. These webinars are important to join, or at least you watch the recording of. You get the recording sent to you right away after the webinar, so you'll never miss anything. It's all there. So that's all I have. I really hope this was informative. And again, I think the question here everyone has to ask themselves honestly and seriously is: are you in the business of trading and investing to make money, or are you in it for entertainment? If you are in it to make money, you should like something that has a really, really high chance of making some money. And again, I'm not saying you can't use that red dice, but understand that red dice has a very, very low chance of making money. It could get a higher return, but it's got a low chance. I hope this was helpful. Jeffrey, I'm going to pass it back to you. Thank you so much for the opportunity and for helping me out earlier before as well.
Yeah, no problem. Do you have time for a couple questions?
Sure. I'm going to put my camera on. Is that okay?
Oh, sure. I'll turn mine on too.
Camera boys.
All right, cool. Hi. So, and the sun is just right. I get like little spots on my face. It's awesome. So this is a good one off of YouTube. Cuckoo Kachuglin wants to know if this is
awesome
going to work with indexes like the S&PX, SPY, et cetera, et cetera, et cetera.
So if Cuckoo Kachugla, if I got that right, is looking to day trade it, be more proactive, then I use it on indices every day, but for quicker trades, right? If you want to use it for swing trading on the daily charts, I mean, you absolutely can get an extreme move, overbought and oversold in the indices, but like they have to move sharply. So I use this on a lot of ETFs. So if you're just saying I want to do this for income or whatever, if I want to do this for day trading, then absolutely. If you want to use it for, again, the credit spreads, ETFs, equities, yes, you'll get some signals, of course, in the S&P and NASDAQ and all those, but just remember, it's looking for an extreme overbought and oversold that has been quantitatively tested or been used now for 16 years whenever we developed at JP Morgan.
All right, and I'm back. my go-to webinar decided that I wanted a break, so I just shut down. So let's see, we had one more question. Let's see, I got a little distracted for that. Samuel had a question. He wanted to know if strong reversals are very likely, but do you ever take directional trades? win percentage would fall, but wins would be much higher, would they? Question mark. So that was
no, it's an awesome question. So the short answer is I will do that, but I will do that mostly intraday. What you also can do, and this is something we talk about in the member webinars, it's one of the reasons we do those member webinars every month, extensively twice, like for life, by the way, like this is just a lifetime deal. What you can do is you can start with a credit spread and then add a directional trade if you want to, if it really starts to move you. So the answer is yes. Keep in mind though, again, what the purpose of it is, why we're in this business, right? But yes, the short answer is yes.
And then going over to GoToWebinar for our last question, does the course explain how the indicators work? From Darren.
Well, I'm not going to give you the code if that's what you're asking for, but the course talks about the methodology. The member webinars, we go into great detail. I mean, it's super simple, by the way, like how this works in terms of like how to use it. So the member webinars, yes, absolutely. Every month, twice, we go into great detail of how this works, why it works, and all that kind of stuff.
All right, perfect. And we do have more questions than we have time for. But if you guys have any questions, feel free to reach out. Oh, I lost the phone number, though.
Oh, I'll tell you. It's 401-203-7389. This one?
Yeah, okay. 401-203-7389. We're getting a lot of questions on YouTube, and unfortunately, we're just out of time. But Serge, great job. I appreciate it.
I haven't called Jason, and again, for those of you guys that are joining, I mean, everything about this gets covered on Thursday in the member webinar. And again, we do this twice every month. But please call Jason. He can answer, a ton of stuff, and that'd be awesome.
All right, awesome. Thank you, Serge. Appreciate it.
Great
having
you. You guys.
You take care. All right, let me go ahead and do this real quick. I'm gonna do me. All right, cool. And there we go. All right, very cool. Hope you guys are enjoying that. Do you want to say really quickly thank you to Stocks and Commodities for sponsoring today's event, 17,000 trading articles. Great sponsor. We love them. I'm going to tell you between every session how much we love Stocks and Commodities and how much we appreciate the work that they do. If you're watching on YouTube, I know we have a lot of people on YouTube today. Thank you. Like and subscribe. And then as soon as you're done liking and subscribing, go to metastock.com/tradersummit, fill out our registration form, and you can get a free issue. Just make sure to check mark the option to get a free issue of Stocks and Commodities magazine. And absolutely free, no commitment with that. Again, if you spend $300 or more today, they're actually going to give you 2-year subscription as part of the subscription to Stocks and Commodities magazine. So I do also want to mention the Trader Summit Action Pack that we're doing today. This is a great package today. We're going to include the Candle Profit Systems 2.0. It's been reviewed in Stocks and Commodities twice. One of our most popular current add-ons for Metastock. Very, very good. We're going to include as part of that the training that we're going to do with him on December 3rd and recorded training as well. Some sessions that we recorded back in 2020. You're also going to get Jeff Tompkins' annual package with all of the training that is included in his stock picks and all of that stuff that was on that big old list of stuff that he includes. We're going to give you Silas Peters' 3S code. We're going to give you 3 months of the Magic Trader software, 2 years of Stocks and Commodities magazine, and Unleash the Power of Metastock. Normally, you could buy all this stuff separately from us for about $5,289. Today it's $2,193. So go to metastock.com/summit deal to do that. Give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. So this is a great package. If you're not familiar with Metastock, if you're maybe joining us on YouTube for the first time today, or you can go to webinar, we've been rated the #1 software program in our price category for 29 years straight in a row. That's incredible. We're very proud of it. This is a great collection of some of the best add-ons that we offer. Metastock.com/summit deal, 800-882-3040, or metastock.com/saleschat. So there you go. All right, and then I talked a lot about us too. So if you just want to try out Metastock and see what the commotion is, yes. Ooh, let's go ahead and do that. Thank you for letting me know. How about now? Yeah. Okay. Thanks. All right. We talked about this, but if you want to find out why we've been rated so highly for 29 years in a row, and you just want to do a 3-for-1 offer on Metastock, buy 1 month, get the second and third for free, visit us online at metastock.com/tradersummit 3-for-1. You can also give us a call. We're happy to help you with any questions that you've got. The phone number is 800-882-3040 or metastock.com/salespchat. So anyway, hope you guys are enjoying everything. How are we doing? Again, if you're watching on YouTube, make sure to like and subscribe. It does help a great deal. Our next guest today is Silas Peters. Silas has done a number of webinars with us. He's going to show us a pattern that I think you're going to like quite a bit. Very, very good pattern. Silas, let's go ahead and bring you on here. How you doing?
Hey, Jeffrey, can you hear me okay?
I'm doing very, yeah, I can hear you. You sound great.
Hey, how are you?
I'm good. How are you doing today?
Doing good, doing good. I wasn't sure if I was supposed to also be logged into YouTube at the same time, so I was a little nervous. But
it isn't necessary. If we get some questions on, you're welcome to log in there if you need to, but if you have some questions, I will ask you on behalf of our YouTube audience.
Great. Can you guys see my screen?
I see, we can see a PowerPoint right now, correct? And now I can see some beautiful charting. Is that Metastock 18 you're using?
This is Metastock, isn't it? A thing of beauty.
yeah, okay.
And hopefully everybody can see these lines here, which I'm going to go into great detail later on. But let's just say that right there is pretty special. So are we okay to go now?
It's all you. I'm out of your way.
All right. Thank you so much, Jeffrey. Glad to be back with Metastock. Always a pleasure. Always a great crowd. Very honored, humbled to be back here. Let me do a quick audio visual, guys, just to make sure we're not talking into a black box for the next hour or so. Let me know if you can hear me and see my screen. I think Jeffrey said we did get an A+ on that, but I'd like to see just a few more participants. Let me know if that's the case. We'll go ahead and get rocking and rolling. All right, perfect. All right, well, like Jeffrey said, thank you for the intro. My name is Silas Peters. I am with Trades Trending. You are here to see price action is king, how I crack the code to more profits with a simple 3-step strategy. And very, very excited to be here. Very excited to be here because this is what I call literally my 15-minute blueprint strategy. I'm going to teach you the exact rules so you have an actionable setup that you can begin applying immediately, literally today, if you wish to do so. So I'm going to encourage everybody to post your questions, your comments, your feedback, etc. I will get to those in the end, but it's very important that I actually teach you the strategy that you are here to learn. So let's go ahead and get started. We must first take a quick moment to read this from the guys at the regulatory governing agencies and our attorneys who require us to share. We know that past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. So if you know that and understand that, let's go ahead and get moving. I want to first introduce myself again. My name is Silas Peters. I'm a proud husband and father. These are my beautiful blonde hair, blue-eyed beauties down here on the bottom left. Here's us standing in front of my alma mater at the University of Alabama. And 3 days after I graduated, I sold my car, packed up my belongings, and I headed north to the great windy city of Chicago. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. I was bitten by the trading bug and never really looked back. While there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, working with large block order flow for hedge funds, banks, CTAs, and the like. Also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office sales, and support. Also worked as a private family office investment consultant, where we managed about $2.5 billion in funds. And then I hold or have held these various in futures securities licenses. And in 2016, I launched my publishing brand, Seasonal Swing Trader. And then in 2020, I am a partner and co-founder of Blue Marlin Advisors, our registered investment advisory. So I've been there, done that. But let's talk about my journey. It was not always easy. In fact, there was a learning curve, several obstacles and hurdles on the path to where I am today. First step was obviously learning. School cannot teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account. I blew up several others in what I like to call revenge trading. Finally went back to my roots, settled down, worked my process to find overall consistency. But enough about me. Let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? Well, this is actually not my trading desk. I found this on the internet. I thought it was humorous at the time because I feel like it's what those on the outside looking in think this is what trading is or what it should be. In fact, this is not necessary at all. Now, my dad did look like this in Chicago for obvious reasons, but I've since pared back to just a handful of monitors for trading, charts, execution, and the internet. But all this does is really just bad for your eyes, to be one, and it leads to paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? I'm raising my hand here. I've been there, done that, got the t-shirt. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the research they thought they could do? They've dotted the I's, crossed the T's, they've got their finger on the mouse, getting ready to pull the trigger, and then what happens? Some line crossed this line, or maybe somebody on CNBC said you should be shorting and not buying. Whatever the case is, you end up freezing and you end up missing out on the opportunity altogether. So I see a lot of you here are in that boat. Well, my goal today is to get rid of paralysis analysis for you. We're going to kick it to the curb and make things simple. Now, what does everybody trade here? I like to see what everybody trades. Where are you at? You trade stocks, options, futures, FX, maybe cryptocurrency. I trade all of these actively. I trade stocks and ETFs, options, FX and commodities, and or the futures and commodities and FX. Don't trade crypto actively. I am quote unquote invested in cryptocurrency, but I do trade these on an active basis. And so what I'm going to share with you today works on all of those markets, regardless of what you trade. It's highly accurate, works in all time frames, and it's 99% mechanical. But again, most importantly, it's simple. We are not here to teach rocket surgery. We're going to keep things simple. That is going to be the theme of today. In fact, I have an agenda and promise to you. We're going to learn a simple and mechanical setup together that is repeatable regardless of the market or time frame. So at some point during this workshop, I'm going to ask you, have I fulfilled my promise? And I hope to see a lot of yeses. But I think the most powerful thing that can be done is show proof. As they say, proof is in the pudding. I'm going to show you some setups here that you will be able to identify with your eye. Setups like this, a 36% move to the upside in GE and a 26% move to the downside in GE. Or this trade in Barnes Group, a 21% move to the downside, followed by a 63% move to the upside. Bank of America, a 28% move to the downside or a 60% move to the upside. Futures, 4-hour chart of gold futures, $1,800 a contract, followed by a $900 per contract move. The S&P, day traders, we have 8 points, 2.5 points, 6 points, 4 points, almost $1,000 a contract in a single day. Does everybody see the potential here? Does everybody see the potential? Forex traders, 150 pips to the downside, 450 pips to the upside, followed by 160 pips to the downside. These were just target one projections, and you can see that they actually went even further. So with all of these examples I just showed you, can it be this simple? Well, we know trading is not easy. It is not easy at all, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff, but most of it was garbage. The single most important part of this journey was when I learned to keep it simple. once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on price action, following one simple pattern, it all started clicking. So if you're sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. I am telling you right here, right now, that this is a simple mechanical setup that anybody can learn. And you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. How you could join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we will be discussing today is the 1, 2, 3 pattern, also referred to as a 1, 2, 3 top or 1, 2, 3 bottom. Who here has heard of the 1, 2, 3 before? Let me know. Seeing a lot of yeses, surprisingly a lot of no's. And this is one of the most fundamental technical patterns in the textbooks, but highly, and I mean highly, overlooked by most traders. Let's talk about this setup together. Setup is purely price action based. The pattern is comprised of a low and a higher high and a higher low and a break of that higher high. In the case that we're going long, same rules apply, but inverse of short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. A strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. And I will stress it works extremely well at other high probability technical patterns. Important support and resistance, head and shoulders tops, bottoms, double bottoms, and more. Let's take a look at the basic mechanics. We're going to start with the 1, 2, 3 top. So a 1, 2, 3 top is when we're looking to get short. We're looking to short the stock or buy a put. And basically, we're looking for point 1. Point 1 is when we trade up, finds the highest peak at resistance, and then begins to move back down. We get our number 1. As the market retraces lower, and then pulls back up, we get our number 2. And as the market stops making these lower highs and pulls back, we get our number 3. We could have gone higher as long as we didn't take out the number 1. We have a 1, 2, 3. A 1, 2, 3 top trader is looking to get short on breaks or closes below the number 2. Let's look at the 1, 2, 3 bottom. Same rules apply, but only to the flip side. Here we have the market trading lower. Once we find our lowest low as support and pull back, we get our number 1. As the market trades higher and then pulls back, we get our number 2. And when the market finally stops making these higher lows and pulls back, we get our number 3. 1, 2, 3 bottom traders is obviously when we're looking to go long, i.e. buy the stock or buy a call option, sell bull put spreads. We're looking to get long on breaks or closes above the number 2. Let's look at some chart examples. We're going to start with the 1, 2, 3 top pattern. Now, this is a daily chart of the Australian dollar. Australian dollar futures. If you don't trade futures, you can look at FXA, which is the ETF that tracks the Aussie. Currency traders or FX traders can track this using Aussie USD. You're going to see the exact same pattern and setup. Now, this is a daily chart. And on daily charts, we're ideally looking for 52-week highs or 52-week lows. It's not an absolute rule. Nothing's set in stone there. We'll talk about ways later where we can kind of dial that back to find more opportunities. But for these example purposes, we're going to look at dailies on a 52-week high or 52-week low. So we have this red 1 circle right here. Why? Because it's a 52-week.
Hey, Silas, we can't hear you all of a sudden.
Oh, hey, hello?
There you are. You're back.
Okay. Sorry. Let me repeat that. So we're on a daily chart of the Australian dollar, and we have a red 1 circle because that's a 52-week high. As the market trades lower and then pulls back, and then back down, we have a 1, 2, 3. Now, the market could have traded all the way up here as long as we didn't take out that number 1 high. We have a 1, 2, 3. So now you already know the rules of the system. With a 1, 2, 3 top, we're looking to short on breaks or closes below the number 2. So what about the other important ingredients of the recipe? Like, where's my risk? Where's my target? Where am I putting limit orders? Very, very important. So we're looking to get short here. With this pattern, our initial risk is going to be above the high of the 1. Our initial target is going to be the distance between the high of the 1 measured to the low of the 2 measured down. So you'll see right off the bat, it's a 1-to-1 risk-reward ratio. Now, we can do better. It's very important, though, to let the market begin moving in your anticipated direction. So as we start taking out these important structural swing lows here, we can then move our stop to where? Where's the next logical area to move? Above the number 3 high. So we've quickly cut our risk by maybe 60, 70, 80% in this example. Okay? Let's look at another example. Another daily chart, this one on Walmart. We have a red 1 circle. Why? Because this is a 52-week high. Here we have a nice 1, 2, 3 top pattern. We know pretty much everything we need to know where the 99% of other traders are struggling. Where are we going to get in? Well, we're looking to get in on breaks or closes below the number 2. Where's our risk? Initial risk above the high of the 1. Where's our target? The distance between the high of the 1 measured to the low of the 2 measured down, which is about $5 in this example. You see we traded to the downside. Let's look at 1, 2, 3 bottom examples. This is a 15-minute chart of the E-mini S&P. Now, on a 15-minute chart, or any intraday chart for that matter, do you think it makes sense to look for 52-week highs or 52-week lows? No. So on an intraday chart, we're looking for what we call session highs or session lows. That means the futures and Forex markets trade virtually around the clock, opening up on Sunday afternoon, trading through Friday afternoon with just a small break in between each day. Wherever you start your trading day, you're looking for new highs or new lows. So if you're sitting at the 3 a.m. European session, maybe the 9:30 Eastern New York cash open, maybe the last hour of the day, you're looking for new highs or new lows from that point forward. So that's exactly what we get right here. This is a new session low, which gives us our number 1 point. Market trades up, pulls back down. We have a 1, 2, 3. Remember, we're looking to get long here. Let's talk about a couple of different entry points. Aggressive traders may work a buy stop, a tick or 2 above the number 2 high, and you're triggered into the trade as soon as we bust up above the number 2 high. Now, a couple of alternative entry methods that I prefer is either to A, wait for the market to come back and retest that breakout area, or let the market come back down and what I call hook or give a second pass up above that number 2. So what is likely going to happen in this case? Sometimes the market will break out of the number 2, leave you at the train station. There's no need to get your feelings hurt. There's plenty of other opportunities. But what else is likely going to happen? Sometimes the market will bust up, roll back down, and continue to roll back down and stop you out. So by waiting for what I call a second pass or hook back up, that gives us a second confirmation that the market does indeed want to possibly move higher. Also got a 1, 2, 3 bottom on a weekly chart. A hell of a way to catch some longer term position type moves. Here we have a multi-week low and a high probability double bottom. 1, 2, 3. You see we break above the number 2 on this large bullish candle, go sideways for a few weeks, come back down, hook back up and retest. That's our confirmation to get long Apple. How do we buy Apple? How do we participate in this move? We buy Apple stock, we buy call options, sell bull put credit spreads, whatever your flavor or style is, there's a way to take advantage on these types of moves. Now, I hate to burst your bubble, they don't all work. We're all big boys and girls here. We know that there's no holy grail in trading or in life. Sometimes we'll get failed trades. This is a trade I probably took in my live account. Here we are moving up, making new session highs. We get a trend line break. 1, 2, 3. Those aggressive traders may be getting short on that initial push down, or if you wait for the second pass, you get short here. You're up by maybe a couple points or so. I'm not real sure. If you exercise any money management, you are stopped out above the next swing high, above the number 3. If you sat on your hands and didn't do anything, you're stopped out at the initial risk point right here. But guess what? We have a new setup. This high is greater than this high, so we have a new 1, 2, 3, and we're able to get short on the second trade for a profitable trigger. This is what I call a no trigger or avoided trade. It's neither good, bad, nor ugly. It is what it is. But let me tell you why I like this. What's going on here? So we have a 1, 2, 3 bottom looking to get long here, but the market decides to take out these lows. So we start to count over. Here we have a 1, 2, 3 looking to get long here. Market takes out these lows. We start to count over. 1, 2, 3 looking to get long here. We're able to get long that third attempt. But what is likely happening here? What is likely happening? We have price making lower lows, but our oscillator is likely making higher lows. New lows, new lows, new lows, higher lows, higher lows, higher lows. We call that what? Divergence. So whatever this oscillator is, could be a MACD, RSI, stochastics, does not matter. When we have that happening with these patterns, that gives a little bit of extra icing on the cake. Let's look at 1, 2, 3 pattern trade management. Again, the confirmation of entries on a break above the 2 or B point for a long, or a close below the 2 or B point for a short. Exit strategies. I would say strive to go for the distance between the 1 and 2 point if you're trading one contract. Here is a 1, 2, 3 bottom pattern. We're looking to go long. It's uncanny how more often than not it will come hit take profit 1. Remember, the distance is between the bottom of the 1 measured to the high of the 2 measured up. It's uncanny how the market will often tag that and then roll back over. So if you're trading multiple contracts, I'd say, hey, take a third off here, 2/3, half, whatever, and then you move your stop or trail your balance however you choose to manage your trade. They come a dime a dozen. You can use trend lines, 2 to 3 bar candle backs, moving averages, parsar, you name it. You got to find out what works best for you. Now, I've showed you that this setup works on any market, whether it's pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, and the Polish zloty. I've also showed you that this works up on any time frame, whether you trade on a tick, 5, 10, 30, hourly, daily, weekly, monthly, and more, and on any trading style. Tell me, what is everybody's trading style? Are you a position trader, swing trader, scalper, day tick trader? What is everybody's style? I'm going to take a swig of water here. So we got position and swing, tick, day trader, depends on the market. Not sure yet. A lot of different styles, and that's great. And the point I make here is you have to figure out what your bread and butter is. You have to determine what your bread and butter is. There's no way that I or anybody should tell you that, hey, you need to trade on a daily chart, or you need to trade on an hourly chart, or you need to trade on a 2-minute chart. You've got to figure out what works best for you, because we're all different. We all have different times we can commit, different risk tolerances, knowledge, education, and just personal preferences. So I like, these are some of my favorite time frames here. I like the 2, 5, and 10 on the intraday. I like the hour and 4 hour for day and intermediate swing. And then, of course, the daily and weekly for longer term type positions. Now, you've seen the proof. Let's view some real trade examples. Not to say that what we looked at were fake examples by any means, but let's look at some real examples we've utilized in some of our services. First one here, we're going to take a look at crude oil. Everybody is familiar with crude oil, whether you trade CL futures, USO, or other energy stocks or ETFs. Again, we're going to see the exact same pattern setup. So here we are, a 52-week or a daily chart of crude oil. We're looking for new 52-week highs or new 52-week lows, and we start here with this first example on the left. So here we have a red one circle. Why? It's a 52-week high. We can immediately identify a 1, 2, 3 top. It's a smaller one nonetheless, but it's still valid. We get short on breaks or closes below the number 2. It's what we get here. Our risk goes above the high of the 1. Our target is the distance between the high of the 1 measured to the low of the 2 measured down, which is $3 or $3,000 per contract. We quickly meet our profit objective, and then we go sideways. So I get often asked, Silas, does this work in consolidating or sideways markets? Well, the answer is yes. Yes, it does. But remember, I'm looking for new highs or new lows. But here's a nice 1, 2, 3 bottom in this range pattern. That was a very profitable trade. We get a new 1 here. Why? Because this high is greater than this high. So we get a new 1, 2, 3 top. Now, let me tell you why I got really excited about this particular setup right here. Well, one, because of the high probability 1, 2, 3 top pattern we've been talking about. Secondly, we're at a time of the year where crude and energy markets in general typically trade to the downside. And then we also have this nice clean trend line break. So we have a 1, 2, 3 top, and we got short. We quickly met our $4 or $4,000 per contract price objective. Then all we do is we follow the market, trail the market using our preferred stop method, or until we get a reversal. This market sold off another $20,000 per contract. Here we get potential 1, 2, 3s here, potential 1, 2, 3 here. We never take out the number 2. The market continues to go lower. In fact, we sold off another $10 or $10,000 per contract right here. We finally get our last low, 1, 2, 3 bottom. We break higher and we meet our $5 or $5,000 per contract price objective. Now, one thing that you may notice, if you can or cannot see, this sucker is dated 2018. Silas, this is dated 2018. It's 4 years ago. Tell me that this works in today's market. Of course it does. This is price action. Price is fractal. There are recent examples in crude oil, a $5,800 move to the downside, a $4,800 move to the downside, and more. Let's look at another market, gold. This is actually the ETF that tracks gold futures, GLD. I like to follow the futures market because it's more fluid, more liquid. You're not going to see all these gaps, but nonetheless, it's the same setup. So here we have a 1, 2, 3 top. We break below that number 2. We reach our $4 profit objective, and we get a new low. We get a new 1, 2, 3 bottom setup, double bottom. We break above the number 2, retest. We reach our $2 per contract price objective. Then we kind of go range bound again. Well, Silas, did you take these? Probably not, because I'm looking for new highs or I'm looking for new lows. But if you took these, pat yourself on the back. Here we have a 1, 2, 3 here. Trades to the upside. Here we have a 1, 2, 3 top here. Nice trade to the downside. Huge moves, huge potential. But I'm looking for new highs or new lows, and that's exactly what we get. These lows are lower than these lows. So we get, these are all new number 1 counts, okay? Here we have a potential 1, 2, 3 right here, but this guy is lower than that guy. So this is our number 1. 1, 2, 3. We gap higher 2 days in a row. You wouldn't see that on the futures chart, but that's okay. We come back down, retest, hook back above, trend line retest. That's our confirmation to get long gold. How do we do it? We buy GLD options. We buy gold futures, mini gold, micro gold, whatever your style is. You see the potential here. I want you to remember these charts and the subsequent charts because I'll show you something really special in the end. Again, Silas, this is from 2019. Show me that it works in today's market environment. Here you go. Here's a recent gold sell, $10,600 move to the downside and continue. All right, let's look at Delta Airlines. This is probably becoming redundant by now. I'm just trying to hit home the fact of how often and frequent these occur in every market in every time frame. Here we have a 1, 2, 3 bottom, a gap above, come back, retest, reach our $4 profit objective. Here we have a 1, 2, 3 top. Notice that this one gaps below the number 2. I don't trade these gaps. I've got students that will aggressively be buying put options and the like. Reaches our $4 profit objective. We get another chance to short. This high is greater than that high. 1, 2, 3. Market aggressively sells below the number 2. We get a small retest. We reach our $8 profit objective. Here we have a 1, 2, 3 bottom. breaks above, goes higher, pulls back, trades back higher at $8 plus. What about current market environments? Delta Airlines, long, 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 short. How about that? Forex traders, CAD Swissy, Canadian dollar versus Swiss franc. Here we have a 4-hour chart. We've got a multi-session low, 1, 2, 3, double bottom as well. Aggressive traders are getting long on that first push up. The other traders are waiting for that retest or hook back above. There you go, reaching 70-pip profit objective. Now what are we doing? What are we doing? We're waiting for a short opportunity. 1, 2, nope. 1, 2, nope. 1, 2, nope. Finally get a last 1, 2, 3 up here. Breaks below, comes back down, rolls back up, hooks back down, reaches your 40-pip profit objective. CAD Swissy, 80 pips, 70 pips, 35 pips, 70 pips, 55 pips, and moving. Day traders, 5-minute chart of the NASDAQ. 5-minute chart of the NASDAQ. Remember, we're looking for session highs, session lows. Here's a session low, indicated by the red 1 circle. 1, 2, 3. Market breaks above, comes down, hooks back up, reaches your 13-point profit objective. 1, 2, 3. New session high right here. Breaks below, trades sideways. We may have to pop a Tums or two. Finally rolls back to the downside, reaching your 20-point profit objective. New session low. So we get a new 1, 2, 3 count. 1, 2, 3. Breaks above. If you're lucky enough to get long on that retest, you're filled on your 30-point profit objective in about 2 bars. Here's a 5-minute chart of NASDAQ. 137 ticks, 60 ticks, 91 ticks. Do the math on that. Do you see the power of this strategy? All we're doing is trading the basic ebbs and flows of the market. So now is when I ask, why are you here? You're here to learn a mechanical done-for-you strategy for all markets and all time frames. This is the part where I ask you, have I fulfilled my promise? Have I given you enough proof? Because I'm not sure if it gets any more mechanical, simpler, easier. There's really no guessing when to get in, when to get out, where the market is likely headed. If we had 100 traders looking at the same chart, we should have 99 seeing the same thing, right? There's always some person out there that wants to overanalyze, overcomplicate things when it's simply not necessary. But wait, there's more. Do you remember when I told you earlier to remember the charts that we just reviewed? Remembering those recent case studies we went over, crude, gold, Delta, NASDAQ, and so on. Well, you're in for a treat. What if this strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there was a pending setup? I don't know about you. I would say that'd be pretty amazing. Well, here are the examples from earlier. Remember that crude oil chart? Now, I know you're smart people. You probably figured out what all this is, but let's look at this and break this down. Your green arrow is your number 1. Your red arrow is your number 2. Your blue arrow is your number 3. 1, 2, 3. Now, you might see these little chevrons here. These chevrons. These are not buy signals. They're not sell signals. They're simply telling us that, hey, we've broken the number 2 high or we've broken the number 2 low. It's just a visual aid waving at you saying, hey, we may have a potential setup. If and only if we break the number 2 low or break the number 2 high and get these chevrons, we'll get these 4 beautiful lines plotted onto our chart, just like you saw here on this chart of Metastock. Right here, 4 beautiful lines only when we break the number 2. Blue line is your entry or breakout level. Lime green line is TP1 or profit objective 1. Dark green line is TP2 or profit objective 2. And your red line is your risk. Remember that the TP1 is simply the distance between the low of the 1 measured to the high of the 2 measured up. And TP2 is 2 times the distance of TP1. Now, you might see all of these other green arrows. Why in the heck are we seeing all these? It's because we're making new lows. These are number 1 points, say we are making new lows, and once we stop printing new lows, we start to get a potential 1, 2, 3. Notice that we never get a white chevron here, or do we get any lines because we never took out the number 2. All right, let's look at the chart of gold. Here we are, same example. Here's our 1, 2, 3 bottom. We hit TP1, hit TP2. We don't get anything right here because we're looking for new highs or new lows, and that's what we get. See these green arrows? It's telling us that we're making new lows. They're lower than these lows right here. Here's the 1, 2, 3. Market just breaks above number 2. We get our plots. Target 1, target 2. You see we're getting a new 1, 2, 3 top formation right there in the top right-hand corner. Delta Airlines, here's our long trade, our short trade, here our long trade. 5-minute NASDAQ. 1, 2, 3. Right here, we break below. We hit TP1, we hit TP2. Hit TP2 to the tick. TP2 happens to be a session low, so we get a new 1 count. 1, 2, 3. Market breaks above, trade sideways, goes lower, hit TP1. We don't hit quite TP2, but it's close enough for government work. You shouldn't have lost any money. Here we go sideways. We make a new low. This low, lower than that low. We start a new count. 1, 2, 3. Market just nips its little head there above the number 2. So we get our print. We're trading up. We're looking for take profit 1. We're looking for take profit 2. But as we're waiting for take profit 2, look at what we're getting. New session highs. It clues us in that we might be needing to get ready to take a short side trade. We finally hit target 2. Here we have a 1, 2, 3. Break above. We hook back up, hook down, hit TP1, hit TP2. Pretty cool, right? All right. So is this training for you? Well, only you and you only can answer that. If you are new to the markets and want to jumpstart your success, if you're an experienced trader and want to add an arrow to your trading quiver, if you're tired of all the noise we talked about, the indicator overload, paralysis analysis, if you want to simplify what you're currently doing, maybe you're already successful, congratulations, but you want to add another strategy to your trading toolbox, or if you need a very specific step-by-step plan and want to avoid learning this on your own, it's something that you can do part-time, this training could be for you. Now, I want to show you, it does not matter if you are a swing day or scalper. Look at these recent setups. These long trade here in Cardinal, long trade here in Cardinal, short trade in Cardinal. Who cares about Cardinal taking it to the long side or short side when you have this pattern finding them for you? Google, short trade on Google, short trade on Google. Potential long setting up over here. 4-hour chart of the Canadian dollar. Huge moves, short trade. We just flip trades. We don't get married to any particular market or any particular time frame. 233 tick chart of the E-mini S&P. If you love action, you want to scout, we got trades all day long for you here on the tick charts. You can flip through multiple charts, time frames, put them side by side, but hold on. Why do all the work when you can let technology do the work for you? Here I'm scanning the market. I'm scanning for 1, 2, 3 tops across the Russell 1000. Only stocks that are optionable. $20 a share or greater. I hit the green scan button and voila. What would take me days is now takes seconds. I have got one monitor dedicated to multiple watch lists, scanning multiple markets in multiple time frames. Here's what it looks like on TradeStation. Here's your indicator component. NinjaTrader 8, here's your indicator component. Wealth Charts, here's your indicator component. Metastock, here's your indicator component. It looks so clean here on Metastock. TradingView, indicator component. MetaTrader 4, 4-hour chart of the Euro Kiwi. Long trade, short trade, short trade. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a daily process and plan. I'm letting technology, the platform, scan the markets for me, locating the setup. I go to my platform for entry and I manage that trade through its exit. It's a rinse and repeat process every single day. scan, setup, entry, exit. Rinse and repeat every single day, and you can do this too starting right now with the 3S code. So here's the offer you simply cannot refuse. For the first 25 people, we're offering up the 3S code indicator and scanner, plus my 3S code optimizer, plus access to weekly strategy and scan sessions, plus private Telegram room access, plus 3 top bonuses for the first 25 people, a one-time lifetime payment of $397. The offer link is metastock.com/code. I just put that into the chat window for you. You can also call 1-800-882-3040. That's 882-3040 if you want to speak to a real live human being and place the order over the phone or ask additional questions. The offer link is metastock.com/code. You're going to get access to the following platforms: Metastock, Thinkorswim, TradeStation, Ninja 8, TradingView, MT4, Wealth Charts. Just use Metastock? Great. Use Metastock and Thinkorswim? Great. You have access to all platforms if you wish to use so. Okay. Now we've also added a PayPal option. This has become a very popular feature. You'll see that on the offer link, metastock.com/code if you wish to use it. You can finance through them. It's a very simple process. The offer link is metastock.com/code. The weekly strategy and scan sessions. You're going to get access to my top setups. We go through day, swing trading, US code, how to use options using minis, micros. We do live scans. Sometimes we take live trades. This happens every Thursday at 11 a.m. Eastern. They're all recorded and archived in the members area. Let's talk about the indicator and scanner. Again, you're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas. Just like I showed you here, visual plot of the 1, 2, 3 with entry, risk, take profit 1, take profit 2. I love seeing these little smiley faces right here. It means we've met target, 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 target. Cannot make this up. This is a 5-minute chart of the E-mini S&P. Do the math on this, guys. Do the math on this right here. Look at these prices: $37.85, $37.62. Each point is $50. Would have paid for it many times over. You're going to get the entry, exit, stop, and target levels. You can, they're all color coded. Customizable settings, multiple look back periods. You can scan for setups only or trigger only or both. Scan for tops, scan for bottoms or both. Scan for day trade setups, scan for swing setups or both. It's all customizable for your convenience. You're also going to get access to the 3S optimizer, where you can now take the mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests across various inputs and settings to find the best optimization parameters that fits your trading style. So here's where we're running it on. I'm running it on crude oil. Here, I'm running this on a 4-hour chart of the British pound. Here we are on, this is, I'm not sure, this is the E-mini S&P here on TradeStation. And again, here on NinjaTrader. You can add and edit all kinds of variables. We've made this completely user-friendly for you to backtest to your heart's content. Also including 3 additional bonuses to make this an absolute no-brainer. You're going to get my 90-page PDF chart pattern principle trading manual and guide. You're going to get additional setups, additional strategies, how we use high probability seasonality with the 3S code. You're also going to get my 25 top option strategy guide for those that may just start dipping their toes into options, or maybe they're somewhat educated on options, how to use options with the 3S code in combination. Options can be a very powerful tool if you know what you're doing. Bonus 3 is access to our private Telegram room channel. Every week I'm posting charts in markets and analysis on stocks, ETFs, indices, futures, commodities, and currencies, all in real time, all real setups, so you can see those play out. It's basically giving you fish while you're learning to fish. Here are some testimonials. I don't ask for these. They come in all the time. But most importantly, they're people that are taking action and getting results. That's the only way that this will work for you, is if you take action. If you're not taking action, you're not going to see results. But these are people that have taken action and executing with the 3S code over and over again. So who here is ready? The offer link is metastock.com/code. I'm going to show you the offer once again, guys. I'm going to start taking some questions here. You're going to get the 3S code indicator and scanner, weekly strategy scan sessions, private Telegram room access, plus my 25 top option strategy guide, chart pattern principle trading manual, and all of my quick start guides for a single one-time payment of $397. Metastock.com/code. You can call 1-800-882-3040. And with that, I'm going to take a quick pause here, grab a sip of water, and start answering some questions. So what is the recommended time frame? Again, we covered that earlier. There is no recommended time frame. Works in every time frame. Weekly, daily, 4-hour, hourly, 30-minute, 15-minute, 5-minute tick chart. Depends on your style, your situation. If you want me to send me your symbols or anything, any questions, I will be happy to take a look. My email is support@tradestraining.com. That's correct. No, it's not a trading room. You're going to get access to Telegram room. How many trades a day? Depends on the time frame you're looking at. If you're looking at a tick chart, you're going to get maybe dozen plus trades a day. And if you're looking at a 5-minute chart, average about 2 to 3 trades a day on a 5-minute chart. Daily chart, we may not get trades for days or weeks. Let's flip over to the daily chart. We are actually just setting up, just triggered a 1, 2, 3. Look at these moves here in the S&P. Look at these moves here already from 37.33 to where we are now, 37.92. 30, let's see, what is this? 39.62 to 45.72, 39.77, 41.64. Do the math on that. These are huge moves. How do I use this with options? Great question. So in this case, I would be selling bull put credit spreads or buying call options. I want to buy calls or buy puts as close to the money as I can, typically a strike or two in the money. I do like selling credit spreads as well. So here, sell bull put credit spreads, sell bull put credit spreads. In this short example, I'd be selling bear call spreads. Do that on stocks as well as commodities. Can you get an alert? Depending on the platform, you can be alerted. Yes, you can be alerted when a market is in the process of setting up and or triggered. No, they do not repaint. Do not repaint. Can I explain the the target? Yes. So very simply, let's look at this 1, 2, 3 bottom. We have a 1, 2, 3. For a 1, 2, 3 bottom, we are measuring from the low of the 1 to the high of the 2, and whatever that is, let's just say this distance is 45 points. You're going to take 45 and you're going to add it to number 2 up to the upside. For 1, 2, 3 top, you're going to measure from the high of the 1 to the low of the 2. Let's say this is 30 points. You're going to subtract 30 from this. So for years, I'm talking maybe 15 years, I did this all by hand. I buy the stock, I say, okay, $63.52 minus $48.09. Okay, that's going to be $18.61. I'm going to add that to $60.32. Do you see this? See the problem here? Nobody has time for that. Nobody has time for that, and it's not efficient, especially when you're looking at hundreds of stocks, 30, 35 commodity markets, 30, 35 currency markets.
Silas, can you hear me?
Yeah. Mm-hmm.
Okay. We do have a quick question from Bruce. He wants to know if you prefer fractal lows or one higher low or ABC patterns.
These are going to be more like an ABC. So just these fractal highs, they'll continue to they'll continue to print for you as long as we're making new highs. Now we have the inside of the settings, we have the ability to change a lot of variables. So like sometimes you'll get these very tight 1, 2, 3s. Like this one, you'll get a 1, 2, 3 in just 3 bars. And that might be a little aggressive, or maybe, I don't know the right word for it. It's just not as clean as a pattern. I mean, I personally like to see a few bars between the 1 and 2 and between the 2 and 3. But I leave my settings at the bare bone minimum because I want to see everything. I want to see every setup, and I want to do that analysis myself to determine if I want to take it or not. But we got all kinds of settings. I want to see at least an X% of retracement from the 1. I want to see at least X number of bars between the 1 and 2. Heck, I want to see at least a pullback retracement of X before I get a 1, 2, 3 print.
That's perfect, because the other question that we had was, is it customizable? So, and I think you covered that also.
Colors to all of these displays, I think, as I literally just answered. It just depends on how, and I don't know if aggressive or conservative is the right word, because it's a price action strategy in the end. It's just a matter of your own personal settings. And again, I leave mine at the just bare bone basics, because I want, even though I'm not saying I would have taken this 1, 2, 3, I do prefer a little bit more space or more bars, more price action between the 1 and 2, 3 development, if that makes sense. But I still want to see this pop up on my radar just so I can do that own analysis myself.
Awesome. That's the end of the YouTube questions. Although we've had a very spirited debate on YouTube about whether indicators work in these markets.
Okay, well,
but not specifically questions.
Well, let me say that. And here's the thing, you know, indicators, they get a very hard rap. And guess what? I am a price action trader. This is price action at the end of the day. If you want to delete this right here, you're going to see nothing but price action. But then what do you get left with? You're going to get left with doing what I just said. Well, okay, I'm going to measure this to that. I think, okay, I'm going to measure, that's 13.5 points. I'm going to measure that from that. And by the time you do all that, depending on the time frame that you're on, the opportunity could be gone. So while, yes, this is an indicator, all this is price action. This is not a red light, green light indicator, like, so that the indicators that get a bad hat for is, all this is a tool. Yes, it is an indicator, but all it is a tool that is doing the math and the calculations for us. And by being able to program this on this chart, what else is it doing? It allows us to now take that indicator and turn it into a scanner to give me trading ideas. All of my price action strategy, all of my indicators are essentially, it's a price action strategy, but it's an indicator because we apply it onto our chart. Does that make any sense?
It's perfect. I love it. And you know, you're not looking at the indicator here. This is pure price action. June has a really good question. You know,
because we call it an indicator, and it is an indicator because we install it, and okay, we got the 3S code indicator on our thing. But and most indicators, when I think of an indicator, it's some black box thing that you don't understand, and you're just relying on whatever whoever built it is telling you to do. Maybe some lines crossing the background. I have no idea. But all this is it's the 1, 2, 3 that we'd be doing by hand, and now we're using technology to make it efficient for us. So that's what I got.
All right, cool. Last question. June wants to know, for options trading, do you typically look at 30 days to expiration or 45 days, or do you have a recommendation around options trading?
There's really no correct answer. It depends on what time frame I'm looking at. You know, I'll trade.
Obviously, if you're looking at weekly, it's going to be different.
I'll day trade options using same day expiration. Sometimes I'll use the weekly options. As far as, you know, if I'm looking at daily, I'll go out usually plus 40 to 60. But I'm often also selling options. So it really depends on what time frame I'm looking at for that setup.
Gene, thanks for that question. And thanks, Bruce, for the question earlier about the patterns. Silas, thanks, man. If you want to take advantage of that, you can go metastock.com/code. You can give us a call at 800-882-3040. And Silas, I want to say thanks for coming in today. I appreciate it.
Hey, Jeff, thank you so much. Thanks to the Metastock team. They're working really hard. A lot of great presenters today. Take advantage of the free education out there, and appreciate everybody's attendance and interest. Look forward to having all the new guys on board, guys and gals. So take care, everybody. Talk soon.
Awesome. Thanks, Silas. All right, let's do this. And then I think this time I'm going to start by sharing my screen just so I don't forget again. Anyway, as with everything that we've shown today in Metastock, it is fully integrated. I randomly pulled up this chart of IBM, and it actually turns out that it just finished a 1, 2, 3 pattern that it's hit the first profit target on. And I just love how kind of clean this is. You get all of the patterns identified, exactly where they're at. As Silas said, it's customizable, so you can go in and actually kind of set exactly, if you want a couple of days between patterns, you can. Here it's going to tell you where we may have found a 0.1. It's going to kind of break out these kind of, it's going to totally give you a good commentary around what's going on. I love the commentaries in Metastock almost as much as I love the scanning. So if you come in here to the scanner, there's a few, and we won't have a lot of time. We need to kind of move on, but we do have the ability to scan for either if you're in a long position, if you're in a short position, if you have a setup, if you have a trigger. All of those things are scannable and very, very easy to run. And for me, I love scanning because generally I stay very busy at work. And for me, the ability to go in and just identify those stocks that actually have my 1, 2, 3 pattern or my 3S pattern, very, very easy to do. Or, I just love that. For me, I can just focus on trading for a few minutes a day, run a scan, find everything, and just be done with it. Ignore those opportunities that don't exist and focus on the ones that do exist. I just love scanning. So in any case, let me go ahead and it is a full-fledged add-on. It includes all that stuff. And as we just said, it's totally customizable as well. So let me go ahead and go back in here. Again, you got the automatic pattern identification, you get the stop losses, the targets, the customizability. You get the expert advisor with the commentary, the signals, the definitions, and all of that is very, very well explained. Very straightforward, easy to use. So as part of that, Silas said it, you're going to get the private Telegram room. You're going to get his chart patterns trading course, the cheat sheet, the strategy option guide, the VIP support, the monthly strategy scan sessions, and access to all of the archive sessions. And if you don't have a copy of Metastock, if you maybe today is the first day you heard about Metastock, you'll also get a free trial if you need it. So Metastock, as I've mentioned, may have mentioned it before, 29 years in a row, it's been rated #1. I love it. I wouldn't trade without it. And if you need a trial with this, you can get a free trial to it. So here at the event today, we're going to do it as $397. We're going to give you a 30-day money-back guarantee so you can try it out. Give us a call, 800-882-3040, metastock.com/saleschat, metastock.com/code. Okay, and then it is part of our Shared Summit Action Package. So if you order that Summit Package, you're going to get Steve Bigelow's Candle Profit Systems 2.0. You're going to get the training that we're going to do coming up on December 3rd, 2022, plus all of the recorded training that we did with him back in 2020. You're going to get that trend package with all of Jeff's picks and his training and his coaching that come with it. You're going to get this 3S code with all of the stuff that comes with that. You're going to get 3 months of Magic Trader, which Peter is going to talk about in just a minute for you. 2 years of stocks and commodities, and Unleash the Power of Metastock workbook and videos. Normally the price for all of this stuff, if you go up to our website and bought it, our website, we'd pay $5,289. Here at the event today, $2,193. So you can do that at metastock.com/summit deal. You can give us a call at 800-882-3040, or you can visit us online at metastock.com/saleschat. So there you go. All right. I do want to say thank you to another one of our sponsors in between the breaks here, CMT Association. We've been working with CMT Association since it's been almost a year. In November, it'll be a year. They sponsored our conference last year, and they're great guys to work with over at the CMT. If you don't know where of them, they do a lot of accreditation courses in risk management, systems development, portfolio management. Great reputation, these guys. We're very, very happy to be associated with the CMT and glad that they're sponsors. So you can find more about that at cmtassociation.org. If you want to, you can give them a call at 646-652-3300. One of the things that you also, if you're one of the people watching on YouTube right now and you haven't registered for the event yet, go to metastock.com/traders-summit, or you can also go to tradersummit.com. If you go there, and Kelly's going to put that link in the chat, you can register. You can get a free month of stocks and commodities, and you can get a course guide from CMT Association just for registering. So go ahead and do that if you want to find out more information. It's a good way to find out. So, of course, we're Metastock. We've talked about that. We'll talk more about Metastock in a minute. The next presenter we have is Peter Dalal. Peter is a friend of mine. Peter's been working with Metastock for 15, 20 years. He wrote a product that was called FX Traders Advantage. And I remembered it was hugely successful back at the time. He spent a lot of time kind of refining the work that he was doing and has now created a magic trader. It's a great product. He's going to talk a lot about kind of the ingredients for success. Let's go ahead and bring you on here, Peter. How are you doing? Go ahead, send a microphone request over there. Peter?
All right, Jeb, how are you? Can you hear
Good,
me?
I can hear you. Yep, you're in. You're coming in loud and clear.
All right. Thank you.
Let me go ahead and make you the presenter.
Yeah.
You're welcome. Thanks for coming.
Can you see my screen?
Not yet. It says waiting to view, but sometimes it is a little bit delayed. I do see that you're sharing it right now. So.
Okay, can you see my screen?
I cannot see. Okay, there it is. Yes. And I can see the appropriate screen. I can see the Magic Trader with the automatic closed captioning underneath it. So.
All right, I appreciate thank you for having me. You and Kelly put a lot of time in this summit, and thank you for everybody who are present here or they're going to listen later. So thank you for good introduction. Yes, it is true. God knows, I started with Metastock, using Metastock in 90s, and then we started doing business together in 2003, and that's how I started knowing Jeff and Kelly and so many other people back in days, and we used to travel together, so we started knowing each other and started trusting each other, and basically that was my inspiration to create something which we launched actually in 2006. I dealt with all institutions, and then the previous company who owned it went through a lot of mergers and acquisition, and 3 years later, Kelly, Jeff, and I talked. I visited that and said, let's give a retail version instead of me only dealing with the institutional version. So Magic Trader is around. In fact, I started designing while I was traveling with them. So it's a long story. I traded with my own money, plus a lot of institution back and forth, because I came from that industry and I just wanted to have everything related to institution and for my own trading, because I got spoiled, I guess. So I have a different taste than normal. And I had a least time because I run a couple of businesses, including today. So I got to find a way I could do same thing or better without putting too much efforts into. That's the real reason why Magic Trader was created. We'll talk about a little bit more. So let's talk about today. I'm going to talk about a couple of topics. What is so special about it? And basically, there are 5 patterns which we designed from scratch. We didn't go traditional way, but brand new what I learned from institution, plus my daughter and I did our own inventions, file for patents and whatever. But I wanted to give something which is unique. So I don't have to worry about traditional stuff, and which solve my purpose and many institutions' purpose. That's what it was really created. While we have a tremendous success with my first product, and it's funny, it was only revised one and still going. So basically, I had some experience as a developer, and this time I wrote all formulas. So I could express what I learned from Wall Street and can be available to traders around the world, because some of the people will not know what is really going on there. So I wanted to have a bridge right created to transfer what I learned plus my own inventions. And I was doing while I was on Wall Street, giving them certain things which was not existing. So practice started right there. And basically, that's what you're going to see here today. The topics are here. You could go through those later, but basically we're going to talk about 5 things which you could learn. There are thousands of things, and there are 1,000 different inventions in this product. You don't need to learn all, but it is there when you are ready. So you do in a piecemeal. That's the whole game. But before I go in a further, so our compliance and lawyers wants us to read disclaimer. And before we go further, it's going to take a little time because I went through many law firms, a lot of security lawyers and all kind of lawyers. At the end of the day, it is not a slap it up. However, we are going to give you if you want, or it is going to be on YouTube, but I have to still read important stuff to make them happy. So don't get mad at me. Really, I wish there is another way around. Links also, they don't want to do it. So I got to go through this thing every single time, including when I spoke for Reuters all over the world. All right, so I'm going to make it brief so you don't get bored at least. So basically, there is a risk everywhere, right? The entire market is a risk, regardless what you trade. And as long as Refinitiv gives you the data feed, every single thing we trade all falls under instrument or market vehicle or securities. Everything is risky even on a future side. So we don't need to spend time what they are. Everything which you see on a data feed, it is risky. You should hire an independent investment advisor. I'm not here to recommend to tell you buy, sell, or hold any securities going forward. We're going to have the discussion here. It is all for education purposes only. And you could lose all the money, and some strategy you could lose more money. So you need to have an independent advisor telling you when to get in, when to get out, or hold it forever. I'm not the guy. Can tell you. Only thing I could do, interpretation of the chart with my technology. That's what we agreed with the regulators. I'm still registered. My company is still registered. We took an exemption to teach you all, and there is no safe trading system is ever been designed, right, which can guarantee profits. So please try to understand that. Now, CFTC Rule 4.41, everything we do is hypothetical, including Magic Trader is been reviewed by CFTC people in your office. And again, we have to make sure that you understand there is no guarantee here. It is all hypothetical. Even though people see in my alert room, my live trading account, it is still falls under hypothetical. I cannot repeat my own performance next hour because market changes. So if I made $1,000, that doesn't mean next hour I'm going to make $1,000. Please try to understand that. So expectation could be different from general public, but we as a professional have to tell you it is hypothetical, and we cannot even give you a statement like consistently you could make money with anything I'm going to talk about it. It is against law, right? So when we've been trained by regulators having a couple of licenses, so there is no representation is made here that the account will achieve same results, or they're going to make profits or losses, or maybe both, who knows. Now, options. We have options in integrated, and we're going to show you the example later, right? Options are risky. This is the latest supplement. You should read into that, right? And we often revise it. And I want to warn people, you may be knowing or not, I come from institution and I know these games very well. It doesn't matter what your chart says. It is a gamma and delta game. These are the most important things, and my people in my alert room are very much aware of that. And who is my mailing list, right? They're aware of that. It is not about equity anymore. It is all about the hedging and how the options are being played by dealers, market makers. So please try to understand they are risky game for you guys, and you got to be learning those games. Otherwise, this market is tough. We don't have problem because people are being trained that way. Again, Magic Trader disclaimer here. I had to tell you that we are having license, but we are not acting as a investment advisors here. Everything is for education purposes only. So do not try to take the trades I'm going to show you or whatever and go on a trade. Hire your own investment advisor. And we are not exercising any security advice here at all. And trading is risky. You could lose everything. Intellectual property, we got many trademarks, many service marks, plus patents, international patents. So we've been putting a lot of efforts and time, and we're still filing new patents and trademarks ongoing basis because we are doing a lot of inventions, which is not available anywhere. So again, I didn't do this. So Streaming Act, please consult your advisor or a lawyer to interpret the law. I'm not the guy. I'm not a lawyer, neither a CPA or nobody. I'm not even a guru. So I'm just like you. So that's the reality. I don't trade institutions. I cannot claim that I'm one of them anymore. All right. So please try to understand. This is our license ID. We are still registered, as I told you. I time to time talk about if I'm in position, but I'm not taking any guarantee because I also instruct my trained brokers because I'm busy running. So these are the guidelines. They know Magic Trader for years and they know what to do, and they may be pulling trigger. I don't know. So I cannot tell you 100% until I get all the details, right? So try to understand there's no kind of intentionally not disclosing, but maybe a time. And today I do a unique way of trading I'm not supposed to be doing, but I had scheduled trade on a Tesla, and it was a positive trade. That's the best I could tell you. And it was executed, so I got to address that. So I'm disclosing that today I trade Tesla, right? Option trade. So technically, I prevent myself trading anything when there is some event because I get distracted by those things. So I follow the discipline, but it was there, it is. Again, my company is not investment advisory. However, any testimonials, we tell people don't hype anything, and I'm the only one and is there telling people not to hype, even though you made money. Just tell, yeah, you could make money or lose money. So we don't get in trouble from regulators, and that's how we've been trained. So basically, you could also lose money and make money with Magic Trader, and we are fully telling you this can happen. There is no guarantee I could give it to you guys. Again, scalp swing, we developed this unique methodology, and every step of the way you could make money with the Magic Trader. So it can create yourself a tax event. So I'm not a CPA, so you got to consult your guys. It's a short-term game or a long-term game. All right, let's go. We finish this disclaimer business, so lawyers will be happy. And time to time, they break whatever, right? They do. Did you do this? Did you do that? Show me a copy. All right, here is recording. Try to understand. They try to make me stay in business. So today's goal of the webinar is how to trade with Magic Trader. We're going to talk about it. And how to use these simple strategies. There are too many things in Magic Trader, thousands of inventions. We got to understand it. And there are so many so many experts we have created. That doesn't mean you have to ask Metatalk to give you all whatever the versions they're promoting. That's what you get it. However, in our trading room, we discuss about a lot of inventions, new stuff. So my people get benefit out of it, and they do want everything because they see the results they're producing. All right. So basically, we're going to talk few things, 5 things out of all, and that's what major focus is today. We're going to give you some idea how you could find the best strategies and the best way of using these 5 different patterns, which are repeated patterns. And we're going to boost your confidence in trading. And we did it because of Jeff and Kelly. This is true. We're going to show you something which does all these things for you in upcoming version, but we want to give you a rundown how to do without it. And when it gets to that point, you're going to see that. So this way, you don't have to even worry about too many things. That's the goal. All right, so let's talk about this chart, which is more or less represent what we're going to be talking about it. So this chart, on the right is called magic health window. So anything you see inside this pan or window, it falls under magic health window. And all these bunch of indicators, right, except this line here, it falls under health indicator. So that's what you should know for now, for this second, right? A bunch of lines here, that's what it is. And basically, this idea came to me while I'm doing EKG, right? And I said, wow, why I cannot have all the health of security at any given time, right? I could see whether the internal health is good or this way is good or that way, but it has to do with internal health, right? Not what any analyst says or my friends on Wall Street say. I want to see what the security has a good health so I could put my money onto and what they're telling me at any given time. So out of many of those, they are embedded here, that we put this thing together. And let me put you this way, after giving all the formulas to Metastock, it took 4 months to do these things. That tells you miles of long formula was complicated to put it together, even though I've been using my original kind of setup without having final outlook like this. So it's a lot of efforts has been gone into these things, and Metastock takes 4 months to just write one indicator after having given all the formula. That tells you the complexity goes in there. And basically we discover more than 2,000 risks and combination and permutation. It's out of imagination. Hard to believe, but it is true. But it is what it is. There are so many risks involved. Now, the spectrum window has a color candles. Each candle color represents something. We're not going to go into detail. We call them price perceptors, catalysts. This turquoise bar is a catalyst. This is catalyst. And these are price perceptors, which they indicates different institution types. All right. And we have the pattern, right? We correct the code, and it is true that market is not just buying and selling. This is a buy, one color. This is another color. That tells you the story. Same way it goes with sell, bunch of colors. So I dissected all the price risk in different colors based on what I saw and what I experienced on Wall Street. Now, these 2 lines are not your traditional line. It is true that every time frame, these lines are designed independently and with a different kind of formulas. So it is also true, you can't take those and take it for granted. I could plot these lines on every time frame and it's the same like we do in a traditional lines you are used to. So please try to understand these are not those lines. They're colored same way. I could do different color here and it will not be same again. So try to understand these are not, and the trading method is different. And we teach those things into our alert room often. So let's talk about how we identify those 5 different patterns. So this vertical line is a direction line. So when you see on health window this line, that means green means we're going long. And you could see obviously we went up, right? And if you see traditional lines, oh, after the cross, now we entering here. That's the bottom line because my indicator says so, right? So this line is bullish green line, and that's what you should know. And later on, once I finish, I'm going to tell you what to look inside. So that makes your life easier. So these 2 lines, parallel lines plus little dotted line, those are the 3 lines are important inside this trading methodology we're discussing here. In other words, this purple line, the blue line are parallel and they above this dotted 0 line. That's what you need to observe in a fractions of seconds. So it doesn't take long to figure it out. If you have gone to some kind of schooling, it's easy to identify. These are the places I feel comfortable, right? There's more into other things, but today we're not talking about all other stuff here. 2 lines parallel and above that, that means we're bullish. That's what you should know. And on the left-hand side, these are the health lines, right? Purple line is above blue line, and they both are about 0. And if you don't remember, the values are 410. That's what you should remember, nothing more. You don't need to be a scientist to remember. So 410, and we good to go. So the values are 4 here. It's a 1 is the blue line value, and 0 is the dotted line. And that's what you, in a split seconds, you could observe, and you're good to go. Then third one, right, is this, we call it as a spike. These are bullish entry spike. They are dotted. You could do whatever you want to do it, but we like to have dotted, right? So these are the entry lines. So once they get in, right, it is good feeling to go in there. And that's what you need to look for. If they are there, if it is on a left side a little bit, then it's okay. It's not a big deal. And I will talk about this number 2. I was just going to say something, but I will explain to you. Then number 4, it is this small green thin vertical line. That's a pure hell. So out of this thing, I came up with an idea. I don't need to deal with all 5. So I need to have a line which protects my interest of trading. So do anybody use? And if it is not there, there's something different. So I have to evaluate. So what if it is there, I'm going. So this is my safe zone for myself. If it is there, I'm going in there. That's my attitude of trading. So I don't need to go and I trade. So it's a MACD and a stochastic and all this matching oscillator. Who cares? My line says health is good, right? And a bunch of other things good. I'm going in there. And this way, you don't need to go through this mental stress of this stochastic matching, RSI matching, and the 30 and the 70 or 28 or 60. I really don't care. And I got news for you guys. I taught for Reuters all over the country in many cities, plus 8 some countries. And I realized there's something wrong what I'm doing. Same crap. And by the time I called the broker while I was traveling, the damn analysis, I did it for 3 hours. It's out of the window because S&P futures went up. So all this thing I wanted short is out of the window. So what should I do? Find something which I don't need to do all these things. That's the frustration. While I was even traveling with Kelly and Jeff, I was underground designing this thing. And 2006, right, I revealed to one of the institution, hey, and my partner told me that this guy's in trouble. Can you help him? All right. So I wound up with Bear Stearns as my first client, right? And they were losing money and portfolio going down, right? So I had told the guy, come over. right? I'll show you how to, and we'll go and fix all these things. So I did not did this thing before that I could fix people's portfolio. That was my first experiment, and it was a good one. So that gave me a boost to deal with institutions. Holy cow, we could do that. Number 5. So this is the ribbon. We have seen on a many add-on, but this is not the same what you see. This has everything to do with horizontal time risk. So it is horizontally represented, but it has to do with all the risk involved with the time. There are many. It's not a one risk. So it also, by common sense, as you go further and further, increase the risk, right? As you go further and further, increase the risk, common sense. But these are risk-oriented parameters which affect your trading. That's what it was designed. So basically, these are all 5 right there. If they're matching, even with numbers, and I promise you, right, that I'm going to talk about number 2. So number 2, what that means? Out of 5, at least 2 matching. So the way in which this spike is designed, the base is important. However, you get notification of the half spike forming. So if I was a short, and this was my biggest problem on a Wall Street, how I know market is going to turn around? I got to go through the tape. What is Goldman Sachs doing? What this guy doing? And what is the net order flow? By the time it does, it's too late. I want to make sure the damn thing is turning around. So half spike formation, right? So you may have seen on Metastock many of the, but this is different altogether. So when those events do take place, right, this half spike will form. But how we know for sure we're going to be going? So I want to put my money. Okay, it is above the magic line. That's one. However, this gets anchored here at the bottom. So when you get the subscription, Metastock will put in your account how to use this spike. It is not what you used to. That is true, and this document will show you. Yes, it is true. So the anchoring, but I was alerted, so at least I get out of my short position. And it is also true, before that, we had this catalyst, turquoise bar, which I designed in my first invention, right, first product, and we put more parameters to that. So that also takes care of a lot of other things. And here it is showing up. That means we are no longer want to be short, and that we created in the upcoming version CT Plus has its own counter cycles. It's the biggest thing on a Wall Street, right? You want to know what the real counter cycle affecting your trade. So that's why they are there. 2 means 2, so the spike was there, right? And this ribbon was there. So good to go. And then it added 4 altogether. So if you don't feel good about that, right, then trade it here. And rest is the history. These are the pullback. So we're taking profits, right, trading, but it did not close below red magic line. That's what we use this system. So where to put the stop? So put stop underneath. And while you are here, put the stop under green line. They both works to put a stop. Depends upon where they are above or below. Depends upon where you are. So in this case, suppose there was a mean risk reversion trade. That's what we teach, right? In 2 magic lines, the risk is very low to go long. So if you got out, I like to prefer to go in here and risk. Okay, they took the profit, but it never came into that, and a little bit lower than my entry. So we teach scalp swing, right? When this thing happening, you accumulate your position. Look at the institutions who are buying. People getting out, they check people out, right? And they're taking your trade. And look what happened. So this is how it is. So let's go and talk about something else. So in general, what you learned today in a short, this is a bigger picture here altogether. 5 different patterns you putting together, we call as a little ingredients, right? But there are 5 different patterns. So thick vertical line, which you saw all over in the top, then all over in the health window, you saw 3 lines parallel, you saw that. Then you saw the entry, that's pretty good. So we're going to go long. And this is the pure health. You saw that if that showed up, we're going there. and the ribbon is the horizontal time risk. This is it. This is not a big secret about, right? We got to learn all this fancy technical analysis. Unfortunately, I put a lot of time of my life, right, until 2006 in technical analysis, and I taught everybody there's nothing wrong with that. It takes them too long, and I want something quick, and it does better pinpoint kind of results. And my risk, everything is all about risk on a Wall Street. You're talking about making money, they're talking about risk to control it. That's what everybody worried about. I manage people money. Trust me, it's not about making money. It is all about protecting the capital, what client give it to you, and you got to fight it out. And every day you got a heart attack for that. And you got to make sure you don't lose clients' money. Forget about your fees. Because if the clients are not there, you're not there. Right? It's a very intense job. And top of that, regulators, right, comes and audit you. So you got a lot of work to do when you manage people's money. Right? So I can't do both developing or whatever commitment I did with Metastock at the same time. I cannot perform that duty. So I took exemptions for now. Okay, for now. All right. I still have a license. I'm still registered, so I could go back. All right, same thing what we discussed about the bullish side. We're going to talk about bearish side. So here, when you see a vertical line on a health window, that means we're going short. When you see three lines, 0 is on the top, and this blue line has a value -1, and purple line has -4, we are happy that it is one of the pattern we're going to use in our short trade. Then again, we got this guy here, a spike, which is red color. Holy cow, 3 matching, you could take a trade. So I just don't want you to get back down with only 2 or 3 or 5, at least 2, and 1 catalyst, like a turquoise bar. In this case, you're going to see a golden bar, and I'm going to show you, if I can, a couple of charts, right? And I will give you the heads up horizon, right? Not today. You're going to see, I'm going to show you the trade on a real chart, what this catalyst do to the trade is really sometimes scary. The damage it can cause to the bull side people. So for me, shorting and getting puts is good side. So pure health. Right, so I like to have a pure health because I don't have to worry about whole indicator. Right? That's what it was designed. Thanks to the programmer. So I sneak it in at the last moment, and they say, "All right, I'll do it," because it was making easier for traders. I'm serious. Metastock, really, I did it a lot of pushing, so you could get a lot of stuff there. So ribbon is the same thing, like we talk about bullish side, but now it's in a bearish side. So what we're going to do, we're going to show that into the chart again. So let's see here. So vertical line is number 1. That's the direction line. So I'm going to recap so everybody, what you learned today in a short period of time, you don't get lost, right? So we want to make sure you are solid. So, and then these are 3 parallels, right? And the values are 410, right? And then you have a spike. Number 3, that's the direction line. That's the anti-spike. And then you have number 4 here is a pure health, the vertical line. And the 5th is the ribbon. That's what it is. Now, in this particular example, all 5 matched. So the new stuff coming up. So you're doing physically today to match all these things. How about later on? Right now, I want people to learn the original way. So you go back just in case, right? If you see only one and you are confused, at least you could go back. However, now we are going to give it to you. Not sure, don't try to drive Metastock crazy, but this is what I am planning to do it. Not Metastock, from me, right? So basically it will tell you it's 5 ingredients. So we're going to the moon, right? Yeah, we did. And it is going to be showing here how many ingredients matching. So you don't need to even match. not today, not with today elite version, but in the upcoming thing. So I just want to give you heads up. That doesn't mean other thing. I am using anything. I don't care whether the symbol is there or not. I will count physically. So don't get bogged down to this thing. Start using it, and then you will feel confidence, and then it will just make your life easier later. But that doesn't stop you doing it. How to get out? So in a bullish trade, I get out different ways. When I see anything deviation from the rules, right, I'm out. I don't wait for this line to come back. Well, some people, oh, I want to use that. Be my guest, right? Or half of the spike when it forms, I'm out. Many times I get out at PB, and sometimes I get out, and now I got to go back in there. Okay, 2 ingredients, magic line looking good, right? I'm going in there. There's nothing wrong with that. Right, and sometimes I use my common sense in a way. Okay, pure health is there, even though it's a PB a little bit. All right, we're getting out. But if it bothers me, I get out, and then I go back here. There's no cost for broker in today's market. So why are you worried about in out? Oh, capital gain. Who cares? Uncle Sam, you got to keep them happy. Pay the damn tax and get it over. That's my intentions from day one I came in here. We making money, let them take money, right? They can take 100%, at least I will be left over. I'll work hard. That's how I see, right? So cheating government is not a good idea. So you could sleep well, all right, let them make money so they could help more people, I guess. All right, this is what I was talking about, option thing. Holy cow, where to buy puts and calls? That doesn't mean that you could change your style. I always struggle. Right? What are those events? I could not worry about too much about puts and calls and which entry side. All right. So we got bull here. Oh no, that's the bear. It's not a bull. So I was just kidding around. So bear, big bear, and he said put plus plus. That's plus plus. So I don't care what it is, right? I don't need to read manual. It says there, right? And the spike came in, and the ingredients are there. I am going in there. That's my attitude. Unfortunately or fortunately, this bull failed because there was a fight. You started right here, so you got to watch that. But we have ingredients in our favor. That's where your knowledge will come handy. And there were 5 matching. And sometimes what I learned, you wait. Don't go crazy. If they want to short the market, you could think whatever you want. They're going to beat the crap out of the security. That's the way institutions are brutal. They will put, like we used to say, 5 clip. What does that mean? That means 250,000 stocks they're shorting at a time. When are you going to stop them? So your trade doesn't matter to them. They want to get the hell out of it. They're going to unload it, right? They will have a program, right? Unloading little 500,000 at a time. So they don't, nobody knows their intention. That's what I learned too. They slick and level 2, level 3 forms, and they have their own games. They show up fake positions, and they're doing opposite. So those are, I don't have time for that. I'm a retail guy now, right? Just like you. How to find that? So embedded all this stuff over here, right? And you could see, I don't have to tell, oh, I missed the entry on a put. Okay, put it here. Oh, it went up. Okay, that's not a problem because purple candle can go either way. Take the damn profit if you were in there and go back again. That's my attitude in this market. If you don't have that attitude, there's something wrong here. So I could keep adding, put. Oh, it's only forecasting here. Risk is there, but this is a huge institution color. All right, they're shorting. I'm shorting. All right, I got my better prices. They pull back a little bit. So what? And now it's forecasting. So this symbol forecasts that we're going to go down. It's telling you it's going down. You got to trust the software or not, it's you. And here also is telling we're going down. What else you want? Here is also telling you we're going down. This symbol is showing the risk, right, on a category of 1 to 6 minus 5. That means I know it's slowing down, right? Even though it's a E-type price perceptor, the security will pull back, right? People will take huge profit, and this is a type E, and then they started really. So number 6, I'm out way before that. I'm not greedy. Everybody in trading room knows I'm the first one to take your money and run, especially in this market. And if you can see here, the pure health disappeared for some reason. You don't need to be investigating. Get the hell out of that. As soon as you see -5, you type the stuff, right? Oh, there is no magic lamp. Who cares? But it tells you, right? It talks to you, right? The software talks to you. So you could use this expert if you like it. I'm not telling you should, but I like to do that. So whatever you want it. And you look at here, health also was getting different message here. The blue line went up, it's become +1. So why you want to stay in a trade? Get the hell out of that. Take your money and run. I swear to God, I saw Tesla is still going to go higher. I was speaking to them. I'm not supposed to be even trading. Discipline. I got executed because I had left the working like an order, right? And minute I'm trying to close the broker, I said, let me see. And I had a gift here. All right, Tesla. Holy shit. Right. And I saw, right, $1.99.92 price. All right. And I saw spike, rare spike. I said, get the hell out of there. Then it can go to the moon. I don't care. And it went to 235. I don't have no regret. That was a gift given to me for today. Right. But I calculated it came exactly at the same point and turned around. How did I know? Because of this software. I'm not a god. All right. So how to find these things? So there are so many explorers. Jeff is going to talk in a little bit, right? And basically, these are the most used one. So I know 5 ingredients matching, 4 ingredients matching, 3 matching, and you could get it with this software in Elite, right? And be happy. Right? I'll talk a little bit about it. I spoke already, right? I am coming from Wall Street. I was an individual trader. Then I got Series 7, 663, started making deals for institution to institution because I'm a businessman, right? And I myself, right, got Series 3 and 34. I'm still having those and I'm registered with CFTC and I'm good standing so far because I try to follow what they're telling me to do. So I got fewer years of experience and my intention hard, and everybody knows around me, I want to help leader guys. That's the reality I'm doing. I dropped so much income, right, from my running business, and I'm paying people to do job. And I'm putting time here so I could help people because I want to do a good job to serious people, not a whole thousands of people, and to create money for selling software. I really take time individually, talk to people, talk to their understanding without getting in trouble, telling them to buy or sell, but try to understand it. There are so many witnesses here, and hopefully some people will tell you. I personally call everybody. What's going on? All right. Let me tell you, my success is not because of me. It's my lovely daughter. When she was baby, I started getting her involved in all my businesses because I learned this thing from my dad, right? I got involved with my dad with a young age, so why not my kids, right? And my girl do everything what I wanted, every business I'm in. So she got so much knowledge, right? So basically, when I had these ideas, I said, you know how to all the arts and everything else, right? So why don't you help me? So she designed all the symbols and every single thing, menus. That's her, not me. So I can't take the credit. I'm the inventor or whatever. Right? She is the co-inventor of these things. And basically, this girl knows a lot about this business. So she got married, and now she moved out. So she can do everything for me. Right, we got other girls working for me, right? But this girl, right, sacrificed her childhood instead of hanging out or parties. She hanging out with the charts, and she also trades. But she works for now biggest company you could imagine. I'm not supposed to talk about it anymore. Her compliance, right? And she is working for that company. It's a publicly traded company because I'm not supposed to talk about the name because their compliance won't. So let's put a little bit, 5 minutes, we'll finish it up. So Magic Trader is designed for every market. Every market is listed here. So don't worry about it. Okay, as long as Reuters or Refinitiv gives you data feed, I could plot anything. And it is designed to give you pinpoint entries, and we call them switches. All right. Now it is designed based on only risk, not about price actions. So basically, any kind of risk, right? It assesses, identifies, analyzes it, and it has in-house or inbuilt mechanism on a reduced scale risk to be selected, right? So you could control your risk overall in trading, and it has also identification on transfer of the risk. When bulls to bear, I wanted a pinpoint entry. I want to know when that event happens. So we designed the black candles, right? And it is not just a candle, it has a lot to do with, and black ribbon where that transition is happening. So those are the monumental inventions which I struggle all these years on institution side. Now, what it did, and it will give you more time to family. I don't work after 6 o'clock unless I have to, weekend, I spend more time now because of this magic trader. And it is true, though, no disrespect to the traditional indicator. I did it, right? That doesn't make them bad, but I got a better solution. That's what only thing I had to say. So for me, I put them in a trash can for me. But you could keep them, right? They are good indicators, some of them, but it is too much time taking, too much complicated, too much interpretation to do. I don't have time. I want pure health, right? Look at this. From all these things you do in pure health, one line at the bottom, right? That gives me a time to do other things. I could look at more chart. So basically, I did the transition since 2006 from traditional teaching, right? Because I had a room for professional trader for years, right? Or licensed people, so I don't have to worry about too much, right? And I did only now magic trader. All right, so what we're going to do, but I promise you I'm going to show you some chart. So let me get that, right? I kept it open so we don't waste much time. Look what happened here. This is the catalyst, right? And it doesn't need to match everything, right? Look, 2 lines parallel is below 0 line. 0 is here somewhere, right? And this is a golden bar. And 3 ingredients match. You could do count here 2 and a spike, right? So 3. So we're good to go. And you shorted somewhere here or buy a put option. You know what that means, right? And look at the results. You don't need to be scientists. And the way which I do, we have a new patented things also, the blue lines, right? In that, if it is below both, right, I feel safe. If it goes above it, I'm out, right? And a small, I always like to look bigger time frame from left to the right, right? So this way I know what is the big game plan. Here is everything underneath. So I'm keep shorting. So I came from that side. We keep shorting. We call it a cliff, right? We 5 cliffs, 2 cliffs, 3 cliffs, and 10 other institutions. So what is going to happen? Boom, down. So you pick up one trade and you could scan these things with Magic Trader, all right? And you got to see below blue line or below. Even if you don't have blue line, it is below damn magic line. So go on and do what you need to do, right? You learn from me all these things, what to do. So then you don't need me. You just short it, right? In this case, and look what happened. Then you got to be patient, right? In this case, I would be suppose trading options. I'll be trading long put options, right? But then I could get out here too. I could get out here when I see a turquoise bar. I don't want to be there. Get out and go back again here. So that's what I've been doing it because it is scary, this market. And God knows what will happen. One guy said today, tomorrow, and that whole market goes nuts, right? So in the yo-yo market, this is what you got to take your money and run. That's the strategy I am adopting and using it right now. So what we're going to do, I'm going to show you one to balance the bull side a little bit. So let me give you one, right, Schlumberger, SLB, right? And it is the energy, so sector is going, we don't care as long as it comes. So we have a scanning, so it comes in a scan and that's the end of the story. So it doesn't matter which is there. So look at this here, Schlumberger going to the moon, yellow bar, 5 ingredients in a monthly. It doesn't happen every day. So everything you see here, yellow bar and 4 ingredients. So who cares? Get in the game, right? And look at this, what happened here. And here also 4 ingredients. Holy cow. This one is new. Nobody has it, right? And this is what I cracked the code for delta hedging, because that was, I work in a prop desk, went to the hedging firm, right? And that's where we supposed to do hedging. So I always struggle without the damn option data. I'm going to crack the code one day, and I did. And then look at this. Who was hedging? After certain, they had to buy equivalent delta. This is the proof. And we've been experimenting because I got, data from somewhere, right? Institutional data. And I know what they're doing. And we have a fun on a alert room. I'll show them evidences. That's the best I could do, right? So this is not a kind of some smoking mirror. It is happening in real time. And this is what is happening. Forget about institution. It is showing one value. That means this is happening. That's the bottom line. And look at that. So I'm not going to short this thing, right? I'm not advising anybody to do, because this can turn into a dime. I don't know. Somebody says tomorrow something. The way in which I trade, I like to get in the main risk reversal. That's my favorite. And I wait for it, right? So you don't need to rush it. I will go and let it go. When it comes down to the blue line, then I will put up another trade. So let it go. Otherwise, you're chasing the goose, and goose disappear. You disappear too. And look at the health. 7 is too much, right? It should take the profit, so it has to come down. That's the way I think about it. You can do whatever you want to do. No advice here. I'm just interpretation of the chart I do. All right. So let's have a Jeff comes in. I wanted to show you a little bit, and if we have time, we're going to do Q&A later. So So I purposely did this new bus where there is a meta stock, and you're riding on a magic trader, and on a path you saw also on a road magic trader. All right. So I like to cheat, but it can be creative. Look at the chart going to the moon here, right? Different magic zone lines it represents. So people who are existing, and I want to end this one, then Jeff is going to take it over. If you want no string attached, this is the analysis I do, and it is true. I send this analysis this weekend to those subscribers. It's free. And I told them about the neckline at 3,800, right? Or others. Look at this. And this is for inverse. I don't have the ability on this to do inverse head and shoulder. And look, I put 2 necklines. Right? People hardly talk about it. And everybody on a free list got this thing, real charts. And basically I knew, right? And I told them where they took option positions on the first slide. It's free. So you should also take advantage, whether you have Magic Trader or not. I'm here to help traders. That's what I've been doing. So this is the WhatsApp. You got to put your name and this code. So this way I could also keep track of you came from here, and it is free, no string attached. And this is the WhatsApp number. You got to send your name and full name, right? Not fictitious, full name. Don't forget we are registered, so we got to know who is there, right? So this is the code you use, right? That's meta, right? SDIE, that's meta. And contact me, I'll get you these things. We're not asking you anything to buy. I want to help the traders, and I've been doing for 30 some years. So regardless what happened, I help traders, and that's the bottom line. And then Mr. Jeff Gibby, it's all yours.
All right, thanks, Peter. We don't. Let's see. And I just put the phone number in chat for you, 917-476-4722. And then the code you want to use that via website is SDI Meta. So, Peter, great job. I appreciate it.
Thank you.
We don't have a lot of questions, but I do want to talk a little bit about the add-on. Is that all right?
Yeah, that's what I want you to do it, because I'm more or less done, and we could answer the question if they have it later after you finish.
Yeah, let me go ahead and do this. I'm going to make myself the presenter. It's going to show my screen. And just going to take the floor for just a second. Right here, oops, I can put my hair fix back in. Right here, I just pulled up IBM, which is randomly the chart that I pulled up earlier, actually. But I want to show how obvious this is. Right here, you had what is called a golden bar, and you can see there's a little bit of a down arrow here. I could go in and I could actually look at that in the chart if I wanted to. Right here, we had a bearish to bullish. Right here, we had a yellow bar, and since then, it's been trending up quite nicely afterwards, actually. This is fully integrated into Metastock, so you do have the expert advisor commentary right here. And one of the things that I've always been very impressed with this is really the detail that the commentary goes in. I find myself a little bit of a Metastock purist. I've been here for so long, and I just love it when you can explain stuff in a commentary and it's very well defined. And Peter did a great job with that. So in addition to that, of course, we talk about scanning and the ability to save time and that kind of stuff. And with this, there's tons and tons of scans that are available. So you're going to be able to find exactly what you want. This add-on is huge. It's probably our biggest add-on that we're currently selling. And in fact, I've got some numbers on it. Let me go ahead and go into the slideshow real quick. And we'll just talk a little bit about what's included. So in the add-on itself, there's 58 indicators, 47 scans, 2 expert advisors, 35 templates, 127-page manual, 102 symbols, 11 highlights. And normally this is $199 per month in terms of the subscription for the Magic Trader Elite. What we can do here, in addition to that, Peter does an educational consulting and educational alert room. And I'm certainly not going to read this list off to you because it's huge. The amount of stuff that they cover in this educational alert room is really incredible. And one of the things that I find, and I'll let you read a few of these, I'll just try to talk a little bit so you can read it while we go. Or if you're watching YouTube, after you like and subscribe, you could even pause and kind of look through kind of everything that's included. But one of the things that I find particularly impressive about the educational alert room is the retention on it and how many good comments we get and how much good feedback we get on it. So this is a room that you go in. We have the hours right here. It's Tuesday at 5:45 a.m. to 7:45 a.m. Eastern time. Friday, 5 a.m. Eastern time to 7:45 a.m. Eastern time. And then during the market open, what they're going to do is they're going to give you 5 days a week market messages via WhatsApp and messages also on Sunday in terms of what to look for. So normally this educational alert room by itself is $299. And we're going to offer you a special on both of them. So in addition to that, though, before I get to that, you have the magictrader.com, the Facebook group. There's a lot of support that's available as part of your Magic Trader subscription. What we're going to do here as part of this, so we've got the Magic Trader Elite Room, the Educational Elite Room. I'm going to talk about the recorded trainings in just a little bit, and then the access to the more education portal. This is a value of $2,493. The special that we're going to give you today for the Elite Room and the educational service, we're going to give you 3 months. If you're a new subscriber, this is available new subscriber only. And basically the way this works is if you buy a month, we give you the second and the third month for free. So the discounted price on this, the 3 months that you'll get for this is $498. Again, that's new customers only. And that basically subscribe for a month, you'll get 2 months for free for first-time subscribers only, available here at the show. Actually, we're going to kind of give you until the 24th. You can sign up for it between now and the 24th to do that. Okay. Again, $498 for that. You'll notice a little bit of another bullet down here for the fundamental recorded trainings. And I saved a special slide for that. One of the things that we did with Peter, and I can't remember exactly when can't remember exactly when we sat down and recorded this, but we went through a very thorough training on this. I think it was, when was that? Anyway, there's 4 modules and basically very, very thorough in terms of the fundamentals, the introduction, the purpose of the ingredients, how to use them. This training is amazing. And normally it retails for $9.99. If you want to get it as part of your extended trial today, you can pay $7.99 for it. So if you want, the packages that were available today is you should definitely do the buy 1 month, get 2 free months on both the Elite Room and the Magic Trader Elite add-on. That'll be $498. I'd also recommend that you go ahead and get that Magic Trader Elite fundamental recording, which would be $799. So that's available here today. You can do it between now and 10/24. New subscribers only. Okay, give us a call, 800-882-3040. You can also post those questions to metastock.com/saleschat. Andrew, you asked a really good question. Does the system work on iOS systems? And so iOS means Apple, if you're not familiar with that. For Apple, it does work, but it is a Windows-based product. So you need a fairly current, actually, it wouldn't even be considered current. You need an Apple, any of the Intel-based architectures that they've been doing lately work great. And then what you need is Windows. So as long as you have that, I've seen it working on iOS. It works really, really good on iOS as long as you meet those requirements. So that's a very, very good question. Appreciate it, Andrew. Peter, I still don't see a lot of questions, but we are a little bit over time.
Okay, so if there are no questions, we want to respect the next
Other than the
speaker.
Yeah, we're okay. I'm the next speaker. So I do want to say thank you for your time. Thanks for coming in. That was great.
No problem. Thank you and everybody who came here or listening. And you could reach out to Jeff or Kelly for any questions you have it, and they will get back to me. And please educate yourself for free. We're not charging, no string attached. And go on a WhatsApp and request it, because that's how the broadcasting feature works. If you don't request it, I can't send it to you, right? Because whatever the rules are from, Meta, I guess, Facebook. So please use that, get educated, and we educate unconditionally to a lot of people.
All right. Thank you, Peter.
Okay, thank you.
Appreciate it.
Thank you, everybody.
All right. Also, let me go ahead and do this. All right, and then let me go ahead and make myself the presenter again. Oh, I am the presenter. All right. I also do want to mention, as part of the summit deal today, we are going to get access to Magic Trader Elite. You'll also get Steve Bigelow's Candle Profit Systems 2.0, Steve Bigelow's training that we're going to do on December 3rd, 2022, plus the additional recorded training, plus the recording on Saturday as well. So you're going to get both of those. In addition to that, you're going to get that annual package from Jeff Tompkins with all of the bonuses that he talked about, the trade alerts, the trade room, all the training, those kind of things. All those will be included. You'll get 3S code. You'll get 3 months of Magic Trader. You'll get 2 years of stocks and commodities, and you'll get Unleash the Power of Metastock. Normally, that would be $5,289. If you do it at the event today, we're going to give it to you for $2,193. I hope you've enjoyed the sessions today. These guys are awesome. I think it's been going well. How do you think we've been doing? Let me know in the comments, and I'll read them out as long as they're good. All right. While we get on to me a little bit, I do want to thank Stocks and Commodities for sponsoring the event today. 17,000. They've been just great. I've already talked about how many subscribers they've got and how many articles they've got and stuff like that. I want to say thank you to them for the sponsorships that they've been doing for it'll be 10 years. This January, I think, that we've been running Online Trader Summit. And for all 10 of those years, they've supported us at every single event. Thank you, Stocks and Commodities. We appreciate it. Anyway, and of course, Metastock. I'm going to talk about Metastock now. We're going to talk about one of my favorite systems that's included for free in Metastock for now. And so we'll get into that. I might mention as we go that we've been rated #1 in our price category for 29 years in a row. Let's go ahead and do this first. All right. I'm going to reread the legal disclaimer just because I'm talking for an hour. How are we doing? Thank you, Coach. Appreciate that, Coach Y. She said it was a great webinar. So, all right. Today's demonstration is designed to instruct you on Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. Hope you enjoyed that. Here's a little slide you can read while I talk about who I am. My name is Jeff Gibby. I started here at Metastock 25 years ago, back in March. And it's been a great opportunity for me. I remember when I started, they taught me what a stock was. I mean, that's how new I was. And I started actually in inside sales. I did that for about a decade, and that was a lot of fun. If you had questions about Metastock or requested information from us, I'd be the person that you're likely to talk to. Probably 25% chance, depending. After that, for the next decade or so, I was in charge of like all of our a lot of our BD, like our business development, our business to business relationships. That's where I met people like Steve and Peter and the people that are speaking today. I've Dr. Alexander Elder, John Bollinger, Tyler Wood. You know, I'll just stop name dropping about that. But I certainly have learned a lot. I've had the ability to travel a lot, and it's been a really, really good opportunity. I love working with our partners, and I still do that. It's still part of the job titles and the job responsibilities that I have. Now, my official title is Director of Sales, and I manage a lot of the online events. So all of the events that we do online, I generally kind of pull together. The summits that we do, in a couple of weeks, we're going to have a massive conference with about 40 guest speakers. I hope you come to that. It's going to be a lot of good fun. But I do that, and in addition to that, I'm also in charge of our sales guys. So it's a great company to work for. I love it. It's also a great product. I trade with it every single day. Well, every single day that I trade. Let's put it that way. So sometimes I'll be like, oh crap, the market just closed and I forgot to read my scans. I guess I had to wait till tomorrow. And so every day that I trade, I certainly absolutely use Metastock. So when I started, as you may have gotten on the sides, we were owned by Reuters. I started in '97, and it turned it from Reuters to Refinitiv to Thomson Reuters, and now it's Refinitiv. It's also owned by London Stock Exchange Group. We did purchase ourselves back from Reuters and Thomson Reuters back in 2012, so we're an independently held company again, but we have a really good relationship with them. And that's been really good for us because if you're not familiar with Refinitiv, they're one of the premier providers of news and research, right up there with Bloomberg. And as a result, we have been able to power our software with data from over 200 different exchanges, thousands, hundreds of thousands of instruments. And that's been really, really good for us because not only is it really, really good data, we cover hundreds of exchanges. We get a lot of customers from India. We have the National Stock Exchange in India, the Bombay, all of the major exchanges in India. We have London, we have Australia. And it's been very, very good because over the years, I can land in Saudi Arabia and show our software on Saudi stocks with some of the best data available, literally institutional strength data. So there you go. All right. The one other thing that I'm going to talk about, oh man, hold on just a second. We are going to edit this on the fly. Okay. 29 years in a row. As of this year, it's been rated #1 in its price category by the readers, not the editors, the readers of Stocks and Commodities magazine. So those of you that have been using Metastock for a while and have rated us #1 year after year after year, I appreciate that. Thank you. I'm very, very proud of it. It's one of the last things I'm going to talk about before we kind of get into the class today. Let's do that. Let's get into the class today. Do you guys have stocks that you want to look at? It's time to start typing in some symbols in the chat boxes. If you have questions as we go, every time you see me look over here, I'm looking to see if there's questions. So hopefully I don't miss any, but if you have questions, make sure to type them in. If you have stocks that you'd like to look at, I'm going to look at your stocks today. So make sure you type those in as well. Okay. And let's go ahead and kind of talk a little bit about what we're going to talk about today. So today's class is called 3 Steps to a Successful Trade. I'm sure you've heard the trend is your friend. We're going to identify trends on both a primary or long-term basis, a short-term basis, and an intermediate basis. I'm going to show you how to use this method to find clear entry signals, stops, exit signals, et cetera, et cetera. And I'm going to show you how to use this method that's included with Metastock to manage risk and stop losses. Okay. Now, why particularly do I want to talk about this today? I wanted to shake it up. A lot of times I like to come in here and talk about the advantages of system testing or the advantages of scanning. I love scanning. Scanning's my favorite part, the ability to scan through the 3,000 optionable stocks and find the ones that have maybe a position I want to take. I do that almost every day that I trade, if you remember a second ago. But I know we certainly can talk about Metastock in terms of power tools like testing, scanning. We've got a patented forecaster that's amazing. And the expert advisor in the commentary. The reason I kind of like to talk a little bit about this is for these reasons. It's easy. Okay, so this is a fairly simple method. There's 3 rules. I'm going to go through all 3 of those rules. And as long as I do a fairly decent job, you should be able to understand exactly what I'm doing. It's also objective. I'm not going to say, well, if they raise interest rates again, that's not going to happen. If they bring in some spending or if they increase spending because of Corona, that's not going to happen. If the housing market collapses, none of that stuff. We're not going to talk about surprise fundamentals and that kind of stuff. We're going to be talking about stuff that's completely objective that you can look at and should be able to come to the same conclusion that I do. And that's the thing I love about technical analysis. It's objective. We're not going to be talking about subjective. Okay. The other thing that I like is it employs solid money management. It works on all time frames. Like we're going to use mostly daily charts today, but it's also, again, a simple 3-step process. Okay. All right. I'm waiting for you guys to type in some symbols. It's going to be a very short demo if you don't. So let's look at some symbols. Give me some ideas in terms of what you want to look at. We're almost ready for it. So that's why I like to look at that. The method that I'm going to talk to you about is from Rahul Mohindar oscillator. Rahul Mohindar, called the ARMO oscillator. It's included in Metastock. If you're not familiar with Rahul, that's okay. He's actually one of our biggest dealers in the world. He runs a company called Viratech Software in India, and has about, I think it's 4 different offices in India. He teaches people how to trade. And the reason this RMO is part of Metastock is actually about, oh my gosh, it would probably be about 16 or 17 years ago. He came into the office and we had him show us this RMO method. We had him we said, hey, you're he was and is a very, very successful distributor of Metastock in India. I'm like, hey, show us what you teach people how to do in India. And it was me and Scott Brown at the time, and he showed us this methodology. And we liked it so much that we actually put it in every version of Metastock. We paid him some money. It's an exclusive to Metastock, and it's been in every version of Metastock since then. So I think we bought it in version 12. But it could have been earlier. I don't remember exactly, last week, let alone 12 years ago or whatever. So, but in any case, that's the RMO. It is a trend-based system. So like the trend is your friend, rising tide lifts all boats, befriend the trend, like all of those things are cliche. The thing I like about this is it's very, very objective. It makes it easy to put together and kind of follow the rules. And, it's very, very straightforward. I've shown this in all kinds of different places. Thank you for the symbol, Michael. We'll definitely look at Win all over the world. So let's go ahead and kind of get into the software. And obviously, since we're going to be following the trend, and the trend's our friend and befriend the trend and all that kind of good stuff, we're going to go ahead and start with that. Let's identify the primary trend. Okay, let's pull up a couple of charts. I'm going to go ahead and close this down. I'm going to go ahead and actually, I've got a lot of charts open with all this stuff we've been doing in Metastock today. Just going to close them down. What I'm going to do, this is our power console. And what I'm going to do is I'm just going to open Win, W-Y-N-N. W-Y-N-N. We'll also look at, actually, I need to know what the extension on that is. I bet it's but I want to kind of look it up real quick, so I just make sure I get the right symbol in here. Now, you'll notice one of the things that we have is a bunch of different symbols. So here's one. I think this probably trades in Singapore and Mexico, maybe France. I don't know. But the one that we want for the US is the O or the OQ. Either one of those will work. So if it's 4 characters, usually it's going to be .O. Basically, .O would cover all the NASDAQ stocks. And the only reason we need an extension on there is because there's a lot of different places where wind trades. Okay, so I'm going to go ahead and kind of type that in here. One of the things I can do with Metastock is I can actually type in some extra symbols. So let's go ahead and add in Tesla.k. We'll add in DIA and SPY and Apple for good measure. Okay. Now what I'm going to do over here, also you notice there's tons of instruments. I could pick them from a list, but since I'm just opening up some random stocks, we're going to go ahead and just kind of type those in there. Okay. The next thing I'm going to do is I'm going to actually apply a template with the template that just adds all the indicators and what we call the expert advisor to the chart. It makes it so that we can just basically move forward with the template. So the template that I'm going to go with is the RMO trade model. So I'm just going to scroll down here. And we'll get to the R's. And there it is. We'll go ahead and apply that. Okay, we'll go ahead and open up the chart. Okay. The charts. And for now, I'm going to go ahead and close this commentary window just to give us a little bit more desktop space. What does have a commentary? Actually, we implemented a commentary. That's a bit of a newer feature. I think we added it during version 17. So now I've got about, oh, it's the wrong signal for Tesla. Let me go ahead and fix that real quick. Okay, just got the wrong extension on there. It's Tesla.o. It's an over-the-counter stock. And what I'm going to do is I'm going to window these so I can kind of take a quick look at all of them. And I'm just going to kind of look at what I'm kind of evaluating is actually the trend, how things are looking at. And I think since it was requested by Michael, we're going to go ahead and look at Win first off. Okay. All right. So I'm going to go ahead and make that the full screen. And what I'm going to do is actually just going to center in on this part of the chart. So we'll start right about here. We've had a pretty good downtrend on Win with some upswings, but it's been a fairly good downtrend. And what I want to actually do is actually talk a little bit about how we read RMO with Win. Okay. So again, I promise there's going to be 3 steps. Let's start with the first step. It's always a pretty good place to start. And that's what we're going to identify as what Rahul calls the primary or the prevailing trend. Another word I'll use to kind of describe that that I think is accurate is called the prevailing trend or the long-term trend. Okay. The long-term trend we're going to look at is the RMO oscillator. So this is the green histogram here at the top of the screen. And what I'm going to do is I'm just going to make this full screen. And we're going to talk a little bit about how Rahul uses this to identify long-term support or long-term bullishness and long-term bearishness. Okay. And the way he looks at it, and Rahul is very, very specific about keeping it simple. One of the things that he says is size doesn't matter and shape doesn't matter. What we want to be able to do is have something that's objective. So we're not going to be trying to guess, well, this is really big and this is really small and kind of things like that. What we're just looking at it is in terms of the rules is it's going to either be above 0 or below 0. And that's it. That's kind of how we're going to look at it. Okay. So right here, I'm going to put a 0 line on the chart. Grab my horizontal line. I'll get it pretty close to 0. Not exact, but as long as it's above 0, as it is right here, or even a little bit right here, or even a little bit right here, then we're going to say that the RMO, our major oscillator, is going to be in a bullish zone. Okay. So up here is bullish, down here is bearish. It's that simple. Okay. If it's right now, when it's in a bearish zone. Okay. If it's bearish, we're not going to buy it because we want to make the trend our friend. And this is a trend following system. So the number one rule here, the first thing we're going to look at is, are we bullish or bearish long term? Okay. If our primary trend is bullish, we're allowed to buy. If our primary trend is bearish, we're allowed to short. If it's bullish, we're not allowed to go short. We don't trade against the trend. If it's bearish, we're not allowed to go long. That's it. It's that simple. Okay. And the other thing that we've done here, go ahead and reduce this size, is you'll notice right here at the very bottom of the chart, it says the RMO is bearish, bullish, bearish, bullish, bearish. So we can totally see whether that is bullish or bearish. Okay. Step number 1. And then I put this in a slide format so you can look at it with me. Identify the primary trend or the prevailing trend. Okay. Step number 2, Oh yeah, here's more. Step number 1. If you're in a bullish zone, you're allowed to buy. You're not allowed to short. It's not a trigger. So, and what I mean by that is if you go from bullish to bearish, you shouldn't just buy. There's 3 steps, and Rahul wants you to follow all of the steps. We do have a lot of people that use, it's kind of funny because a lot of people like to take in things that they like and use them. I've talked to a lot of people that have actually just used the RMO to identify the bullish or bearishness long-term of the trend, and they'll use their own indicators to trade, and that's fine if that's what you want to do. My goal here is to teach you to the way Rahul uses it as best as I can. So, step number 2, the second thing we're going to look at is the bearish trend. Or I'm sorry, the short-term trend, not the bearish trend, the short-term trend, which can be bullish or bearish. So we're going to identify that. We figured out what the long-term is on win. Right now it's bearish. For the most part, in terms of the term trend that we're looking at, it's been bearish for a big part of this move down, with a few bullish spikes in here. The second thing we want to do, though, is identify that short-term trend, okay? And what I'm going to do is I'm going to kind of narrow in the chart just a little bit more here. We're going to look at kind of this section of the chart. I'm just going to zoom in right here. And what I'm going to, actually, I want to come out a little bit. I love with Metastock that I can kind of just move these out, a little slider bars, and it just makes it a lot easier to get here. Okay, to measure the short-term trend, and I'm going to make one change to this. There's a way that I prefer to look at RMO that I think is easier for me. If you like to look at RMO this way, you might want to make this change too. But I prefer to have this blue line to be a line. So with anything in Metastock, if you double click on it, you can actually select it. And I've just selected this blue line. I double clicked on it. Then you go into properties for it. I'm just going to make it from a histogram to a line, because it just makes it easier for me to see. So here we go. We're going to do a line. Going to go ahead and click on apply, click on OK. Okay, and that's easier for me to spot the crossovers, which we'll talk about in a second. Don't get too lost on that yet, because right now, even though I just changed the blue line, I want to talk about this purple-ish line. Okay, so right here, you'll notice that like the green line, it stays above 0 or below 0. The other thing that you'll notice as you start to look at RMO quite a bit more is that it's a lot faster to kind of change between bullish and bearish. And the reason it's a lot faster is it looks at a lot less data because you're looking at the short-term bearishness of the stock. So if I come to the hard right edge of this chart, which is where we're going to be trading, I can say that now we're bullish or we're bearish short-term, as you see right here, and we're bearish long-term as well. I better I'm having trouble with my words a little bit, but that's okay. So right here, we've been bearish long-term, which you can see because it says RMO is bearish at the bottom with the red trend line. We're also bearish short-term because it came down below 0, okay? The other thing that he does to kind of cue you into that change, or that is he will start to color code when you're red. When you're bearish short-term, it'll be red. When you're bullish long-term, it'll be blue. So you can either look at the indicators up above here, or you can look at the colors of the bar and the trend ribbon, whichever you kind of prefer. I kind of look at the colors, and I kind of look at the indicators too, just because I like to kind of look at both. But they are the same thing. This is just telling you that this is below 0. This being red is just telling you that this is below 0 or bearish. Okay. So if we're looking at win right now, we're bearish both long-term and short-term. And that means we would be looking to actively take a short position, okay? If they're both bullish, we'd be looking to take a long position. That's really how easy it is, okay? All right, so step number 2, all right, is we identify that short term. We want the primary term trend to match the long-term trend to match the short-term trend, okay? If they're both bullish, we're allowed to buy and we wouldn't be allowed to short. If they're both bearish, we'd be allowed to short, but we wouldn't be able to buy, okay? Nothing that we've talked about right now up to this point is a trigger. I just noticed that Kelly put in a note that says I put in the wrong symbol. Thanks for the help, Kelly. I got it. All right. Let's talk about the trigger. So hopefully that's fairly sensible. I'm going to go through a lot of examples with win right now. Okay. One of the things that I would say is if the primary trend and the short-term trend do not match, you're allowed to wait. You can wait for them to match, or you can scan for stocks where they do match one of the things that Rahul is very, very specific about is waiting for putting the odds in your favor. And generally, if something's going to go down, it's going to go down. And when that starts to happen, your primary trend and your short term will eventually line up. Okay. And what we want to do is we want to trade with the trend. So if they don't match, we'll just wait till they match. One of the things that you're going to notice when I kind of start to talk about signaling and getting into the trade is that we're never going to buy at the exact top. We're never going to sell at the exact bottom. Okay. What we're looking to do with this trend following system is we're looking to take good chunks out of a fairly substantial, sizable trend. Okay. There's a saying by Robert Deal, who was a good friend of mine and somebody that we did a lot of traveling with. But he was also the son of a preacher, man, and he could talk a lot better than I can. But he'd always get up in front of an audience and he'd be like, "Bulls will make money, bears will make money, pigs will get slaughtered." Again, with this, what we are looking to do is trade with the trend. And that means we won't get the top and we won't get the bottom. But what we're looking to do is put our odds in the favor. We're willing to be patient about it. So that's a kind of a little bit of the mentality behind it. Let's talk about step number 3, and that's identifying the trigger. Okay. And with this, we're going to talk about how we structure the trade when we get a trigger. We're going to talk about managing stops, and we're going to talk about waiting for exit signals or a stop to get out. Okay, so let's go ahead and we have quite a little bit to talk about, but it's not hard. We'll go through it a step at a time, and then we'll kind of look at how this worked out on Win. We'll look at Tesla. We'll look at as many examples as we have. So, NSC Trader, thank you. All right, or NSC Trader. Okay, I don't know what I did, but thank you for coming. All right, let's go ahead and get in here, and you'll see that's the end of my slides. I don't keep a lot of slides here. We're just going to look at charts from here on out. Okay, so what we want to talk about now is step number 3. We talked about how right here, this is long-term, bullish or bearish. Right now it's bearish. This is short-term. Right now it's bearish. Right now you can either see that by looking at the bearish trend ribbon for long-term or the color of the bar. Right now, everything is bearish. We would not be taking long positions on Win. Okay. What we're looking for right here, I want you to notice that there's a little bit of a sell signal on the chart. I'm going to tell you why there's a sell signal on a chart, and it has to do with the pink line and the purple line and the blue line. Okay. And as we talked about before, the purple line is your short-term trend. We want it to be below 0. The green line was your long-term trend. You may have guessed it already, but this blue line is the medium-term trend. Okay. Now, the thing about the medium-term trend or the blue line is we don't care if it's above 0 or below 0. It doesn't matter to us. What we're looking for is what Rahul would call a change in direction or a change in momentum or a change in force. Okay. So right here, there's a sell signal on the chart right here. I just pointed it out. I missed it by 1 bar. Let me go ahead and drag it to the right bar. There's a sell signal on the chart right here. Okay, that's because the medium-term trend or the short-term trend went down below the medium-term trend. You can see right here there was a crossover. When that happens on a chart, you're going to get a red signal. Okay, so if we were back here, this is October 11th, just about 13 days ago. If we're back here looking at the chart, we would have noticed that our RMO went was bullish, but we had that sell signal, meaning that shift in momentum or that shift of force or the shift in direction had happened. Okay, we would not exercise based on that trade. Okay, why not? Because rule number 1 is bullish. We're bullish long term, so we're not going to take a short position. We're also bullish short term on this day, so we're not going to take a short position. It violates rule number 1 and 2. So, as we had talked about in the rules, we're allowed to wait. Okay, so we're going to wait. All right. And again, if you don't want to wait, you can scan. It's okay to get something else, but we want the rules to match up for us. Okay. The very next day, if we come in, you're going to notice that we're still long-term bullish, which means we're not allowed to buy still or short still. We can buy if we get a signal. We're not getting one here, but we aren't allowed to go short. Not yet. Okay. Another day. Okay, and then here, everything lines up. We have that short position or that shift of momentum. We're bearish short-term and we're bearish long-term. And now we can structure a trade. Okay, those are the things that have to match up for us to structure a trade. Okay. James asked a question, can you get a second license to install on a laptop? James, thank you for your question. You don't even have to get a second license. You can install it on your laptop. No problem. Go ahead. All right. Very good question. I appreciate it. Hi, Mark. Good to see you. Okay. Structure a trade. Have to think of where I'm at right now. Okay. So when we're looking to structure a trade right here, and we're not going to get very far with this trade, I'm going to go back in time and try to look at kind of some historical trades. But when we're looking to structure a trade, there's a couple of rules right here. And to be very specific, this is the day we're looking to structure a trade. This is where everything lines up. Long-term, we're finally bullish. Short-term, we're bullish. Sorry, bearish. And a few days ago, we had that bearish shift in momentum. Okay, so when that happens, you're going to look at the bar you're on, which is this. None of this data exists yet. Okay, we're going to look at the low here and the low here. And I'm going to say, okay, well, this is the lower of those two lows. Okay, by just a little bit. Okay, what I'm going to do is I'm going to take a vertical line here. I'm going to look at the lower of those two lows, and I'm going to actually put in a line right there. My line is at, and I'm just putting just a little bit of white space. There's not very much white space, but just a little bit of white space. Okay, and this, if you haven't guessed, is our entry line. It's 54.66. I'm going to go ahead and put that on the chart real quick. 54.66. If the price goes down below 54.66, it's penetrated this low. That's my additional confirmation that this is going to possibly go down, and I'll take a short position. Okay. If it doesn't go below 54.66, I'm not going to take a trade. Rahul wants an additional verification. That low needs to be taken out. Okay. All right, cool. The other thing that I want to do, and I told you that this uses very, very specific stops. Now, there's a couple different stops you can use that Rahul teaches about. I'm going to show you how to do both of them, and I'm going to tell you the one that I like best of all. Okay. The first one that you can do is you can look at the highs. We just looked at the lows. This is where we're buying. This is the higher of the two values. So if you're using this method as a stop placement, the higher of the two values would be right here. Okay. And again, just a little bit of space. So if I buy this, if I go short, my long, I'm going to exit that short if it goes to 59.89. Go ahead and type that on the chart real quick too. 59.89. Okay. Boom. Gets a lot bigger when I hit enter because of the pack size. Okay. So if it goes down below this, that's where I'm going to basically enter. If it goes up above this 59.89, that's where I'm going to stop out. Okay. Now that's the first way that Rahul likes to use a stop. I like to give it a little bit more space. The second way that Rahul teaches to put in a stop is he says to look for a recent support or resistance area. Okay. So if I'm looking back from here, I'd say that the recent support area was right in here, or the recent resistance area, to get my terminology straight, was right around here. So right here. Okay. Now the way that I very specifically look at that is I look for what's called a pivot high. Okay. And if you're not familiar with that terminology, if pivot high is a high that's surrounded by two lower highs. So if you look at, if we start looking at highs, no, this is the high that has the first high back that has two lower highs. Okay, so this is where I'd set it, which on this particular stock is fairly wide. We're up at $75 here, $74.50. Okay, and for that, let me go ahead and type that in. That might be a little bit high for me. Right, that's a pretty big stock for that's a huge stop for a $54 stock. So I might not want to do that. I might go with the closer stop, but I definitely want to take one of those two things, right? And for you, decide on the stocks that you want and the stop method that you like. Okay, for me, I'd be looking closer at this level, but I just don't like the risk reward on that. So, and that's okay. I'd much rather decide I don't like the risk reward now, move on to a different stock and let this one go, because it might go to the floor or not, but I just don't like the risk reward on it. Or if I really liked the stock and I wanted to take it, maybe I'd take a tighter stop initially. In that case, I'd be using the other method. Okay. We set up all of this right here. It looks like we just triggered into a trade. You should have your stop loss in place. you'd be looking to go short, and hopefully this would get weaker because he just took a short position. But let's there's other things that kind of get involved in this particular scenario. And what I'm going to do is I'm going to go back in time on when, and we're just going to kind of look at kind of this area. This looks like a pretty good area where we went from bullish to bearish. One of the other things I want to point out right here, while I'm thinking about it, and I kind of have a tendency to jump a little bit, I'd say for the most part, with the exception of some areas here and here and here and here, for the most part, since right about here, I think you'd agree with me, 614, 2021, this has been in a bearish long-term phase. Okay, now there's some exceptions to that. I'll agree this is an exception to that. This area here is there are some exceptions to that. But I'd say for the most of this time, we've been bearish, meaning we'd only be looking to take short positions. And during that same time frame, we were up in the 100, what level are we at? 125 area. It's gone down to less than half of that, 120 or 56. Okay, and I'd say if during this type of a move downwards, if you're only looking to place short positions for the most part, that's going to be putting the odds in your favor, especially if you're using stops. That's the argument I would make anyway. Okay, let's zoom in a little bit because I'm actually just looking at the time, and we're going to focus mostly on when just due to time right now. Okay, if we gamed this particular long trade out here, let's see. Well, let's just do it real quick right here. Everything lined up on this bar, so we would probably buy on this breakout. See what I'm talking about right here? Okay, it would have bought. We would have had a stop loss in. If you use the second stop technique, we would have put a stop in right about here, right below this pivot low right here. Okay, so our entry would have been about, where is this line? 127. Our stop loss would be about 119, about eight points. Okay, here we would have went long because we did penetrate this. It did go up. Here we got a sign that it was going to go down. It started to go down. Everything turned against us. We get bearish long term. We get bearish short term. We haven't hit our stop, but when that happens, when you're in a trade and everything goes bearish and you have a signal that the price is moving the other way, you're going to be out of that trade and you're going to be looking to structure a trade. Most of the time when you're in, so this would be a losing trade. We would have gotten in at about 127. We would have gotten out. We would have lost that 8 points that I talked about earlier. Okay, 8 points. I'm just going to say that, put that right here in case I want to reference it later. Okay, and every trade isn't going to make money. Okay, it didn't go up. We thought it was going to go up. Everything looked good, but we lost 8 points. Okay, and because we had that stop in place, we weren't waiting until we felt like losing money to get out of the trade. It broke support. Everything looked bearish. We decided to get bearish with it. Okay, easy. It's not sexy. It's not designed to be. What we want to do is set ourselves up in a place where we know what our risk reward is before we get into that trade and just kind of follow the rules alongside. Does it work every time? No. Here's a great example. We're going to start with one that doesn't work. Okay. Let me go ahead and kind of take the lines off of this chart just to kind of keep it clean a little bit. We'll go from this position. Okay. Let's say that we started. Let's say that we were actually looking at this. We had that shift of momentum. Okay. It started to go bearish long term. Okay, or short term, and then it went bearish short term, and then all of a sudden we're like, okay, we need to get out of this trade because we think it's going to go down now. Okay, everything's bearish. Let's go ahead and kind of get out of that trade. Okay, and so now instead of structuring a trade to the long side, we're going to be structuring a trade to the short side. Okay, and to do that, I'm going to take my vertical tail here. Here is where we're getting in. So this is the lower of these two values. You go ahead and put it there. My entry price is 123.18. Okay, 123.18, period. Okay, I'm going to put in a stop because I'm going to trade with stops. Okay, so if I'm looking here at a stop, if I was using Rahul's first method, I'd put in the stop right above the higher of these two highs, which would be right here. That's not the method that I use, though. What I'm going to do is I'm going to look for the recent pivot low, or pivot high in this case. And what I'm looking for here, right here we had a high that was surrounded by two lower highs. Okay, so this is my most recent pivot high. This is where I'm going to put my stop loss. I'm going to put it right above this high. Okay, right above that short signal as well. Okay, so now I have the rule. I'm going to actually put this number in just for the pace. The purpose of being thorough, it's 130. Okay, 130. Okay. So now I know what my entry price is. I know what my exit price is. So it was 130 and some change. I'm just going to put XX because I don't remember exactly the value, but 130 and some change. I know I'm going to get short at 123. I know if I'm wrong, which I will be from time to time, I'm going to get out at 130-ish. The exact number was 130.35, and even some change after that. Okay, here we actually finally trigger into this trade. So as soon as we kind of get in here, you'd go, as soon as we start to penetrate this lower level right here, we'd go ahead and take that short position, and we'd make sure we had a plan to get out at 130.XX. Okay, it does go up a little bit. It doesn't penetrate our stop, and then it starts to go down. Now, I do want to point out right here, we had a very, very short period of time where we had a bullish streak. Okay, right here, it went bullish for just a minute. We're still bearish long term. I mean, we're still bearish short term. So as long as you're bearish short term and you don't have that switch of momentum, you'll stay in this trade. Okay, this basically just generally I like to wait for 3. I like to wait for the RMO to be bearish, the short-term trend to be bearish, and to have a momentum shift in the other side. Okay. Sometimes Rahul says 2 is acceptable. So if you went to bearish right here and then you went bullish long-term, you could consider getting out of a trade. I prefer to wait all 3. And I think what you'll notice after I show you how to move stops is that most of the time you're going to be getting out on a stop anyway. Okay. So we go ahead and get in. Okay. It goes ahead and goes down, goes down, goes down. Here we have a bullish shift of momentum. In other words, we had that shift where the short-term trend looked like it might be going above the medium-term trend, which gives us a buy arrow here. Now, we're certainly not going to buy here, okay? We're not going to do much here. This is just telling us that the momentum might be shifting. We want to start to pay a little bit of a closer attention to this. But as long as we're still RMO bearish long-term, and as long as we're bearish short-term, we can go ahead and stay in this trade, which is good because it comes up a little bit, but then it kind of continues to fall apart, and we get another sell signal right here. Okay, see right here. Oh, I tried to draw that on the chart. Let's try it again. Right here. Okay. Okay. Now, when you get another signal in the same direction, we have a short already. There's 2 things there's one thing you should do and one thing that you can do. Okay, Rahul says it's totally fine if you get a second position to put in another trade. That's fine. You can do that. I don't. Okay, that's optional. If you want to buy, if you want to short more, you're gonna short more. Okay, the thing that is not optional is you want to move your stop. Okay, because think about it. You've come down. Okay, you've moved back up right here. Okay, you've set up another bit of a support, and now it's starting to sink. So, you know, the market moves up and down in steps. Okay, since we've set up a new support resistance area right here, we want to be able to go ahead and move our stop and take advantage of that if it stops out. Okay, and the way that we would do that is I'd look for the nearest pivot high. So if I'm looking back in time right here, here's a high that's slightly higher than these 2 highs. Okay, here's a high that's a lot higher than these 2 highs, and you could pick either one of these. I'd probably pick this one. Okay, just because it gives me a little bit more room to fish, which in this case, the shorter stop would have been better. But I'm going to go ahead and put it right here. And now my stop is at 102. Okay, and so you see what we did right there. Okay, we've had a nice move down. Okay, dot. And I'm going to go ahead and put in XX again because I didn't remember to look at pay attention to the. Well, there you go, 102 XX. And the XX again is just 10 cents. So right here, we got 123, and we're going to basically say, okay, we've had a nice 20, let's call it 20 plus point move down on a $100 stock now. Let's go ahead and protect some of those losses in case it comes back up, okay, which is what it does, okay? So we have this sell, it sells off a little bit more. Here's our buy pin position, and here we stop out. We get out of the trade, okay? All right. And then you just kind of rinse and repeat. Here we stopped out of a trade. Here we could have structured into another trade. But the idea here, I think you see what the idea here is. And I'm running a little bit out of time. So I'm going to kind of go a little bit faster. The idea here is we want to take the advantage of those bigger moves towards the downside. Okay. And that's kind of how it works with Win. let me go ahead and kind of go back in here, take a look at, let's take a look at just the S&P 500 real quick, okay? And we'll just look, I mean, we just don't have a time to dive really deep on this, but we had a massive, massive bull run after Corona happened, right? You remember that? Doesn't seem like it was that long ago. But the Dow here was bullish almost that entire run, okay? It did get bearish for the drop, okay, even though we had a massive bull run up before that, okay? Here we've had a little bit of a bearishness, and again, like I said, pigs get slaughtered. But look at this, right? From bull a little bit. I heard him call my name. Oh, okay. Okay, good. That's good to hear. All right. Okay, so if we look at kind of where we're bearish and bullish, again, we're not getting the bottom. We're not getting the top. Again, what we're looking for is we're looking for the market to establish a trend and looking to take advantage of those trends and take big pieces out of the trend. Okay. Again, pigs will get slaughtered. And that's how it kind of works in general. I love showing this because I can go in and spend time showing you like system testing, and Metastock's a hugely powerful toolbox. It'll help you do just about anything you want to. But I like to show this once in a while because it's a little bit different. It's included with Metastock, and I think if you understand how this works and you use it in Metastock, it's going to help you stay in the right direction of a trade. It's going to help you manage stop losses, and you can take advantage of all the other tools if you want to. But this is a really, really cool one that we've been touting for a number of years. It's one of our favorite systems in Metastock. So there you go. All right. Just looking at time. Oh, I got one right here. Okay, we have about 11 minutes. I can actually, let's look at one more right here. And we'll just kind of talk a little bit about pricing and all that kind of good stuff. So let's take a look at a stock that's a little bit more volatile. Tesla. Again, though, you see that even with Tesla, something that kind of moves around a lot, it'll get into periods of time where it trends for a really, really long time. And again, what we want to do is identify when that's happening and take advantage. When it's a little bit choppier, we want to be really diligent about putting those stop losses in and trading with our plan. We've recently had a huge sell-off in Tesla. Look at this. Okay. Right here we had kind of everything shifted to the downside in the momentum. And in that time period, just since 9/26/2022, in the last month or so, we've lost about 60 points. And during that move, it was bearish to the downside. Okay. Again, it's not very sexy. You want to follow the rules. You want to have your stop losses in place. It's such a great system to show. I love showing this thing just because I think you can use it on just about anything. It doesn't work on everything, but you can use it on just about all those stocks that tend to get into those big trends that stay in place for a long time. It works really, really well on those. And that's the other thing I like about trading is you can actually go in and game this out. You can look at it hundreds and hundreds and thousands of charts and kind of, before you risk any money with it, actually see how it works and see how you like it and compare it to other methodologies. Just a great way to actually trade. So there you go. Again, 29 years in a row, we've been rated #1 in our price category. We just kind of talked about one of my favorite systems in Metastock. I want to remind you, I think it has one of the best. I'm like not biased at all. I work for Metastock, right? So why would I be biased? I love Metastock. And I love the company, and I love the fact that all our support team is right there. And if you have questions, there's more people in support that are there to answer your question than we have in sales and marketing. Love the fact that it's been rated 29 years in a row #1. You know, the fact of the matter is, it's a huge toolbox. I remember one of my first international business trips, I went to Saudi Arabia, and I trained people how to use Metastock for 2 weeks, and I didn't run out of stuff to talk about. And certainly, what I hope this helps you with is like helping you understand a good system and a good methodology. There's certainly a lot of places in Metastock that you can kind of get. We have two versions of Metastock. You've got Metastock Real-Time, and we've got Metastock End of Day. Our Metastock Real-Time includes Zenith, which is our real-time data and news. It is right up on par. It's one of the best institutional services out there. They designed it, and they put over $1 billion into it, and they designed it as a competitor to Bloomberg. The amount of data that's available, I mean, they got, just to kind of throw numbers out, 2,000 reporters and 200 different news bureaus around the world feeding into that Reuters news service. So normally it's $265 a month. That includes a whole product I didn't even open today, Metastock Zenith, but it also includes everything I showed you today with the and everything we've talked about today with system testing and scanning and all that kind of stuff. $265 a month plus exchange fees. Okay. We have an end of day product. End of day, you'll pay $69 per month, and that includes Metastock, which is everything we've talked about today, as well as like any market data that you need. Now, the way that we set up the market data will give you everything you need in the region of the world that you're in. So for example, if you're in America, perfect. We'll set you up for the North America package, and it's going to include all the New York Stock Exchange, NASDAQ, all the futures exchange, the Oprah exchange if you want it, everything all of the exchanges in North America and South America. Okay, we have another package that's called Europe, Middle East, and Africa, covers those exchanges, and Asia Pacific. So as part of these fees that you're seeing on the screen, that'll include data for the regions that you need. There isn't any extra payments that you have to do. Okay, and so for $69 per month, you can try out the software that's literally been rated #1 in its price category for 29 years straight. Wow. What we're going to do here today, though, is we're going to give you an extended trial. Oh my gosh, I just realized what day it was. I think it's the 24th, right? Okay. Which means if you buy a month, we're going to give you the second and the third month for free. Okay. So if you pay $69 today, you'll pay for the month of October 24th to November 24th. As part of that, we'll give you December and January as well as part of it. And so you can do that with the end of day package at $69 a month. That means for $23 a month, you'll have the opportunity to use the best rated software program in 29 years. Okay. Or the real-time version, you can do the real-time version. It would be $265. Again, we're going to let you run that into 2023, January 24th. Okay. If you want to do that, I would recommend you do it. Again, I love the scanning. I love the convenience. I love the ability to go in and find those stocks that meet my criteria today. I wouldn't trade without it. So if you buy 1 month, we'll give you the second and the third month for free. That's going to include Metastock 18, the data region of your choice. One of the things that they do, we want you to succeed with Metastock. So one of the things that we're going to do is we're going to include what we call a white glove installation support. During that kind of orientation, or we call it a white glove installation support, they're going to help you install it if you want to help install it. They're going to walk you through the platform. They're going to answer any questions that you've got. And then that's basically a 2-hour window where we kind of dedicate a support rep for you to kind of help you just get started with the platform. In addition to that, we're going to give you our Unleash the Power of Metastock, which is which is an online training. It's normally $99. I'm going to throw it in for free because I want you to use Metastock. I want you to be one of our customers that in 10 years say, hey, Jeff, can't believe you've been doing the summit for another 10 years. You know what? I've been using Metastock since the summit in 2022. It's great. It helps me. We want you to be successful with the program. So give us a call. We'll happily set you up. If you don't like it, if it's not helpful for you, you can just cancel. It's $23 for the next 3 months per month. It's $69 for the next 3 months, to be very specific, for our end of day program. And during that time, as long as you're a subscriber, you get unlimited access to our support. You can ask questions. I'll help you. They do a great job over there. So you can give us a call at 800-882-3040. You can also visit us online at metastock.com/salespchat. And you can also go to metastock.com/summit deal. You can actually do this as part of your summit deal. If you don't have access to Metastock, you can do the extended trial all on the same page. If you get our Summit Traders Action Pack today, you'll get Cattle Profit Systems 2. You'll get the Bigalow training that we're going to do December 3rd. You're also going to get the recording of that. You're also going to get the recording of the training that we did with Steve back in 2020. It was very good. You're going to get that annual package of Jeff Tompkins Trade Trend with all the bonuses that he talked about with his stock picks, the training, the guides, all that stuff is going to be included. You're going to get the 3S code, which Silas talked about with his 3S bottoms and 3S tops. That's going to be included. You're going to get 3 months of the Magic Trader. You're going to get 2 years of stocks and commodities. It's a great package. It really is. It's normally $5,289 for all of those things. It's $2,193 here at the event. And you can do that if you go to metastock.com/summit deal. You can give us a call at 800-882-3040. You can also visit us online at metastock.com/saleschat. So I'm going to take a really quick breath of water. Woo. It's all talking for me. All right, give it a try. There's a reason it's been rated #1 29 years in a row. And these are some of the most popular add-ons that we've got available right here. So again, if you just want to do Metastock, that's fine. If you want to do the whole add-on package, that's fine too. If you just want to take pieces of it, you can. We're happy to help you no matter what. Metastock.com/summit deal. You can call us at 800-882-3040. Visit us online at metastock.com/saleschat. So there you go. All right. Okay. You kind of take a breath now. Big thank you again to our sponsor, Stocks and Commodities Magazine, for sponsoring the events, for sponsoring for so many years. If you do that 3-for-1 extended trial, they're going to actually throw in a 5-month subscription for free. If you spend $300 or more today, they're going to give you 2 years for free. If you're watching on YouTube, hey, it's nice to see you. I hope you liked and subscribed. And you can actually just, if you go today, you can go to metastock.com/tradersummit and claim a free issue of Stocks and Commodities right now. Do it. I'll wait. Okay, I won't wait, but you can do it while you want. Listen, we did talk about the 3-for-1, and you can get that also at metastock.com/tradersummit, traders-summit 3-for-1, or at metastock.com/summit deal. And Kelly put that in the link. I'll put it in the YouTube or the GoToWebinar link in just a second here. So our next presenter is John Seville. John runs a company called Acorn, and I like kind of the concept that they go with. I remember talking to John a number of years ago, and he's like, we take acorns and we grow them into really big oak trees. And that's kind of gives you a good feel for kind of John's mentality around trading and kind of like what he likes to do and kind of his mentality about how he runs his business and his training and all that kind of good stuff. So I like John quite a bit. He's always a great chap. Last time I heard from him, he was traveling around in a motorhome. So John, where are you at today?
Can you hear me?
Yeah, I can hear you now.
Yeah, it was a great motorhome trip. We spent a lot of time in Montana and the Glacier National Park. Even saw a Lynyrd Skynyrd concert, which was quite the gift because he's got great music. But we're back in Calgary, back home in Canada now.
Okay. If you ever find yourself in Utah, make sure you stop by.
I hear you have one of the most beautiful national parks in the world.
I think there's there's definitely Zion's is awesome, top notch. Thumbs up.
Right.
5 stars.
the Zion. That's everyone keeps telling me we missed Zion. We've got to go back. So yes, we'll definitely have to do that together, Jeffrey.
Awesome. Well, I can see your screen. I can hear you, and I'm gonna get out of your way. Your turn.
Thanks so much, Jeff. And it was it's been great working with Metastock all these years. We've been around for quite a while. Metastock and Acorn. It's some of the old dogs in the room. Acorn started back in November 2007, so it's going on our 15-year anniversary in 1 week. So anyway, back to the chat of the hour today. I'm going to talk to you about smart money trading. Now, there's it's been near and dear to my heart since the day we began Acorn, and tracking what the smart money does is an integral part of everything we do, from market analysis all the way down to what stocks we decide to trade, which direction we're going in, or in some cases we might be going in both directions where there's opportunities in both the long and short. But this is the way we determine this is the top down is looking at what smart money is doing. And that's what we're going to talk about today, is focus on the insiders and the role that they play in every trade, and how we then combine it with patterns and set and forget to then execute. Now, again, quick disclaimer, this is for educational purposes only, not a recommendation to buy or sell any of the securities discussed. Acorn Wealth is not a registered financial advisor in any jurisdictional province and doesn't provide legal investment or tax advice. Trading stocks involves risk of any capital that you invest. And of course, any past returns discussed do not guarantee future results. But, however, any positions discussed today may be being held by myself, Acorn Wealth, or the employers of Acorn Wealth and contractors of Acorn Wealth, just for full disclosure purposes. I know there's one, if we have time, I'll talk about today that I'm certainly holding quite a bit of. So let's jump on into it. Again, today's topic is how to predict explosive moves by following the insiders. Just a quick show of hands. How many people are brand new to Acorn? Just throw a one in the chat box. Over in the YouTube channel, in the GoTo channel. Throw a quick one in the chat box. Welcome, everybody. To those of you who are brand new to us, we as I said, we've been around for quite a while. We founded Acorn Wealth in 2007, right before the global financial crisis. That was a gift for us, because we were fortunate enough to have seen a large outflow of smart money and very high probability patterns at that time. And that was our first major call to the market, that we felt it was going to crash, and we were selling all of our longs. And that's what put us on the map. And for those of you who've been following it with our journey since then, over these last 15 years, we've had some pretty impressive calls in the market since then. And that's what we're perhaps best known for. We called the two tops in 2015, January 2018, October 2018. We were very vocal about our feelings on the market. As we came to the end of 2019, we did 43 live events warning of a 2008-like crash. And then, of course, at the end of last year, at the end of 2021, we came out and said, look, we think it's going to happen again. We think we're going to have another really down year in the market starting in January. And, of course, that was bang on as well. It's not because I've got some crystal ball. I'm no smarter than anyone else in the room. As my girlfriend likes to call me, the dumb Aussie. But jokes aside, look, this isn't requiring an advanced degree in economics or having the book smarts of Michael Berger, the guy from The Big Short. Really, what we're doing here is we're piggybacking those that have the knowledge we couldn't possibly have access to, and tracking what they're not just saying, but what they're actually doing with their own money long before they say anything. And that's where smart money really comes into effect. And this is why one of the many reasons why we just recently, only a few weeks ago, were voted the best stock market educator of 2022 and the Traders World FinTech Awards, which is something that I'm very, very proud of. And so this is, again, that's a little bit of a story about us. But my real passion, I love trading, I love teaching, but the reason I got into this in the first place years ago was for traveling. Long before Acorn, the reason why I was attracted to investing was the idea that, unlike real estate, you can start with any amount of money. You could work from anywhere in the world as long as you have a laptop and a cell phone signal for internet. And so that is what got me into trading, to pursue it as a career, was these benefits, the ability to work from anywhere. But in my early days, the problem that I ran into was that most systems that I tried ended up being the opposite of what I was looking for. Right? I wanted something that I could spend 20 minutes, maybe even an hour a day doing it. But I got started stuck into day trading. I was trading futures. I was trading currency. I was trading anything basically. I would take any strategy and give it a try. I had probably about 20 indicators on my screen at one point, 6 monitors, and I took a look at what I was doing. And the huge amounts of money I'd spent, the huge amount of time I was spending, and I realized that I wasn't making any money from it, right? That's the insult to injury. But it was also, I'd gotten so far away from what I was originally looking for, what originally got me into trading, and that was a problem, right? Who here would agree? Who here is like is trading or finds himself getting down the rabbit hole more and more and getting further and further away from the idea of trading that they originally signed up for? Because that was the case for me. And it wasn't until I met my mentor, Strathy, that early on, luckily, that he said, Johnny, look, I applaud your efforts, but this isn't how smart money works. Now, he'd been in the market for 60 years. He would have been 85 just a few weeks ago. Unfortunately, he has passed on, but he had an amazing life. He was in the markets his entire life. And he said, look, smart money looks at a totally different thing. That's what you need to track. You need to track what the smart money is doing if you want to be on the winning team. And I said, all right, well, how do I do that? He said, well, you've got to start by getting rid of these 6 monitors and 25 indicators or whatever you're using, and go back to focusing on the simple things, like the small hinges that move the big doors. And I think that for a lot of traders is a reality that they're faced with, is that we get into so much analysis paralysis. And today with technology, we're inundated with news and noise, perhaps is a better word for it, and a million talking heads and a million ideas. And how do we get through that? How do we get away from the information and get to the insight of what's really going on? Because that's my feeling, is that there's just too much data out there, not enough insight, and which leaves traders constantly feeling like they're the proverbial donkey, always feeling like profitability is just around the corner if I just do this one other thing or this one other indicator. And I'm not saying that indicators don't help, but what we need to do is get back to the core of what are those small hinges that move the really big doors. And to me, that is where smart money comes in. So the kind of the number one rule behind our market ideas, the crashes we've called, the bottoms we've called, it really starts and stems from what is the smart money doing, right? Because to me, this is the best kind of fundamental research you can possibly do, right? Is to look at what the really smart money is doing, not saying, but doing with their own money and tracking that. So doubling down on the smart money is integral. And so let's talk about how that applies to the market, for example. Okay, so what's a smart, because obviously when we talk about stocks, we're looking more at insiders and things, but what about smart money from an overall market perspective? Well, let's take a look at one of the smartest money groups out there, the bond market. The bond market is made up of, we're talking about Fortune 500 companies. We're talking about central banks. We're talking about the really big, deep pockets, right? The bond market, of course, is several times larger than the stock market. It's much larger than the entire stock market is. So the bond market is really smart money. And so one of the things that we track a lot, and one of the things that we were talking about and in all of those workshops in 2019 that I'm sure many of you were a part of, what did I say back in 2019? I said we're looking at a rising channel on high yield bonds. Now, does anyone not know what high yield bonds are? If you do not know what high yield bonds are, just put a 5 in the chat box, and I'm just going to make sure I'm looking at the YouTube chat there as well. Okay. So for those of you that are not aware of what high yield bonds are, they are a fantastic indicator of what smart money's risk appetite for risk is. So high yield bonds, or corporate junk bonds, which are another word for it, indicate is the really smart money feeling bullish and aggressive on taking risk? If so, then they're willing to lend money to corporate America because they're not worried about the chance of them not paying back those loans. And of course, one of the ways that transaction happens is through high yield bonds or corporate junk bonds. It's the lending of money to higher risk companies, startups, higher riskier stocks in general, IPOs, things like that. So when the smart money sees smooth sailing ahead, they'll buy high yield bonds. And so what you'll see is that high yield bonds correlate with the market. They go up with the S&P when the markets are going up, and they go down with the S&P when markets are going down. They correlate. So what we're looking for as a very powerful leading indicator on market conditions is when high yield bonds diverge. So when we're seeing the markets go up, like we saw in 2019 through October, November, December, even into January, markets in bullish momentum, but we saw a bearish upward channel on high yield bonds. And that tells us high yield bonds are about to go down sharply. And if that's going to occur, that means big trouble for the market. And of course, that's exactly, this is one of the ways we were able to anticipate that 2020 crash, was that divergence in high yield bonds. Now, when we came back to after the rally, right, after we saw this this monster rally from 2020 onwards, right, one of the biggest rallies since 1939, we were constantly tracking what HYG was saying next. And so as HYG rallied from those lows, can everybody see what pattern? One second here. Can everybody see what pattern occurred in the charts? For those of you who are good at spotting patterns, what pattern do we have there? This is a rising wedge. And a rising wedge, like an upward channel, also bearish. And this was a monster rising wedge. And so one of the things we talked about in August and September of last year is the workshops we did, we called it the most bearish chart in the entire stock market. Because what this was telling us is that HYG was going to drop to at least here. And if high yield bonds were going to have that much of a sell-off, that's again a catalyst for another big risk, a high risk, big trouble ahead for the market. And so that was that kind of started panning out. We then saw a head and shoulders pattern develop as it broke down from the rising wedge, which is also very bearish. And of course, down we went, and we saw high yield bonds decline all the way to that target and then keep going underneath that momentum all the way down to where we find ourselves today. So what next? Well, one of the things that I wanted to point out about the chart on high yield bonds is that, again, if we take away all of this noise and all of the fear that's being promoted in the news, right? If we strip all that away and go back to the data, where is the really smart money? What are they saying about the market right now? And this is up to date as of today. Can everybody see that where high yield bonds is now is very close to those lows that we saw in the 2020 crash? Just give a 1 in the chat box if you can see that. So we're getting down to some levels of some really interesting support. So could this be the bottom? It's possible. We don't have all of the confirmation that we're looking at yet, and we'll go into talking about what some of those things are in a minute. But what I did want to point out is that we are certainly very close to those very sharp and powerful lows that we saw in 2020, where the bond market said, right, now's time to load up. This is low enough. Okay. So I just wanted to point that out. And this is a really important thing we're tracking, to watch how the pattern evolves in HYG right now as we start to see some bullishness, at the very least in the short term, currently in the market. The other thing to point out about HYG is not only are we at that at this support level, or very close to it, but if you actually go back even further and take a look at the chart on high yield bonds all the way back to 2010, right? You actually see that we are also in the macro pattern in a very clearly and cleanly defined downward channel. The only time we broke through that downward channel was that sharp bottom in 2020. So if you look at both the much larger pattern and as well as that short-term pattern, you can see that this area that we're at has a very good argument for why there could be some strong technical support in the market right now, and why we're seeing such resilience at these levels from a bullish perspective after such a powerful drop. So I just want to check with everybody, does this make sense to everyone? Just throw a 1 in the chat box if I'm explaining all of this clearly enough. Okay. Because that's what we want. If we go, no, because there's no guarantees in anything. But what we want to know is if we're going to go long, right? And I bought about 4 or 5 longs last week after being almost 100% in cash. Could those longs fail? Sure. But I'm taking longs based on the data saying that there is a risk worth taking. And that's why what we want to do in trades is we want to be, if we go into a trade idea, we want to be able to have a rationale behind why it's valid. And so that would be the technical reason, among other things, as to why I felt for my risk tolerance, it was time to start taking some longs. Now, I'm still only about 1/3 invested overall my capital. I'm still just taking small bites here. And the only kinds of stocks I'm taking long are ones that are absolutely perfect from a pattern perspective and very importantly, very, very powerful from a smart money perspective. And that's where we start to tap into the idea of the insiders. Because in this market, what we teach our students is we say, look, if you are going to go long today, or today, last week, next week, whatever the case might be, if you're going to be going long in this market, you want to give it the test of, is this stock idea so good that even if the market went sideways or down, that you are still confident it could go up. Even in an uncertain or even downward trending market, this stock still has the goods, the guts to go up. And if you're going to go short a stock, that this stock is such a powerful setup in the bearish direction that even if the market did have a dead cat bounce or even started to rally, that your short could still perform. And this is the kind of environment that we're in right now in this uncertainty. And this is where insiders play a fantastic role. Because when I first, now I'm going to tell you a little quick story about how I discovered this. See, when I had my first insider experience, it was unfortunately not a good one. This is when I was just a wee seedling, right? Jeffrey talked about acorns to oaks. I was just a tiny little seedling at that point. And I was looking at how to build my first ever portfolio. I'd done a few months of trading at this point, and I was sitting there one day with my laptop open at a pub in Vancouver, sipping on a Guinness, I think. And there's this table next to me, and there was a bunch of guys in kind of blue, shiny Armani suits. They had the Rolexes on. They were sipping nice champagne, and they were all celebrating. You could tell. And they were talking about their stock. And so, being a young up-and-coming trader, I thought, well, gosh, maybe this is my leg up. I'll sidle up to these guys and ask what they're talking about. And they were all too happy to tell me all about their stock that was up 500%, and all the great things that they were doing and how they're changing the world with their technology. And I thought, wow, this is my lucky break. And I said, well, guys, I mean, how much money do you it's already up so much. How much do you think more it could go? Or how much money do you think I should put in? And they said, well, we can't tell you how much more, John, but I will just ask you this question. How much would you want to put in a stock that could go up another 1,000% potentially? And I said, oh, all right, all of it. And I put all of my account, throwing all of my rules that I'd spent the last couple of years developing, throwing caution to the wind and loaded up on this company. The stock never went higher. In fact, over the following weeks, it dove from whatever it was, $1.20, all the way down to around 5 cents, with my stomach and my account going with it, until I finally got out. And this was a bitter pill to swallow, of course, but what really upset me about this was that I later found out that those exact same insiders that had been glorifying their company and what wonderful things they were doing, at the same exact time they were telling me about that, they had been offloading all of their shares into the market. They were selling while they were telling me what a great time it was to buy. And this is when I vowed to myself to make a change, because it was clear that there is two groups in the stock market. There are the lambs, which was me at the time, and most retail traders when they first start out, and of course there are the lions. And I vowed that I'd never be a lamb again. And so as expensive of a lesson that was to learn, I'm glad that I learned it early on, and it certainly was the last time I ever looked at any investment I ever did again without looking at what the insiders were doing. And then, of course, this has grown. That seed for me grew from a checkpoint in every one of my trades to a fundamental piece of our entire strategy that we look at. And so, that's a big part. And so if you take a look at some of the large events we've seen in the market, such as the 2020 crash, right? I'm sure many people here got hurt badly by the 2020 crash, and were still maybe therefore weren't in a position to take advantage of the bottom. That was a very volatile year. But if you look at the headlines at the time, all throughout that year, it was pretty much advising people to do the wrong thing. The news at the peak was how much higher the market was going to go and how we broke at all-time record highs, sucking the retail trader in to buy at the worst time. When the market bottomed, when we saw one of the best buying opportunities of our lifetime, the news was all blood in the streets. The market's going to go back to the 2008 lows. Those are the kind of headlines we were reading. But where most retail traders got really hurt by this extreme volatility in the 2020 crash, one group of investors didn't miss a single beat, and that was the insiders. If you take a look at the insider selling that occurred in the 90 days before the 2020 crash, we had significant insider, about $13 billion worth of insider selling roughly in the 3 months leading up to the crash. As you can see, it was predominant in every sector, almost every sector. You also had, of course, the upward channel on the high yield bonds that warned us that the really smart money were about to get out. They were getting out of high yield bonds as we went into the end of 2019, and we saw insiders were doing the same thing. Now, obviously, that followed. What followed was the market crash, the COVID crash, if you want to call it that. But when the market bottomed in 2020, while retail was panicking, corporate insiders loaded up. This is one of the articles in March of 2020 where the insiders bought back billions of dollars, and they started significantly outweighing the insider selling 5 days off the absolute bottom. Who called the bottom perfectly? Insiders. Again, it was a very sharp, very rapid mass buying phenomena. 5 days off the absolute bottom the market got. What incredible timing. And of course, one could say that it's not fair. Do I think the market's rigged? Absolutely. But in this, whether it's fair or not, what this does allow us to do is piggyback them. Unfair or not, this is one of the ways that we're able to then find bottoms and tops ourselves. So, as rigged and unfair as it might be, this is how we're able to piggyback off some of these major moves, and these loopholes are recognized. There's been multiple articles about this, about how current rules and loopholes and insider trading allow, what's the article say here? Allow executives to time their share sales to maximize gains, right? There was another article from Bloomberg, Reuters. So that was Bloomberg there. This is Reuters. Executives have been able to game the system, including engaging in de facto insider trading by creating, changing, and canceling their stock trading plans in secret and virtually at will. Dennis Keller, head of Washington-based nonprofit Better Market, said. He argued an SEC initiative was long overdue. And they're trying to do things about it, but it's very, very, very difficult. And as the article says, there'll be a long runway before any such changes take place. So what we're seeing is a very special type of situation here. And I think that my screen was frozen there, so I'm just going to wait for it to update. There we go. So there's the article from the Wall Street Journal if you missed that. And there was the article from Bloomberg there. So loopholes need to be closed. SEC targets corporate insider trading rules. Sure why my screen froze, but there you go. That was what I was showing you there. And so this opportunity to piggyback off of that data was one of the reasons why we called the bottom in the market in April of 2020. This is one of the emails we sent out to our entire community, saying, "Hey, corporate insiders have just bought back over $1.19 billion of stock, and in market meltdowns, this is where the opportunities are." Right? Again, when we went into the end of 2021, this is the same data we saw present once again. In 2020, we saw $13 billion worth of insider selling. At the end of 2021, we saw closer to $40 billion worth of insider selling occur in the 90 days of the end of 2020. Sorry, end of 2021. So again, tracking this is incredibly important. Now, where are we now? Well, where are we now? We are actually starting to see some buying start to come back in. This is the last 30 days. So what as we've been watching the S&P 500 very closely, what's special about where we're at the moment is the S&P 500 is bouncing off its 200-week moving average and its 50-month moving average, and high yield bonds has dropped, as I showed you before, to a really kind of key support zone. So there is a lot going on in the market right now, and so it's fighting as hard as it can in the bullish direction. And what we're tracking at the moment, of course, is what are the insiders doing? Are we seeing that same phenomena yet that we saw in the lows of 2020? We saw it again in the lows of 2009. Even in the rallies we recently saw that started in June, we saw mass buying from the insiders before we saw that 10% tradable bottom. And so we're looking to see, are we seeing that yet? Now, right now, we don't have a mass accumulation event from the insiders like we saw in many of those powerful bottoms. We don't see that yet. We're watching very closely day by day. And if we start to see mass accumulation across all of the insider buying and selling transactions in the market, then that would be for me a time where I would start to increase my my risk exposure and increase the amount of long positions I'm holding. Right now, it's starting to creep in. We're seeing oil and gas and business services, the two industries within these sectors that we're seeing the most buying. And within oil and gas, it's specifically the major oil companies, whereas the independents are still making up some of the selling. Okay, so some of the longs we recently alerted were in some of those major oil producers. Again, in the services sector, the business services sector, in particular groups there, we're starting to see some big insider buying. And so if I'm going to be looking for opportunities to go long in this market, which we are, I'm going to be looking in those areas where we're seeing the heaviest presence of insider buying, both from a sector standpoint and then drilling down even into the individual industries. Does that make sense, everyone? Throw a 1 in the chat box if that's clear. All right, and of course, what we're leveraging is their knowledge. In an uncertain market, these are the guys that are interpreting the news and seeing what's going on well beyond the horizon of the news headlines, because insiders know about new product launches, mergers and acquisitions, big customer contracts, litigation or court cases that are being resolved. They know about, in a case of a drug companies, and I'm a big fan of pharmaceuticals. One of my favorite sectors to trade is the healthcare sector, because when I start to see mass buying from the insiders ahead of FDA announcements and things like that, that gets me very excited. And this works again across all sectors, but these are some of the areas we look for. And the research that's been done on this is quite convincing. You know, when you look at the likes of the Wharton School of Business study that said investors can reap by imitating insiders exceptional profits. You know, when you look at the University of Michigan that says insider purchases have abnormal returns. You know, when you look at the Harvard and Columbia study, that insiders make market-beating returns when trading before big events are announced. Wall Street Journal, insiders have a persistent edge. And Peter Lynch, there's no better tip-off. So when you ask yourself, you know, when the job of a trader is to put as much probability behind ourselves as possible, it just seems like such an obvious thing, such an easy way to add an extra layer of probability in our favor by looking when we're looking for trade ideas to ensure that the insiders are buying and certainly not selling. And if in the case of going short, that we're looking for stocks where the insiders are dumping and not buying huge amounts. This is such an easy way to add an extra layer of probability. Now, there are other groups out there that talk about insider buying and things like that. But the problem is that insider buying and selling on its own is not enough. We need to go beyond that. We need to combine insider buying or insider selling then with the right timing. We need to execute that idea properly. Right? How many people here have had a great idea and timed it wrong? Right? And that's why we need to piece this all together. But I will say that having this as a fundamental piece at the foundation of the trade is a game changer for how I go about the market. You know, because when I was trading in my first 5 years before Acorn, I was only technical. All I'd looked at was the pattern. And so when I would buy a stock, you know, I wasn't a fundamentalist. I'm not the kind of guy like Michael Barry who's going to go through millions of spreadsheets and read through the quarterly earnings reports and look at the correlating relationship between other companies and the like that. That's not my bag, baby, as Austin Powers would say. You know, I want to let them do that smart money research. So when I used to buy stocks, I would look at earnings and tremble. You know, gosh, is it going to gap down 30% or gap up 30%? As soon as I would make a gain, I would be quick to sell it. You know, I would cross my fingers and hope. And that was without a fundamental understanding what most traders are left with. We have to guess as to whether this stock is a diamond in the rough or not. But when we are able to go to the top of the food chain, when we're able to go straight to the insiders and say, well, is this company something that's really a diamond in the rough? Well, there's no better person to answer that question, in my opinion, than the insiders. And the CEO, the CFO, and guys like that, if they're buying, you know, in very large quantities, then this is something that would suggest that something very good is on the horizon. Right? Robin asks, isn't insider trading illegal? So good question. So there are types of insider trading that are illegal. For example, if you were on the golf course with a CEO of company XYZ, and he said, "Hey, just to let you know, Robin, we're about to announce a breakthrough technology, and this is what it's going to be. We're going to announce this next week. I would suggest you go and buy some stocks." That would be insider trading. Or the insider saying, "Oh, we're about to announce our quarterly results. You should probably get out of the stock." You know, but what happens is that there is a loophole in the legislation that allows insiders to buy or sell their own stock as long as they have a written plan. So as long as this has been planned ahead, right? Even if this trade has been planned ahead, that we're going to buy stock at a certain price at a certain time, this is a loophole. And this is the loophole that article from Bloomberg and Reuters was talking about. Because the problem with these plans, right, as long as they have a plan, a written plan, they can buy and sell, right? That is the basics of the loophole. But they can have this plan doesn't need to be submitted to the SEC. It's submitted to their broker, right? And they can have, and the way it was, at least, one of the big problems was that they could have as many plans. So they could say, sell 1 million shares in January, February, March, April, May, June, July, August, and then they could just cancel them whenever they want. So you see what I mean? This is why the loophole has been considered to be gamed. So it's not a perfect system. And again, that's kind of where the differentiation is. So, because you do want to allow insiders the ability to, of course, invest in their own company, and you want to, and insiders, like any other investor, should have the ability to cash out on their investments. So it's a sticky subject. But regardless of whether the particular insider is doing it ethically correct or not, is indifferent to us as traders, because they are publicly reporting these trades to the market, right? It's not being done secretly. When an insider buys or sells, they have to report it to the market. But it's published within 3 days, typically, sometimes faster than that. That, hey, I've just bought 1 million shares, and so for us, that's exactly where we are then able to tap in and piggyback off of that, and from a trading perspective and long term. Look at Cassava Sciences was a great one. We're going to show some older ones, then we'll show you some of the more recent ones. Cassava Sciences, again, biotech, which was completely unnoticed by most traders when we found it, and this one was ticking along at kind of around $1.90, I think, is where we alerted it at. But when we first found this in late 2019, this was we saw that the director, CFO, president had all bought. And with one director buying 177% more in just one transaction, and that transaction was $932,000. So, right, and when that started to rally, right, this thing went up 500%, I think, in that first big move, which was a flag. And what was interesting is that as you can see, no one sold into that rally. And so this is where, again, it could have been an interesting trade for a short-term trader, but also a great long-term idea when you're looking for ideas that have some real guts, right? That diamond in the rough where there's something really special going on. And that thing had a tremendous rally. I think it was 5,900%, which is crazy math, right? I mean, and this assumes that you held all the way to the top, which most traders aren't going to do, right? So I'm not suggesting that every insider setup is going to go up 5,900% and you'll be a millionaire overnight. I see some people talk like that, and it disturbs me. But when we're looking at real substance, fundamental substance behind an idea that we can then overlay the timing onto, this is some real power, right? And that's as one thing you can do to put power behind you. It's something that that I think is a no-brainer, right? And I'm going to show you some more ideas here in a moment. But not only find the insiders being present in your shorts or your longs, but then also combining that with the set and forget execution. Because once again, I'm very excited about the market. I love patterns. I love when I find an idea with mass insider buying and institutional buying and things like that that's gearing up in a perfect pattern. You know, I do start to feel my spidey senses tickling. So one of the things that's very important for me and the way that I personally trade is set and forget. And what that means is that once I find an idea that I really like, we then overlay the pattern to determine when is that good idea the right timing, and we'll then pre-program based on that where our entry signal is, and I'll pre-program that into my brokerage, where our target is, right, and often there'll be more than one target, and where the stop loss is in case the idea goes bad and fails, so we can cut our losses very quickly. And so this is what set and forget means. It's the idea of trying to remove emotions from the process and setting up the trades from an entry, target, and stop loss perspective, all well before you actually enter the trade, before there's real money committed. And this has two benefits. One, you can actually go and enjoy life. And that was why I got into trading in the first place. I didn't want to be glued to the screen, right? Who here wants to spend less time in their analysis and trading? Put a 1 in the chat box if you would like to spend less time and you feel like you are spending too much time, right? A lot of people do. And even if you had the time, aren't there things that you'd want to be doing better? So for me, this is a must. In any trading strategy, it must give me time, not take time away. That's only possible if you have rules. And the other part to this is again, Jeff said at the beginning, you know, we just came back from a 5-week camping trip. We were all across North America, going from camping spot to camping spot. In the Glacier National Park, we didn't even have a signal for 2 days. But I didn't have to worry at all, because every position I had a stop loss, a target, risk management, all in place. So I was able, this is a photo from East Glacier, I could let my strategy do the work. Not just that, though. That's not just, and it's the bonus, but it's also the fact that I think it makes me a better trader. Because I know that if I was sitting there micromanaging every one of my trades, I know that I'm more likely to chase something. I'm more likely to see a stock that I really liked and that I maybe missed the perfect entry for, that I'm going to chase it on the way up. And as a result, when it pulls back the support like it does, there's a chance that I might second guess the trade and exit on the pullback. These are emotional decisions that traders get sucked into when you're watching the ball spin around the wheel, so to speak. When you're in the emotional part of trading, which this helps avoid. And this is why we got students like Ralph in Winnipeg who said, I have so much clarity with Acorn. This is back in January when the markets began to crash. Markets are still going down, and look at me having a coffee and a Danish without a worry in the world. Because it's one thing to show you what I'm doing, but what's more important is the impact that has for our students. Well, I've been doing this for a long time, so you'd hope that I'd learned a thing or two about trading. But when we have students that are coming in just learning this and being able to go and apply it themselves, that to me is far more important than what Johnny's doing in America. And again, from Harvey, and again, at the beginning of the crash, because remember, we alerted this well before that started to roll over. Thanks for the perspective in the market. It is the most beneficial thing I have found anywhere. Others have provided great stock purchases, but have been getting killed lately. Your info is the most helpful in all market conditions I've ever found. Wish I'd paid more attention to yours and less to others lately. Thanks, terrific stuff. So let's take a look at some of those setups that we had alerted when the markets are going down, right? When markets are crashing, how do we capture the crash? Well, let's take a look at NOW. NOW, let's take a look firstly at the pattern. So as we went into the end of the beginning of this year or the end of last, we were looking for bearish setups. right? The high yield bonds was bearish. Insider trades were up at $40 billion roughly. There was a few other things going on, and so we said, all right, let's look for bearish patterns. And so we ran our insider scan, and we found Service Now. So Service Now was in a head and shoulder pattern. So this is one of the highest probability setups in a topping market. And I've studied a lot of patterns, over 140 patterns I've studied. It was how I got started in this industry, and it's smart money and patterns are my two left and right fist. And this is where you get the timing. This is telling you that this is primed to drop from around 670 to at least 510. So you have a very high probability pattern. Check. The timing was right. Okay. What about the insiders? Well, again, I'm not saying that these insiders were doing anything wrong. I'm just saying that what happened in September and October, 8 insiders sold over $47 million. The chief financial officer sold 75%. And so, whether one feels that they had inside information or not, at the very least, they are experts in their own company. And at the very least, what this tells us is that the insiders felt this was a good time to sell, right? There's nothing wrong inherently with an insider buying because he sees his company is significantly undervalued, or selling because they see it potentially as overvalued, right? The very basic definition of that, then we're getting an insight to some terrific fundamental knowledge here. And sure enough, the stock never went higher. And there was our alert on it on January 5th for a set and forget entry if it broke below 569.75. Target 1, 515.67. Second target momentum. Stop signal 592. And again, this is you still have to make your own decision as to whether this is suitable or not for you. This is not financial advice, but this is the trade setup, and we lay it all out in plain English, and each alert comes with its own video. And of course, that went straight down. Guys like Dave in Australia, who's been with us now for about 7 years, said this is the number one game changer to his strategy, because in 20 years of trying, he could never make money because of the time zone. Right, the American market's opening at midnight in Australia. He was losing sleep, losing his profits, losing his portfolio. This is the first time he actually consistently started to make money, and we had to visit with him when we were in Australia last year. This is why these relationships last. JYNT, same thing. Head and shoulder pattern. 2 directors and CFOs selling $3 million worth, 25, 34, and 88% of their positions. Down it goes from $80 all the way down to 55, which was the first target, and then kept going, I think, all the way to 7. Right? GRWG, another one. Also a head and shoulder pattern, very high probability pattern. First target was a drop down from 44 to 28 and change. And GRWG also just kept going. There was the alert. GRWG $30.42 or $30.86. First target 26.13. Second target 20.23, and then momentum from there. And this just kept going and going and going all the way down to around $5. Right? These are powerful setups. This is a more recent one. TSN, Tyson Foods. Tyson Foods. Let's take a look at the pattern. Right? And this is still an active Acorn alert, by the way. But can everybody see the double top on that top line? Can everyone see the double top? Now, that double top made a lower second top. And it's a very basic pattern. The very basic rules of that is if you have a double top and you get a slightly lower second top, then your first target is going to be here, right, where it bounced before. But your second target is then the extension of that peak to trough. So you had a nice, in a macro, a really nice bearish pattern here from a double top perspective to suggest it could drop at least to 85, but then even go further down to where we are actually today at 65. That was the first part of the pattern. Second part of the pattern, a head and shoulders developed right over here in July going into August. Head and shoulder pattern also enhancing the probability of that bearish double top. So do you have a pattern saying this is the right time? Do we have the pattern's probability on our side? You betcha. But then you add on the insider selling, and you had one director selling 37% for $4.9 million. The group president of poultry sells 25%. The same director that sold 25% sells another 27%. And then we rally up, pull back again. The executive vice president and general counsel sells. And then this is where our most recent alert on TSN was, right here as that head and shoulder started to peak and break down. Because you've got the pattern, you've got the insiders, and there you go, dropping from around 85 to 65. There was our alert with a break below 77.93. First target 71.23, second target momentum, and this is still going. All right, EL, Estee Lauder. Head and shoulder pattern. Head and shoulder pattern suggests a drop to 197, which is exactly where we hit today. Again, this is also an active acorn alert. So there's the head and shoulder. On top of that, you can also see the upward channel. The upward channel suggested a drop to around that same area as well. Right, so you've got two beautiful bearish patterns suggesting when we were starting to break down below 250 that there was at least a 20+ potential drop to be had in EL. But then you add on the insiders, because in an uncertain market, we want as much going for us as possible. And we saw that mass selling all throughout, all these highs, all these channel breakdowns and so forth. We saw 10% owners selling 99%. We saw the group president sell 76%. We saw another insider sell 100%. We saw another, you're talking about millions of dollars with as much as 100% selling in the stock. And so, of course, that was one we alerted, and is still an active alert in our member portal. Right? That's what we're looking for shorts. But in the case of longs, I mean, that's going to be where the really great opportunities are when the market bottoms. And that's where we find stocks like IMRA. So these are the kind of things we're looking for longs. So those are shorts we've recently alerted, but at the same time we're alerting those shorts, we're alerting powerful longs. And the powerful longs, here's just a couple of examples because we're short on time. Here's a flag formation on IMRA. Flags like head and shoulders being the #1 breakdown pattern, flags are the #1 breakout pattern. And here's a flag formation. Beautiful setup that had a big flagpole, consolidated, and was breaking out of the consolidation pattern. We alerted this at $2.56 on October 12th. First target of 343. Second target momentum. That was up another 17% today, I believe. But if you take a look at the insiders, you had insiders buying 144%, 195%, 10% owner bought 4 times between $1.11 and $1.40. And even when we hit the first target of 360, another 10% owner bought another $1.86 million. These are the kinds of longs I'm taking now. Kaba is one I bought last week, right? And let me show you why. Once again, downward channel, had already rallied up to its target. You can see there at $2, pulled back to support, bounced off that downward channel. So here's another opportunity to go long. And the president and CEO bought 12%. The CFO bought, another director bought, all of them loading up right there under $1. And so I bought too. And full disclosure, I'm still holding this long position currently. Again, what we're seeing here is the presence of the combination of these 3 factors: patterns, insiders, and the execution of set and forget. Right? So we put together a bundle that we haven't offered for a while, but in light of where we're at in the market, we are re-releasing our Smart Money Trading Ultimate Bundle for a terrific saving as part of the MetaStock event tonight. And what we're doing is we're including, first and foremost, the Smart Money Trading 101 bundle. Because I've covered a lot today, and it was my intention to, but in this bundle, we're going to include for you the entire Smart Money 101 course, which is 4 modules long. And it starts with how to identify whether we're in oscillation or momentum. It talks about how we identify that correct pattern and an introduction to patterns and probabilities. It talks about then also how to scan for these ideas. So in our Smart Money 101 course, we actually teach you how to scan for these types of setups where we've got very powerful insider buying or selling going on. That course on its own is $19.97 usually. That is going to be included in your package. What else you're going to also get, and I'll put the link up on the screen. So it's acornwealthcorp.com/meta. Okay, so $397 is the price for the entire package, and that's the first part, Smart Money 101. What you're also going to receive is 3 months of alerts. So every week we send out 5 alerts with our 5 favorite setups. Sorry, well, one video with our 5 favorite setups. And this is where we have really gone and done a ton of research, where we're looking for the setups with insider buying, but not just insider buying. We want to see multiple insiders buying, large percentage buying, large percentage increases. We also look at their track record to see how many times they bought or sold their own company over the last 10 years and whether they were really on point or not. Now, how credible are the insiders in terms of how well they've timed their decisions before on their own stocks? We do all of that research for you. We look at the insider shorts as well, of course. We publish our entry ideas, multiple targets, and of course the stop loss in case it goes the wrong way. So we can limit our loss very quickly. We also then do, those are sent out in video format every week and uploaded to the portal. And then you also get a daily written update on every single idea every day. You then have a live trading room. This is where we teach. This is where you learn. Every Tuesday, Thursday at 4 p.m. Pacific or 7 p.m. Eastern. And this is where we break down the live markets and where we think it's going next. And as I said, we're very closely following what the smart money is doing right now, so that and we're ready for new shorts or longs, depending on which way we swing next year, and watching what the insiders are doing. But you'll learn all about that and how to do it yourself, all the resources we use to look that up and to track the sectors and industries. It's all shown in the live trading room, as well as, of course, in the on-demand Smart Money course. You'll have one-on-one support for the entire 3 months. And all of that is included for you in your package at $397. So you can go to acornwealthcorp.com/meta, and that will get you access to all of those things. And there's one final little bonus. We're also including our 3 smart money market indicators, and these are normally $9.97 per year to subscribe to our alerts, our crash alerts on the market or bottom alerts on the market. There are 3 indicators we track, high yield bonds being one of them. There's an S&P indicator we developed, and there is one that tracks the percentage of stocks above or below their 50-day moving average. It's very, very, very powerful. And you'll get access to these training modules on how to use them, and you'll also get lifetime access to our alerts on our smart money market indicators as well, normally $9.97 a year, and you're going to get lifetime access to that included at the $397. So I hope you have enjoyed today's presentation. We are in a exciting market, but one where you really want to make sure you're only looking at the very best stocks, and this is how we find them, starting with the smart money. So I'll pass it back over. I'm at the end of my hour. I'm going to pass it back over to Jeffrey. I'm sure you've got another great speaker ahead. And thank you so very much for everyone. And thank you to Metastock for putting on yet another great event.
Thank you, John. Good to have you. Thanks for coming. And I did paste. We did paste those links. So if you don't want to type them, you can just click on them. So thanks. Thank you, John. Okay. All right. Let's go ahead and do this real quick. Oh, hey, Bubba, how you doing? All right, here, let's go here first, very quickly. I do want to say thank you really quick to the CMT Association for sponsoring today's event. CMT is a great association for you to do quantitative systems development. They do a lot of accreditation programs, and it's very interesting how those, if you're trading for a living, can really help you get more assets under management and help you grow your career and help you learn. So if you're interested in finding out about that, you can go to cmtassociation.org. You can call 646-652-3300. I do want to remind you we have a summit action pack today that includes Steve Bigalow, CPS 2.0, the training that we're going to do on December 3rd, as well as the recording of that and the recorded training that we did back in 2020. Jeff Tompkins Trade Trend Annual Package with all the bonuses with that. 3S Code, 3 months of Magic Trader, 2 months of Stocks and Commodities magazine, and 1 Unleash Your Power of Metastock. So normally that would be $5,289. Here at the event today, it's $2,193. Metastock.com/summit deal, 800-882-3040, or metastock.com/sales chat. Our next guest is Bubba. Bubba, we love having you on. It's good to see you. You're looking really nice today.
What's up?
Nothing. We love having Bubba. He does such a great job, and let you go from here, Bubba. Let's go ahead and make you the presenter.
All right. Now, let me see if I can figure out what screen to share. That's always one of my issues here, but let's see if I can. Yeah, let's see here. I got to figure out which one I want to share, and I want to share. Let's see here. Let's see. I want to share that one. I think that's the one that's flashing. So you should see my presentation. Yes.
Yes.
Not perfect. Perfect. Now I'm not going to stay on video the whole time because you guys don't want to look at me, and I got to look the other way because I got 6 monitors here. So I'm looking square at you. How you doing, everybody? I really exist. It's really me. And I'm going to go back. I'll come back on video later. But in the meantime, I'm going to rock and roll right now. And I know everybody wants to go home. It's late. And I think I'm the cleanup guy again, right?
Save the best for last.
On the end of the day. So let's get started. Jeffrey, it's always a pleasure to be with you. Thanks, Metastock. Thanks for doing the event. And let me get rid of this. In the meantime, what's up, everybody? Welcome aboard. And it's always a great pleasure to be able to present. And for those of you who don't know me, I've been a professional trader for 44 years. This will be my 45th year coming in January. I was on the floor until about 2010. Now I'm basically a retail trader like everybody else. And we've come up with a lot of ideas, which things that I did my entire career on the floor. And one of them is our futures portfolio models, which is just carrying positions. And we've got different size models for you that'll fit your budget and what you want to do. So let us begin. And, one thing we know for sure, only you can change your life. Nobody can do it for you. Okay. I can share ideas with you, but you have to be A, willing to change your life, and B, be willing to follow the rules and directions that are given to you. Okay. If you don't want to do that, then you don't really end up in any different place. You can continue to chase the rainbows, but we know one thing for sure. Okay. That markets take a little bit of work. They take a little bit of study. And if you want to be good at it, you got to know what you're trying to do and know what you're trying to accomplish. So in the meantime, we always have to share the disclaimer because, past performance is never indicative of future. And I'll tell you, you'll see a slide here somewhere where we talk about drawdowns because they're a part of this business. And if you don't think they are, you don't belong in this business. That's the easiest way I can put it to you. Okay. I'm pretty much of a straight shooter. And if you don't think there's going to be drawdowns or somebody tells you they're not, well, that's garbage because there's always the potential for drawdowns, and markets don't go directional one way or the other, and you do end up in sometimes in a bad position until it changes, and that's what you have to be prepared for. In the meantime, you have to establish, see, this is one thing that most people don't do, is you've got to establish your goals. Okay, what are you trying to accomplish? Why are you investing in anything that you invest in? Okay, what is your end game? What is your end goal? Okay, and the simple answer always is, well, I want to make money. Well, of course, we all want to make money. Nobody's here just to hear me talk. You're here because you want to make money. Okay, and you want to find ideas and better ways to do so. But you need to define your goals and make sure that you are willing to do what it takes to get those goals. Just because you set goals doesn't mean you're going to meet them. Okay. And you have to be prepared to do that. Okay. And one of the biggest problems in trading, okay, is amateur traders, amateur investors want to be right. Professionals don't care. They just want to make money. Okay. Do you think I care if I'm right or wrong? Now, I have an opinion naturally. Okay. You might have seen me on TV. You might have seen me, heard me on the radio. Yes, I do a lot of media. I do a lot of stuff. But at the end of the day, I'm about making money. Okay. Yeah, I have an opinion because I have to. Okay. And it's human nature to have an opinion. And I think the markets are going to the toilet. However, if you look at them right now, why are they rallying? If you look at the overall composite picture, well, there's a lot of shaky things going on between now and the next 2 weeks, right? We have the election coming up. Well, if you're China and Saudi Arabia, you probably want to make sure this administration stays in place. So maybe you're going to try to make things happen. I'm not saying, I'm just saying. Okay. But again, it's about making money. That's all we can talk about. Okay. So today we're going to talk about drawdowns. Okay. Our models, algorithmic mechanical trading. Enemy number one, it's the math, the portfolios, and how you can take advantage. And of course, as always, I'll answer any question that you have about anything. Okay. You want to talk about sports? You want to talk about who's going to win the World Series? I'll do it all because to me, those are all probability models anyways. In the meantime, drawdowns happen. Okay. If you don't think that everybody has a drawdown, then you better rethink. Okay. There is no way that you can ever go through. Now, we went through an extended drawdown, okay, in 2021 or 2020. Again, it wasn't for any bigger reason, but again, market patterns, which you heard about from the last presenter, market patterns are very powerful, and they get in some patterns suck. All right, some patterns, the worst possible pattern for a market to ever be in to make any money in is what's called consolidation or congestion. Okay, but drawdowns are also an opportunity for you, the trader, investor, to benefit from those drawdowns if you understand everything I'm going to go through with you today. Okay, if you understand the probability, if you understand your win percentage, if you understand when is the appropriate time to press your portfolio, because there are times that are mathematically correct and there are times that are not. And one of the things that is never correct is adding more money so that you can press. You only want to press to your portfolio or add to it on money that you have earned, okay, that is in your account already. Somebody there? Somebody speaking?
Oh, sorry.
Anyways, I got very sensitive ears, though I can't hear. Anyways, so we talk about algorithmic trading, and this is something that I've done for basically almost 45 years. Okay, and it wasn't defined as algorithmic trading, but that's what we did. That's what floor traders did, because what floor traders are doing, we're trading what they call the order flow or paper. Okay. Well, order flow and paper dictate where the market is going next. Okay. And that is an algorithm in itself. Of course, I didn't have the benefit of charts. I didn't have the benefit of anything on the trading floor because you have to be faster and be able to react before anybody else can react. But we have built this model that does spit out trades, not every day. Okay. Now we always carry positions 365 days a year, long or short, different commodities. And we trade up to about 30 commodities, depending on the portfolio that you choose. Okay. But again, what we're really looking for is, again, we're waiting for a trend to develop somewhere. Okay. And that's why the consolidation pattern is brutal. But what we do have is proprietary, and what it really takes, it takes all of the knowledge that we have, and it's put it into an algorithm to read these patterns as they go on, and to read the volatility, and to read the movement. Because again, yes, we've had drawdowns. I would never, ever come here and say we didn't. Okay. I want you to understand that, there is risk. And again, you have to be able to stomach the risk that can come through. So mechanical trading, and this is something that I think is very important, because even as a floor trader, I took my shots here and there, okay, but for the most part, I was mechanical. Every action I did was mechanical. It's just like today. Everything I do when it comes to money is pretty much mechanical, okay? Whether I'm betting on horses, I'm trading the market, I'm betting on games, okay? I'm looking for an advantage. Okay. And the major reason traders lose money in the long run is because they miss trades, let losses run in trades they're in, and take profits far too early on the winners. And that's one of the things we've tried to avoid. We want to let, when the trend kicks in, okay, we want to be able to capitalize on that trend. The method does none of the three, therefore our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in any market. We do not let losses run. We always let profits run. That is because the algorithm was designed to do exactly those three things. Now, what does that mean? It means that obviously, if you get in a choppy consolidating market, now you won't get a lot of trades inside of there because we've accounted for the volatility that appears in those markets. Okay. You know, a lot of people that try to do these trend trading systems get whipsawed. We make it slower and the volatility will eventually catch up. So we don't want to be churning ourselves. We want to be ready and prepared. Okay. But you have to first identify who is the enemy. Okay. And the bottom line is look in the mirror. You are your own worst enemy. You are the person that makes the final decision. You are the person that decided to gamble, take a shot, not make a trade, whatever it is you did. Okay. And we all have the same bad habit. Okay. You have to take your knowledge that's inside of you and be willing to follow a program exactly. Okay. You cannot allow yourself to get off course. This is very important. And this is why I tell everybody when things go wrong, look in the mirror. Okay. Is it wrong because we're going through a bad period? Is it wrong because you're doing something wrong? Look, it's a human emotion, which is what drives the markets anyways, is very easy to spot. And you hear about this TV, you know, you hear the pundits talk about high frequency trading. Okay. You never hear about them talking about high frequency when the markets are going up, even though it's the same traders trading. Okay. You only hear about high frequency trading when the markets go down because it gives them an excuse to talk. You know who makes the high frequency trades, don't you? Okay. Look in the mirror. That's who makes the high frequency trades. You do. How do I know that? Because you're the one who is forcing some sort of a panic or some sort of action. And it's not just you, but there's 10,000 just like you doing the same thing. Okay. So keep that in mind. Now, there is no secrets. Okay. I mean, our indicator is proprietary, but there's no magic box out there. Okay. Trading is about money management. It's about using the tools that you have. Okay. And using the math of how to model yourself and not putting yourself in major jeopardy. Okay. These are what we're talking about. This is how you come. There is no, look, you've seen it. We've all seen millions of them. The secret, there ain't no secrets. Okay. The secret is understand how to manage your money, understand how to take care of yourself, and understand that you can make a lot of money, but that does sometimes come at cost, and sometimes there's drawdowns first. So you remember, there is no magic. Okay, nobody's going to give you the $1 billion secret, because if that's what you're here for, you're not going to make it. You're not going to turn 5,000 to 5 million tomorrow. I promise. Okay. Now I talk about get your head in the game. Okay, and it's funny because that picture there is a jersey. I was a coach for many years for kids, and my famous saying was "Get your head in the game." Well, you can see they gave me a jersey when I retired. Okay, but again, it's about understanding what you're trying to do. Okay, losers make excuses, winners make money. Okay, now which do you want to be? You want to continue to whine about the bad breaks you got, or do you want to move forward and try to make money? Okay, success doesn't happen overnight. Keeping your eye on the prize and don't look back. Okay? Know what you're trying to accomplish. This goes back to our goals that we talked about earlier. Okay, and this all ties into a big probability model. Okay, and whether you're trading, whether you're investing, whether you're gambling, but on game, whatever it is, you better make sure that you have the probability in your favor. Okay, you better make sure that you're not trying to let that little devil inside of you put you in a position that you don't belong in. Okay, you have to be able to read that price action of the market and say, oh yeah, that makes sense, right? I got to be able to look at this chart and say, what do I think from here? If I'm looking at this raw, okay, what is the S&P? Well, right now it's on the cusp of potentially breaking out to a new level. It has been in consolidation for months. Okay, it looks like it could be possibly breaking out. Now, what I'd be looking at here is the volume is light. Okay, so again, I'm not real impressed. But again, the pattern, the price and the pattern is the pattern. That I can't change. There'd be nothing to do at this moment, but I'd have to see how the action works. But this is, again, you're looking at the probability of the market. Okay. Fools make predictions, winners focus on risk and reward. And that's, again, what we're always watching, okay, because this probability model is how you make money. Okay, that is how all of the great traders, Richard Dennis, made money over the years. Okay, and all these big groups, they don't make money by gambling. They make money by playing the probability, knowing that it's a numbers game and they have to play out. Okay, now rules are very important. Okay, now we all have a tendency not to follow them, right? Especially when it comes into a potential emotional time in the market. Okay, but the first thing is you can't have an opinion. Okay, now again, I already disclosed to you that I have an opinion, but my opinion does not affect my trading whatsoever. Okay, I have an opinion for the public. Okay, if I'm going to be on TV or if I'm going to do something, but I have an opinion of what I think is going to happen, but I'm never going to trade that opinion. The market's going to tell me where it's going to trade. Okay, I'm not going to time trades the markets. Those who time markets are losers. Okay, you cannot time the market. It is impossible. Okay, can you get lucky? Yeah, we trade every morning. I do some live trading with some members, and we trade every morning. Okay, and here we're timing the market, but we're timing on a 4-minute cycle. Okay, instead of trying to predict the future months from now. Okay, we're using 4 minutes and we're using 1 minute to trade with. So remember, okay, that I can't time the market. I can tell you what I think is going to happen, but I'm not going to put my money behind me to what I think is going to happen. I want facts. Okay, I want to know what the price action is telling me. The markets are speaking to me if I listen to them. Okay, we make every trade. If we're using the algorithm, whatever's in your portfolio, you make every trade no matter what. Okay, again, you can't try to cherry pick them. I have this discussion often, especially when we're day trading in the morning together, and I go, I know you tried to outsmart it and you got trapped, and it happens all the time. Okay, we aren't gambling. We're subjective to whatever is told to us. Okay, we would rather keep our emotions out. You have no facts to verify if you're gambling. Again, you're just taking a shot, and sometimes you get lucky and sometimes you don't. But you got to be prepared for all of it. Okay. Now, what are our objectives? We want to make money. Okay, I said that earlier. We're here to make money. That's the reason we're here. Okay. We try to keep the variance small. Okay, we know that drawdowns are unpredictable and cannot be controlled to the amount, but we do know that we try to keep them small. We try to be balanced. Okay, which means we want to keep our drawdowns small. Now, again, it does not always work out that way. I mean, like I said, I'm never going to lead you astray. I'm always going to tell you straight. Okay. Now, I always say you could publish the rules in a newspaper and no one would follow them. The key is consistency and discipline. Now, that's from Richard Dennis. Now, Richard and I actually traded together for a number of years at the Chicago Board of Options Exchange. Okay. And this is actually prior to when he started the Turtles. Okay. But this was always the thing that goes wrong with people is they can't follow the rules. Okay. You know, I can give you tomorrow's newspaper today, but you'll still have an opinion. You say, well, I can't be right. Well, guess what? The market is always right. Okay. The market is always right, whether you're trading stocks, options, futures, it doesn't matter. Okay. Whatever the price is, that's where your money is. Okay. So you can think it's wrong. And when I hired traders, you know, as a floor trader, you know, I had many clerks work for me over the years, and their goal wasn't to be a clerk. Their goal was to be backed by a trader like me and become a professional trader. And for every time somebody came in and said the market is wrong, I said, well, I guess you're gonna have to find work elsewhere because you're not gonna work here. Okay. Because the market is never wrong. The game of trading and how to play it. Now, believe it or not, I break trading down into a game, okay? Because it is a game. It is no different than all the games I play. I play backgammon, mathematical game. I play poker, mathematical game. I play bridge, mathematical game. I'm not very good at bridge though. I play gin, which is how I made a living my first 6 months on the floor in 1980. Okay. And you have to understand that, again, what we're looking at here is a game. Okay. It's not how much you make today. It's how you're positioned to set yourself up to continue to make money over and over again. Okay. It is the game of trading, and the game of trading is very simple. Okay. If you're putting the probabilities in your favor and the win percentage in your favor, and you know how to play from there, you're going to win. Now, again, I play a lot of poker. Okay. When I live part-time in Chicago, I live part-time in Las Vegas. When I'm in Vegas, I play poker 5 or 6 times a week. Okay. And I'm a winning player. I actually lived there for a year. Back in I lived at the Mirage Hotel in 1993. Okay. But my point is that, again, you have to play the same way. There's no exception to what you do. Okay. It's got to be all about the math. Okay. But so we started this little bit of a program, we call it the Bubba's Family Office. Okay. Again, family office is typically those that are for the wealthy. They get the inside deals, they get all the good stuff that we never see, that somehow never funnels down to us. And this is really some pretty good programs. I mean, again, they go through drawdowns, but over years, they return very well. And, so I wanted to share, because I've been very fortunate. I have a high school program that I financed myself to high schools. Of course, unfortunately, in today's education system, it's hard to get them to take it for free because I pay for it. But in the meantime, my goal is to help educate as many as I can. Okay. Because at the end of the day, this is what I do. I teach, I educate, and I love that. I want people to make money. I want people to be comfortable. That's what I look for. So when you're trend trading, which is what we're doing, okay, price is the whole key. Okay. It doesn't matter up or down, price. Okay. News is worthless. Okay. If you're trying to trade the news, you will never make money. Okay. I don't care if you think you have inside information. If you go back and remember the company of Imclone, okay, Martha Stewart was on the plane of the CEO and owner of Imclone, and he told her to get out. Okay. And of course, she got out, got caught, went to jail for 2 or 3 years. The stock exploded to the upside, so the CEO didn't know crap either. Okay. Look, news is old, especially in today's market. Okay. Because remember, technology flows so much faster. A guy burps in Russia, they know about it in California in 3 seconds. Okay. You buy a future when the market breaks up. Okay. You sell when the trend changes. And nobody knows when the trend is going to change. I mean, we've had years. One year we were long the NASDAQ future for 49 out of the 52 weeks of the year. Okay. You never get out before the trend changes. Don't let outside noise affect you. You got to stick to the system. Why? Because we have an established win rate over thousands and thousands and thousands of trades, which is 66%. Okay. Why is that important? Well, you're going to see shortly. But just a quick overview of why that's important, because that will help me determine if I go into a bad streak, when it's time and correct to press. Because just like the baseball card, if you've ever seen a baseball player start off the season bad and they say, just look at the back of his baseball card, he's got history. Guess what? We got history. Look at the back of the baseball card. You'll get there. Okay. And that's why we talk about the win rate. And whether you come with me or not, know what your win rate is. Okay. Know what percentage you hit, because again, I can make any system a winner by back testing. Okay. But again, what don't we feel in a back test? We don't feel the pain of the losing. Okay. So remember that, know your win rate. Again, whether you become a member of me or not, I could care less. I want you to be a part of it. I want to teach you. But again, if it's not for you, that's okay too. But remember these little tools that are going to make you better for yourself. Okay. Self-discipline begins with the mastery of your thoughts. If you don't control what you think, you can't control what you do. Okay. Now, who in the world would think that the market should be exploding higher right now? Okay. I don't think many. Now, we're short at the moment. I don't know if we'll still be short tomorrow, but as of now, we're still basically short. We reversed the Dalal this morning. But again, at the end of the day, I can't understand why this market's going higher. I mean, I have my theory of some conspiracy of why it's going higher. But again, I don't argue with it. Okay, the system says long, I'm long. System says short, I'm short. Whatever I'm supposed to do, I'm doing. Why? Because I'm trading a model that has proven success over time. Okay, that's all I can do. That's the only way I can put myself in the best position. Going back to my floor trading days to today. Okay, this is what I've done for 44 years. I do what works. That's all. Yes, I go through periods that aren't as good, but again, at the end of the day, that's how it works. So we've got three different portfolios that we're offering here. Okay, and they go in size from 350 down to 10,000. Okay, now 350 is our masterpiece. Okay, 350 includes trades all 30. Basically, it trades all 30 liquid markets. Okay, commodities and futures. Okay, it has been around the longest. It has been. Everything else is derived off of the 350. Okay, so but again, its required margin for that is about 115,000. Okay, which covers you to 350. We want to be able to trade 3 times margin. Okay, and the account requires about 350,000 to start. Okay, the for 45K. Okay, as obviously it's 15,000 margin required. 45,000 you have an account. Very creative names. We call it the 45K, and the 10K, which is 3,500 for 10,000. Okay, and again, there's derivative products that are just there's different products that we can't put in all because again, the margin has to become an issue, and we never want you to be over leveraged to the market because again, those who are over leveraged, and I've gone through this before with many, it feels great when you're making money. Not so good when it's going against you. Okay. So these are the returns since the inception of these portfolios. The 350K is 165%. Okay. The 45 is 45.5 and the 10K is 46.6. Again, these are from the inception. The 350 has been going since 2015. Okay. Now again, it doesn't press. None of these numbers are using the math, which I'm going to show you shortly. Okay. Of how to use more. These are just basic flat trades. Okay. And the 350 used to be the 226, except that the margin requirements kept going up. So we had to raise the number for the portfolio. Okay. Now, this is the 350. This is all of the open positions as of Friday or today, this morning. Okay. And you can see the highlighted in yellow, which means we reversed the Dow this morning to long. Okay. It was short. Okay. But here's our entry dates. Here's our entry price, okay, last price, and of course these shaded ones are what we call mega trades. Okay, and these are the profits made on this, and then you have a cumulative total of how the trades have done in aggregate. Okay, now again, this has almost every future involved. Obviously, we don't have lumber because lumber is a liquid, so we can't trade lumber. We took platinum out because platinum's a liquid, but overall, it's got pretty much the board. Okay, and it carries a position every night. Every day. We're never out. We're either long or we're short. Okay. Now here's what I was talking about. This is the equity curve for this portfolio. Okay. Now, when I'm looking at this, I know that when it comes down about here, I'm looking to press. So if I have the capital that I've earned, not capital I'm adding, but capital I've earned, I'm going to go and press there. And if I didn't have it there, if I have it here, I would be looking to press. We're using the equity curve as an opportunity to press our portfolios. Okay, when we have the capital. Again, it depends on when you start and where you're at, but if you have profits, then you can press. I mean, I've got some people that are at 20 contracts per future. In other words, they're at $7 million. Okay, so you have the 45K, which has a number of markets, but again, not as many, and the 45K uses micros and minis, okay? Because again, it has to be within the margin requirement, okay? And of course, the 45K has been profitable since the beginning of the year, okay? And since we rehashed it, and again, you're looking at the same information: the trade date, the entry price, the last trade, and of course, the open profit and loss. And again, we're going to always give you full disclosure. You're going to get this once a week, okay? This full report, okay, that goes along with it. And of course, here's the equity curve here. And here is where we did press. Okay. Again, not everybody could press there, but if you had the ability, we did press here and here. Okay. because again, we're expecting that move up because the equity curve, just like a chart that you're looking at, it is no different than this chart. Okay. It gets to a certain point, it's going to do something out of the ordinary. Okay. That's what you expect because again, what is a chart? It's a determination of price and time. What is an equity curve? A determination of price and time. Okay. And of course, the 10K, which is down to some currencies, a little bit of grains, the Russell and Bitcoin. Okay. Again, basically everything fits into that 3 times margin so that you can be very comfortable in trading it. Same thing, right? Entry dates and so on. Okay. And again, this is up as well. And it recently just made new highs. So again, they all went through drawdowns. They've all recovered. Okay. And this is what you always have to remember is that you can't put yourself in a bad way to start with because then you can never recover. And that's why you have to watch your capital. And here you can see. Okay. Now we did not press here. This would have been the one opportunity that we would have looked at, but it didn't quite dip far enough to make this a press. Okay. And these are the things, again, these are the things that you're looking at. Okay. As a trader. Okay. Because again, the markets themselves go through patterns. Okay. All stocks, all futures, they all do the same thing. If you remember this, all charts are the same. All patterns repeat themselves. The key to remember is the time frame in which you're trading. Okay. The shortest time frame always has to determine and resolve itself backwards into the longer time frames. Okay. That's how it works. Right. You can't get an uptrend until you start getting an uptrend in the 1, 4, 5, 6, whatever frames you're watching. Okay. That is unimportant. Okay. The reason you watch shorter time frames, if you're active, is because it creates more opportunity. And so if you understand what you're trying to do, it creates more opportunity. But these are strictly overnight trades. We're carrying these positions all the time. Okay. And again, are you ready to change? Okay. And 12 bullshit lies, you tell yourself that you hold your restaurant hostage, right? I mean, look, you have to change your mindset if you want to be successful. Okay. You have to change and become, look what's up. What do you say there, Michael? You have to bring yourself into the real world. Okay. And the real world is that trading is not easy. It's going to take, some work. Okay. Now, again, we do most of the work for you because, again, not only can you get the trades, okay, but you can I can have them letter of direction traded for you as well. We have a great source that does, including all my trading, okay, for letter of direction. All right. But we only release trades once a night. Okay. In fact, what happens is I send them out about 1:30 in the morning, Chicago time. So 2:30 Eastern. Okay. And that's when the trade, if there is a trade, that's when they come out. There is never a change during the day. Okay. Never. We do not get involved in the volatility or short-term trading of the market. We wait until the trend confirms and overnight. So all trades come out. Now you can trade them. Capital Trading Group, who does all of our letter of direction trading, they do all of our trades at about 6:30 Central Time. Okay. But people who trade on their own can trade them as early as they want. I mean, they're going to be out just about every day, approximately at 1:30 a.m. Chicago time or 2:30 Eastern. Okay. Now, every Saturday, you will get a full report on all the portfolios. We'll tell you how we did, win or lose. Okay. Again, we don't hide. Okay. We don't worry about it. I will always tell you exactly how we did. Okay. Because again, it's in your account already. Okay. So you know how you did. But I have no advantage of telling you a falsehood. Okay. And then every day, every morning, you will get an update. And it'll either say new trades, which in this case is none, or if there is a new trade. Okay. And what you want to remember is that we simply are following the straight trend without fail. We are not trying to outguess, outsmart, or outthink the markets. And of course, I do have the Capital Trading Group, who does all of our letter of direction trading. Okay. And why do they do it? Because they have the best customer service in the futures industry. And I recommend, if you become a member, If you're using an equity broker, I would recommend you get a futures broker, because remember, equity brokers offer futures to accommodate, but they're not very good at it. Okay, that's my opinion. Right, and you'll see that they don't give you the same benefit either. There's a lot of great benefits of having a futures broker using for you. Now, we also have an arrangement with Trader Brokerage. If you're an equity trader, I'm not offering equities, but I do have a great deal with them. So if you have some interest, just let me know. Okay, because they're sponsoring our Las Vegas event. But many of our customers and members come right in, and I mean, here, you just follow the rules, and it's like winning the lottery. I can't thank you enough for what you do. I'm retired and make more money now than I ever did as an engineering manager, and I made a lot of money. God bless you, Bubba, because you sure blessed me. He sure has blessed me. Well, again, look, obviously, every day ain't Christmas, and every day ain't like that. Okay, but these are what we look to do. This is what our striving for, and to try to put ourselves always in the best position. And from another engineer, and engineers are always interesting, right? Because if you're an engineer, you know it's always lower left, upper right, and you got to know the exact rules. Okay. I want to thank you for sharing what I consider to be the closest thing to the holy grail in investing. I've spent countless thousands on investment subscriptions that have helped me some become financial literate, but when it comes to making money on investments, luck kept entering into the equation. Profits came and went. I kept running the brick wall until I found you. Okay. As an engineer, I'm always looking for the method of investing that has a mathematical, statistical certainty. Your strategy does. I cannot thank you enough. I look forward to following the market with you for many years. And again, this is what we're trying to do. We're trying to take out any of that emotion, anything that gets under your skin when you're trading or playing in the markets. Okay. And of course, if you want to become a member, okay, and I'm going to finish early because it's a long day for everybody. Okay. But if you want to become a member, we give you daily texts and daily emails. Okay. Send you a weekly portfolio update on all portfolios. We do training sessions. They're live and recorded. So if you can't be there, okay, you have letter of direction trading available. And for those who become members today, if you're an option trader, I have a free 6-session option course that I did myself. Okay. Plus, I've written 2 books on options. I was going to write one on futures, but I said, I'm too old and I'm too tired to keep writing. Okay. But I do. This can all be yours as well if you decide to become a member today. Okay. Now, for the first 25 people, I'm offering you what we looked at today for $99 a month. Okay, or $1,000 annually. It's bubbatrading.com/futures. That's bubbatrading.com/futures. Okay, you can pick your choice whether you want monthly or you want annual when you get there. And if you have any questions, please feel free to fire in. Okay, as I have obviously plenty of time left over, because I'm not sure if there's any questions or not, but I will show you, some of the things you're watching for. So as we're looking here, okay, I would be looking for this market to fail potentially from here. If it does break out to the upside, okay, what I'd be looking for if I want to become a buyer, and this is just raw trading, this is not the algorithm, I would be looking for a pullback right to here, because this should become, if this is truly going to break out, this should become support. Okay, this resistance level here. Okay, which is common about all this. And one of the things about learning how to use a shorter time frame in your trading is that you can pick up on movement faster, because it has to start in the shorter time frames. Okay, that's the interesting thing about markets that most don't understand. You have to start in the earlier time frames, because the trend can't change until it starts going up in a 4-minute, 5-minute, and again, if you want to look at it in real time. So if you're looking at a daily, if I change this to a minute, well, what's your pattern here? Okay, you're going sideways. You're basically consolidating on a 1-minute chart. If I take it to a 5-minute chart, I got a little bit of lean to the upside and consolidation up here. If I take it to an hourly, okay, I broke out to the upside, and I take it to a 4-hourly. So again, this is the sequence. Oh, we're consolidating. So again, we're more similar, and these are the sequences that you learn to recognize, because all markets are the same, all the charts are the same. They're always going to trade in the same type of direction, not the direction you think, but the direction that is determined by the price action, because they'll change. Like if you look at the Dow future, for example, that has broken out to the upside. See, here was the breakout. Okay, and here's where we got long. It came back to support, we got long. Okay, and again, that's You're looking for these little bits of information that help your regular trading. As far as the algorithms, we do it all for you. So there's nothing for you to have to worry about. We take care of all that. Okay. And again, we only trade once a day. So if you want to become a member, like I said, it's $99 a month or $1,000 a year. Okay. It's BubbaTrading.com/futures. Check it out. I've got a couple of members in now, and we've got probably, I don't know, a few spaces left over. But if you have any questions, feel free to fire them in. Jeffrey, is there any questions from YouTube or anything?
Nope, not right now.
Not right now. What am I going to do? Oh, my goodness gracious. I'll come and look at you guys for a little while.
No, but you did a great job.
Where's my screen? Where's my picture?
Are you trying to turn on your camera?
I thought I did. There we go. Wait a second. Now you can see. There you are. Hello, everybody. Again, the bottom line is whether you become a member or not, remember one thing. Defense wins championships. Take care of yourself. Take care of your money. That's what it comes down to. Okay, because life comes down to two things. One is always money. And, you know, we have a very interesting time the next 2 weeks coming up to this election. So, again, we can see a lot of crazy action. But one thing to keep an eye on is how bad the volume's been. Jeffrey, always a pleasure, my brother. I appreciate your time. And I'm sorry I'm early, but I figure it's the end of the day, you guys don't care.
You're all good. We enjoyed it, and it was good. So what else can we ask for?
Hey, it's great. It's always great to be here, and I appreciate your time. And you know, you guys do a phenomenal job with all the stuff. And Metastock is a great program, so check them out. And all of you, thanks for participating in the event. And I know that it's been a long day, but listen, just remember, I was at the gym at 1:30 this morning.
Hey, you beat me.
There you go. Thanks, everybody. Jeffrey, thank you so much. Have a great week. I appreciate it, man.
The link is in the chat. So if you have any questions, you want to go sign up, $99 a month. Sounds like a bargain to me. Thanks, Bubba.
Thanks, Jeffrey. Appreciate it, man.
All right. Go ahead and do this. Well, we'll close up here. Okay, let me do this too. I'm going to just make sure I'm sharing my screen. Make presenter, show my screen. Okay. Very quickly, we're going to say thank you to Stocks and Commodities one last time. I appreciate them, man. They're so awesome. I called and we said we're going to do these crazy events, and we started that 10 years ago, and we've been still doing them, and it's just great. If you haven't yet, make sure you, and you're watching on YouTube, go to metastock.com/Trader Summit and sign up for both the free issue of Stocks and Commodities and the CMT work guide. Both of those guys are awesome in terms of supporting the event, in terms of helping us get the word out, and we really, really appreciate it. We will stop on this. Summit Action Pack today. You can sign up for Steve Bigelow's Candle Profit Systems 2.0. The training that we recorded back on December 3rd, or I'm sorry, the training that we're going to do in December 3rd, 2022, plus the recording of that, plus all the recording of the sessions that we did, the paid sessions we did back in 2020. Also sign up for the Trade Trend annual package. It includes a lot of trading from him, as well as daily stock picks and all that kind of good stuff that was covered in his presentation. You also get 3S code and all of the stuff that he's including with that. 3 months of Magic Traders, 2 years of Stocks and Commodities, and Unleash the Power of Metastock. All of that would normally be $5,289. Some of the best stuff that we have, I'd say. You can get it here today at $2,193. You can do that by going to metastock.com/summit. Also give us a call at 800-882-3040, and you can visit us online at metastock.com/saleschat. We're having a really good conversation here in the YouTube channel. Make sure you like and subscribe if you're watching on YouTube. But I want to say thank you to Robin, and I want to say thank you for Alfonso for all the kind words about Metastock. It makes me feel good. If you haven't tried out Metastock, you definitely should, and you can give us a call at 800-882-3040. I want to say thank you to all of the experts that we've had talk today. I think it was a great session. I hope you agree with me. Hope you enjoyed it. Hope you learned something, at least one thing, just one thing. Thank you for coming. Thanks for watching the video, whether you're watching it now or sometime in the future. Thanks for watching it. Let us know if you have any questions, and look forward to seeing you again at the next one. The next conference we're doing is going to be in 2 weeks. It's going to last a whole week. We're going to have 40 guests, and I hope you can make it. So we'll see you there. 800-882-3040 if there's anything we can do for you. Thank you for coming. See you next time. Stay healthy. Stay well.
Hi, Kelly Clement here from Metastock. I hope you enjoyed today's video, and I hope you found it instructive and informative. If you did, what I'd like to invite you to do is go ahead and like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. So go ahead and like and subscribe, and keep on watching.